Hey, good morning. Welcome everybody to day 3 of the Traders Conference. We are so excited to have you here this morning. My name is Clement. Happy to be back in the control room, back here running things on this side of the conference. I'm excited for today. We've got a lot of great speakers. We'll cover all that in just a moment. But I wanted to come on, welcome you to day 3. As you come in, make sure to say hello. Tell us where you're coming in from. Again, my name is Clement. I'm coming here from beautiful Salt Lake City, Utah. We're looking out the window, seeing some snow on the mountains, getting excited for that. If you're not familiar with Metastock, who we are, what we do, we are purveyors of technical analysis and charting software. We are the hosts of this Traders Conference, so we're excited to be doing that. To introduce you to Metastock, I'd like to just show you a quick video, and I'll show you that, and then I'll be right back with you, and we'll talk about today's conference.
Hi there, Greg Lewis, Metastock Software. As the marketing director, I get asked all the time, what is Metastock? How can I help my trades? Well, stick around for about 3 minutes and I'll tell you. Metastock is an award-winning software and data package that has been helping traders for over 35 years. Simply put, Metastock is a tool for traders like you to analyze the markets. Metastock helps you take the guesswork out of trading by offering a methodical, systematic approach to some key questions all traders come up against. Questions like, how do I decide which securities to trade when there are literally thousands to choose from? Which strategy should I use, and how do I test that strategy before spending my first trading dollar? When should I enter and exit a trade? How can I effectively manage the securities I'm interested in? And of course, how do I know where prices will go next? At the core of Metastock are the power tools. The power tools give professional-grade analysis tools to private traders like you and me. You can scan the market with the Metastock Explorer to filter and sort securities that show buy and sell signals based on your criteria. The Metastock System Tester lets you test most strategies through a process called backtesting, which allows you to see how your strategy would have performed over time. You can easily manage and monitor the securities you are interested in with Quote Center. Quote Center lets you sort on a variety of criteria to view the data that's important to you. Then just double-click on a security if you want to see its chart. With the Metastock Forecaster, you can even take advantage of patented technology to view probable future prices. If you're an options trader, you're going to love Metastock's OptionScope. OptionScope puts all the critical info at your fingertips, displaying sortable, customizable, color-coded options data, including the Greeks. And Metastock has solutions for traders of all levels and interests. If you're just getting into trading, you will appreciate the education offered by our many built-in systems. In addition to pointing out buy and sell signals, Metastock explains how they work in an easy-to-follow commentary window. Metastock has built-in systems based on popular strategies like MACD, Bollinger Bands, turtle trading, candlesticks, and many more. Metastock even has the very popular and exclusive Rahul Mohindar Oscillator System, or simply known as the RMO. And as you become a more experienced trader, Metastock grows with you. Advanced analysts will enjoy the comprehensive list of trading systems and indicators and the ability to build their own systems. And if you're a day trader, you can't do better than Zenith, the real-time news, data, and analysis package offered by Refinitiv, a world leader in market data. Add on the world-class support, and it's not hard to see why Metastock has won the Stocks and Commodities Reader's Choice Award for 26 consecutive years. To find out more about Metastock and how it can help your trading, visit metastock.com or contact a product professional via phone, email, or chat.
Okay, there's a quick introduction to Metastock, who we are, what we do. You'll actually learn a little bit more about Metastock later today from one of our guest speakers, Scott Brown. Speaking of guest speakers, let's show you today's schedule and what to expect in today's Traders Conference. So what I'm going to do here is just go to the web. Here, if I can get that to work. All right, so what you're seeing on the screen is metastock.com. If you go to metastock.com, you'll see this banner right there on the homepage. It says it's our largest online event ever. Check it out. If you just click on that link right there on that homepage, it will take you to the Traders Conference so you can actually see today's presenters. What we're going to do is click on Wednesday. And today you can see that we are kicking off the day with Bryce Headley. We're excited to have Bryce. Bryce is always a great dynamic speaker, has lots of great information. So we're excited to have him in. We'll have Ed Downs coming in of talking about chart patterns in the market. And as we all know, chart patterns are very critical to the market and what's going on. So stay tuned for that. Martha Stokes, always a fan favorite, a great detail on the market. An amazing technician in what she provides and what she teaches. We have Geoff. Then we have our own Scott Brown talking about high value analytical tools. Adrian Manns, Marina Villatoro, Alla Plocher, and then finally Dan Sugar rounding out the day. Now, since you're here watching on YouTube, one thing you will want to do is go to the bottom here. Then you'll want to register. If you register, then you are registered for the free prize giveaways that we will be doing throughout the day. So make sure that you do register. Just go to metastock.com and click on that homepage banner, and then you will be eligible to win those prizes. So again, looks like we're getting lots of people starting to come in. So make sure to say hello as you come in. Tell us where you're coming in from. We'd love to hear from you. And definitely, one of the biggest things I'm going to tell you in my little introduction here before we get to the good stuff is actually make sure that you're asking questions, that you're engaging with the presenters. You're here to learn. You want to take advantage of these presenters. Ask them questions, and that will get you the education that you want as part of this as well. So make sure you're engaging with the presenters today. We'd love to have questions. We will get those questions over to the presenter as they come in. Good morning. Great to have you here this morning, Anton. It's good to see you. And again, everybody else say hello as you come in as well. We'll be right back. Looks like we are all good. We've done our audio checks. We've done our technical testing. Looks like we are set and ready to go for today. So what I'd like to say is have a great day of learning. Again, make sure to ask questions throughout the day and engage with your presenters. Ask your questions and have a great day. Thanks, everyone.
All right. Also, I can barely hear you, but that's okay. We don't need to hear you. Hello, everybody. Richie, thank you for that kind thought. Yeah, I appreciate that. Let me go ahead. Juan wants to know what the YouTube link is. It's right here. I'll send it to you. Bonjour. Also, I'm sure my French is awesome. I took it in high school. Anyway, Good morning, Anton. Good morning, Juan. Good morning, Richie. As you guys come in, say hi. If you're joining us on YouTube, welcome. Make sure to like and subscribe. It helps a great deal. We appreciate it. So let's go ahead and kind of read the legal disclaimer, because that's how we have to get started today. Today's demonstration is designed to instruct you on using Metastock and the accompanying software plugins. It's not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. Metastock shall have no liability for any investment decisions based on the use of the software, any trading strategies, or any information provided in connection with the company. So it's good to see everybody. We got a good day. We got a good lineup again today. So thanks for coming back. It's good to see you. I want to say thank you to Stocks and Commodities Magazine. Great magazine. They've been sponsoring the events that we've been doing since we started them like 12, 13 years ago. So 17,000 articles, 1.3 million subscribers, making magazines since 1982. So I also want to thank CMT Association. You can find out more about the CMT Association at cmtassociation.org. You can also give them a call at 646-652-3300. They're an accrediting organization. And Tyler's going to come in tomorrow. He's going to talk a little bit about how having a CMT designation might be helpful for you, especially if you're managing money or looking to manage money or want to get more assets under management. So if any of those apply to you, or you just want three cool letters at the end of your name, the CMT might be something to look at. So, and then last but not least, AAII is a good sponsor of ours. AAII is the American Association of Individual Investors, another nonprofit that have been helping traders with investment sentiment surveys, market reports, training, education, really some pretty cool stuff. And you can find out about them at AAII.com. So with all of that being said, of course, we're Metastock. We're going to talk a lot about Metastock today. Metastock's been rated #1 30 years straight. Best software in best software in its price category for over 30 years. We are doing an extended trial where if you pay for a month, we'll give you the second and the third month for free. So if you have any questions today, we're going to be talking about Metastock all day long. We're going to be showing you scans all day long. We're going to be showing you system tests, all kinds of stuff all week long. In fact, it's a great tool. It's been rated #1 for 30 years in a row, and you should try it. Metastock.com/conf promo, 800-882-3040, and metastock.com/sales chat. It's good to see you, Mike. Thanks for coming. Thanks for saying hi. Paul, I'm not sure what you mean what is the focus strategy, but let's start talking about some strategies. Our first presenter today, our first guest, is Price Headley. Price Headley is a long-term partner and friend of Metastock. We've been working with him for decades. Initially, when I started working with Price, he was a top market timer from Timer Digest. He's a Traders Hall of Fame. I love the methodologies. He wrote a book called Big Trends in Stocks and Options. And I hope I got that right, because it's not very complicated. But he does such a good job. I like the attitude that he brings in there, all of that kind of stuff. So Price, let's go ahead and bring you in here. Let's get you started.
Thank you, Geoff. Great to be with you all.
Good morning. It's good. Thanks for coming in.
Oh, it's a pleasure. Great to kick off day 3 of what's an awesome power-packed week plus of strategies. So let me share my screen. Tell me that you can see it okay here in a moment.
And you know, Price, we like to kick off well. So that's why we had you kick us off.
Got to start strong.
Yeah, absolutely. All right. So I can see your screen. I'll go ahead and kind of get out of the way then. It's your turn.
Geoff. Well, thank you. And good morning, everybody. Thrilled to have you back with us for more great strategies and things that can help you as you look to grow your portfolio and help you reach your goals, while also managing risk. There's always got to be a risk management component in everything that you're doing in trading and investing. And I'm going to talk today about one of our more aggressive growth strategies, but that's probably been our best long-term strategy, I would have to say. I mean, in multiple years of recent market trading, ups, downs, and sideways markets, this $1 option strategy, meaning that option price at $1, meaning that controlling 100 shares would cost you less than $100, $100 or less to control 100 shares of stock, and a lot of big name stocks that might cost you 20 or 30 grand in that same 100 shares. So your leverage potential here, controlling 20, 30 grand worth of stock potentially for $100 or less, is obviously huge. And our objective is, there's always risk in any strategy, right? You can lose what you put into a given option, but our goal is going to be to manage that. We're going to talk about how we manage that risk, but more importantly, how we take profits gradually. That's the thing I say with a lot of traders these days, is that they have a lot of what I would call scar tissue. You may relate to this. If you've been through the trading ups and downs and battles and wars, the idea is that, you start to think, oh, well, I saw that profit slip away and turn into a break even, or some of you if you let it turn into a loss, you start kicking yourself. You say, okay, I've got to make sure that I'm not letting that profit go. So they take small 20 or 30% gains and feel good about, hey, you can't go broke taking a profit. But the idea is that actually, if you're taking small gains and bigger losses, that's a problem, right? We want to flip it around and make sure we're controlling our losses, but have the chance to hit doubles, triples, even quadruples. And we'll share with you how we do this. In fact, we just this morning, I don't have a chart on it here, but we just cashed in our first half of a position in IBM calls on Big Blue and this morning. So in this strategy, so we call it Grand Slam options. I'm going to walk you through it. As I get it started, let me just remind you too that the information I'm sharing with you in today's presentation is based on our proprietary research. It's intended for illustrative purposes only. What we talk about here should not be considered specific advisory recommendations. As you know, stock and options have large potential rewards, but also large potential risk. The past performance of any trading system or methodology is not necessarily indicative of future results. Do see our terms of use on our bigtrends.com homepage for more information here. So the idea is that with that understood, we're trading a leveraged instrument with options, right? Let me ask you too, before I tell you about me, let me ask about you. How long have you been trading options if you've traded them? If you've never traded an option, type a 0 in your chat box, or if you trade them for 20 years, type a 20. I'm not going to name names. I'm just going to name numbers of what kind of experience level we have in today's group with options. We get a lot of interest in options. It's been one of the fastest growing categories in the broader investment markets for a long time because of all the ways you can use options, right? It's not just for speculation. It's for income generation. It's for portfolio protection. It's for stock substitution. There's so many different things. So it looks like some of you are newer to options. Don't worry. I'm going to keep it really simple. Geoff alluded to that. My strategies, my philosophy has always been the KISS principle. Keep it simple. There's a 2-year trader, a 4-year trader, and a number of you that haven't traded them. That's fine. 5 years on and off. So my objective for you, I've been trading for 33 plus years. I founded bigtrends.com actually November 15th of 99. We're coming up on our full 24-year anniversary next week. So blessed to serve so many folks around the world, and great to acknowledge when you're new to a strategy, hey, just kind of soak in how this could work for you. The beauty of what's happened also, by the way, with options commissions and options evolution for option traders. When I got started trading fresh out of graduating from Duke University, I can remember when I had ticket charges of $30 and $40, meaning that even if you traded a one lot contract, you're paying a $30 or $40 commission. That's tough. You've got to really expect some big gains to do that. And now, of course, it's $1 or less per contract with no ticket charges anymore. So even if you're just trading one contract at a time, it costs you $1 in, $1 out at most. And if you get semi-active, you can get your commissions down to potentially half that in options. It's never been a better time in my 33 plus years of options trading to trade options than now. Now is really been a great time to keep the vast majority of what you make. So now you can start to implement strategies like what I'm teaching about today, starting small, starting with a minimum number of contracts to prove it to yourself. Don't take my word for it. Let the markets and let the strategy prove it to you on a small scale, and then you can scale it up as you gain confidence in it. So look at it not as a get-rich-quick scheme, but actually as a long-term plan to building wealth and still proving to yourself that you can handle the ups and the downs of any given strategy on a small scale first. So I was blessed to be inducted into the Traders Library, Traders Hall of Fame back in 2007 with a whole lot of other trading legends. And I consider a lot of what I trade and teach things that I've learned from some of the masters that came well before me. So the idea is that you can borrow from a lot of what people are going to teach you here, including me today, and hopefully help accelerate your own growth as a trader and investor. But even if we're giving you some shortcuts, remember, you still have to follow the strategy properly, right? So the idea here is that, okay, we're going to walk you through how we do it. And so my goal this morning to kick off this day 3 of the summit is to say, look, this has been my most powerful option strategy because it has the potential to dramatically leverage your returns when you're right. And we've got some nice ways that we hop out quickly if we're not getting that fairly fast validation. It's not just a price stop. It's actually, we like time stops a lot with this strategy. We're going to get into that as well. So you let time start to be a factor, not just how much movement or lack thereof you're getting in your trade. I'm going to share with you not my top indicator, but actually my top 2 indicators using low priced options here. So this is really appropriate for no matter what size trading account. If you're a small lot trader or a bigger account, you can do this strategy because we're doing them on big name individual stocks here in the US. So we're looking at the big names that move a lot and can get in and out easily. So we're going to show you a bunch of past trades and success stories. Also talk about when it doesn't work, how you manage that, and how you can find new trades, not just for the rest of 2023, but of course, looking into 2024 and get you started on the right track here. But first, start you on the right track from a knowledge perspective. So let's talk about kind of a chart's worth 1,000 words. Let's get into some case studies. Talk about a trade we did not long ago in Marathon Petroleum, MPC. When you think energy, a lot of people might think Exxon, Chevron, it's some of the bigger oil names, maybe Schlumberger, but actually MPC was the best mover. When the market was tanking back in September, there's a bull market somewhere, right? Even if the market's sloppy, there's going to be bull markets moves in individual stocks, and there's going to be bear moves in individual stocks, even in bullish environments, right? So you just have to know where to look. So I'm going to actually share with you what these indicators are. We didn't label them here, but I'm going to give you an extra bonus here so you can actually plot them on your Metastock platform and see what you might have been missing. But a big part of what I'm teaching you this morning is completely different. In fact, maybe contrary to what a lot of textbooks might tell you when you see an indicator like this red line here is the Williams percent R. Larry Williams developed a percent range indicator. We call it percent R. Okay. I jokingly call it percent T for percent trend when it gets into this top threshold and stays in that top threshold of readings, because it changes from an oscillator to more of a trend following indicator. The blue line is the other one we're going to share with you. It's the commodity channel index. The blue line also breaking out the same point here. This is an hourly chart, by the way, 60-minute chart, and both of them breaking out together in the same hourly close. So our first signal on a given trading day will not typically come at 9:30 a.m. right when Wall Street opens Eastern time. It will typically come at 10:30. Okay, so here in about 16 minutes, we may get our first signal for the day. I've got a team that's watching this even while I'm sharing it with you. So blessed to have a lot of dedicated fellow analysts that are helping me to follow my systems and signals and call them out in real time from our subscribers via real-time email and also via smartphone access as well. So via WhatsApp. So this one at the close of this particular point here, this stock was trading, this was MPC, was trading at about 146. So if you bought 100 shares at 146, that cost you $14,600. We said get in up to $1, and our average entry price is actually 95 cents. We look at the fill prices in the minutes after we call out a real-time email alert and say, okay, it traded between 90 cents and $1. We call our average entry in real time in those subsequent minutes about 95 cents. That means $95 to control 100 shares of stock that would cost you over $14,500, right? So you can see your leverage already kicking up in the theoretical 150 to 1 range. But of course, with time passing, that leverage will be affected a little bit, because notice what we're buying. These options are out of the money. Okay, so if you're buying an option, especially on a stock price over $100 a share, you're going to have to typically go a bit out of the money. But how we offset that, because that makes people nervous to say, doesn't it have to get to 160 for me to make money? No. If you hold it to expiration, yes, but no if it happens much sooner. So in this case, the start of September, we're buying the October 20th expiration, third Friday of October monthly options that have 6 weeks to go before they expire. So usually we'll buy them out about a month, about 4 weeks to go before they expire. We won't hold any position under 2 weeks before expiration with this strategy, Grand Slam options. So we're looking for home runs. And our first goal here is, as I mentioned, we sold half of our IBM call this morning at a double. That's our latest kind of first profit book. But here's where we booked the first profit there. We'll call it on you can see the first bar here. We'll call it position 1 here. And that one took, you can see, several trading days for it to play out. So what happens is that once we get this breakout signal, this is the philosophy difference from a lot of textbooks that say, oh, it's going into some overbought area. You should be not thinking it's going to keep going. But in fact, my best successes in more than 3 decades of trading have come from overbought stocks getting more overbought, or oversold stocks getting more oversold on a down move. So let's face it, you and I as individuals do not control the markets. It's the institutions that drive the markets, right? No one of them controls the market. But the idea is that, look, we're all about saying you've got to get yourself in tune with where the whales in the ocean, the sharks in the ocean, where they're going for the next feeding frenzy, right? Where they want to keep moving their money. The institutions are not going to be able to move all their money in at once. They don't want to flood the market, be the 800-pound gorilla that jumps into the pool, splashes the water out. It's like, okay, they want to tiptoe in, they want to ease their way in. I believe that's why these trends last. That's why they keep on persisting. So we've got our first signal, and sure, you're going to get some noise against any given signal of a system that you get, but the key is the noise contained. So for me, what I want to see is when we get pullbacks, like the CCI pulls back after its first breakout, actually later that day, it pulls back into what we call a retest here. So the first little retest point's happening right into that late afternoon short-term low. See, it was basically just a choppy sideways market after we got in. A lot of traders would not have patience to stay with this trade because it's not paying off in day one in this case. Sometimes it'll pay off pretty quickly, but other times it may take several days for it to really get going. So you see the next morning it does start to pop up again here, but then here we go, we're retracing back down, and you can see we're retracing back into a couple different retest levels here, where you see that we're holding into kind of a support level there. And so we're holding up, but it's not really that exciting yet, okay? So that happens sometimes. But all that I look at, and sometimes you'd be better served to not look at individual price action bars, but rather look at the indicators, and we have in red and blue below, just to kind of see, is the structure of this particular trade still looking good? And for us, it is. Now, we also give it some time that if it's not moving yet, but it's still not moving against us on the underlying stock, we say, look, we give it a period of time where we say, okay, we're still willing to hold on to that trade and not just get flushed out by some random price action. Notice the launch point happens here as we start off. This is just post Labor Day here this fall, and you can see that we're getting the breakout happening to 0.1, taking the double. So now look what the stock has done here. It's rallied up near 150. We started at 146. So the stock's up about 4 points, which in percentage terms, you're talking about what? About a 2.5% move is good for a 100% move in your October 160 calls. And the stock is 10 points out of the money still at 150. So remember, if you're new to options, if you buy a 160 call, you have a right to own the stock at 160. You say, why would I buy a 160 call when it's down even at 150, much less where we started at 146? Why not buy a 140 call where it has some intrinsic value at 146? Well, because you're going to pay up a ton for those options. So what we're playing the game on is that our out of the money options are going to get more and more valuable as we get relatively quick moves from well out of the money to closer to the strike price. It doesn't even have to get to the strike price. So you can see here, this, I remember it well, this was on Friday, September 8th here. It gapped up here. We're getting our next target, which is, okay, you sold half of your position at a double. Why do we do that? Because you get all your risk capital back, right? You have the proverbial free trade. If you invest $1,000 in, it's now doubled. It's worth $2,000. You take half of that out, you get your original $1,000 back, and now you've got the rest of it riding as a free trade. We target a 200% triple on the next piece that we're holding. So we sell half our remaining position at that point. And then our final piece that we're targeting is a 300% gain when we can get it. We're not going to always get it, obviously. We'll talk about a number of examples where we get part of it, but not all of it, how we manage the trade. You always got to have a trade management plan for any big move up, no move, or moving against you. We're going to talk about all those scenarios here. All this took 4 trading days. It seemed like longer to me, given that those first couple of days were a little bit slow. And let's face it, the reason I share that with you is because there's going to be plenty of those trades where it's kind of making its way on up, but it's doing it at first in a slower fashion than we would like. Let's face it, when we buy a call, we want it to blast to the moon right away, right? That's our desire. But let's face the reality of trading is that there's back and fills, there's different markets. You know, the market was dropping September. This was actually holding up pretty well. And then the institutions sort of flooded in there on days 3 and 4 and pushed us to our ultimate target profits. So if you bought 10 contracts, if you're putting $1,000 in, you could get up to 10 contracts for $95 a piece. That would cost you $950. The total gross profit on this trade before commissions, taking off the pieces, half at a double, the next piece at a triple, the last piece at a 4-bagger, 300% gain, was $1,615 made on 10 contracts over 4 trading days. You were out of this trade on the final target, hit up here into that 156 area that next Friday morning. So it was one of those things where it really made it ideal to kind of just stick with the structure, stick with the pattern, which is that overbought, staying overbought, says the institutions are pouring on the gas. They're putting the pedal to the metal. You need to make sure you're participating in that. And certainly one of the other things, if you happen to be one of those traders that likes to fade overbought markets and think that they're going to come back down, is that I always remind people that if anything, it's only when it comes out of overbought and starts to officially break down below those retracement points where you can then see a stock start to come back down a bit more after the overbought market is no longer overbought, right? So that's why we look at these retracement points. We're going to look at several examples of that just to show you how we do it. Now, not all the trades are going to hit all those targets, right? Here's an eBay trade that we closed the first half out at the double target, or just a hair above 102%. And then we got out of the rest at 97.6%. So it averaged a double on the whole position. And here's one where we got our signal where both our percent R and our CCI were both confirming on that same upside crossover point here. This is back in early July. So you can see here that we're getting our breakout here. We're getting into the August 47.5 calls is our recommendation. You can see where the stock's trading. It's trading closer to $45, right? And you can see that at first it's working. It goes up to about 45.5. Then it pops down later that day and it's kind of chopping around. And then it goes through this, right after the July 4th holiday, it goes through this little dip down before it comes back up. The only way that we were able to stay with that dip down and then come back up is that we have what we call a time stop, which says, okay, you know what, if we're in this trade for several full trading days and it's not working, then we would need to hop out. But actually it was interesting because it was just near the time stop right here as it kicked off and got back above our initial entry point around $45. We didn't hit our double target until it launched up there. Then that morning of the 11th of July, as it shot up. Now notice it's still below the 47.5 strike price call. It's about 46 3/4. And you say, well, what did you pay for the option? We paid $84 on average, 84 cents times 100 shares for each option contract, $84 to control 100 shares of stock that would have cost you about $4,500. So leverage here is not quite as dramatic, but it's still tremendous, even at 50 to 1 plus. And the key is that here the stock has moved from 45 to just under 47. So it's had about a 4% move, and the options are hitting 102%, right? So our leverage here is more like 25 to 1 because it took about a week for that to happen. And then there was a CPI report coming out the next day. We want to avoid big event risk. So we said, look, let's just take it out here into the close. It's about where we got the double next half out at 97.6%. So the whole trade on how many contracts did you buy at $1,000? You could buy 11 contracts, $84 a piece, invest $926. We made $926. So we were right at that double on the whole position for a week's work. You see the next morning it gapped up and then came right back down off that CPI news. So one of those things where, we're looking at structure, we're looking at time, we're looking at price action, of course, but the price action within the structure of the indicator setting up properly. But here's one that hit all three of the targets. We call it a full grand slam. This is AMD Advanced Micro Devices. And this is a great one to remind you that you can buy well out of the money and still get your target profits even well before it gets to your strike price. So AMD got that first catalyst, right? You want to see, a lot of times people will say, oh, you missed part of the move. Well, guess what? I want to see the takeoff point here. This is the first hour that was March 14th. And you can see that here's the stock trading in the neighborhood of about 87 bucks. And you say, okay, that first hour, both my indicators are breaking out. By the way, when you become a subscriber, I give you a rule sheet with all of the settings and parameters on which %R interval to use, which CCI interval to use, and the other rules that go into the system on the time stops, et cetera. So you can follow right along at home very, very easily. Now, you can see here's another example where we buy it after the big surge and you say, oh, see, you're too late. It chops around. It's going through this flag chop pattern. And we're actually slightly down at one point there, right on that little %R retest point right here. Notice it holds. CCI never gets back under its upper threshold here, under that green line. It stays above it here. But you can see that it's hanging in there, but it's slow. And so again, that first day is slow, starting to improve. Later the second day, you can see by the end of day 2, we're now headed up here, and then start of day 3, we're now moving up here to get our first target. Notice, first target achieved when the stock is no higher than 93 bucks. So we've got a 105 strike call out into the end of the 3rd week of April, and it's still 12 points out of the money. Remember, when we bought this at 887, this was 17 points out of the money, right about 20% of the money. That would make a lot of traders nervous. In fact, probably my early days of trading, I would have been a little concerned about trading that far out of the money with about a month to go before expiration. But we know how fast, when we catch these signals, how fast these stocks can move and how the options get bid up. There's something in the options pricing model. I don't want to get too technical here, but there's something you've heard about delta and theta being the time erosion, delta being how much bang for each point you get in your underlying option compared to the stock's 1-point move. But there's also something called gamma, which basically says how much delta you pick up. As you go from out of the money closer to the money, you're actually gaining more of that bang for your buck. So you're each successive point's getting more and more valuable to you compared to where you bought it before. So this is why when you have a system that gives you a trend edge that you can actually catch these moves relatively effectively and still minimize your risk when it doesn't work, then you say, okay, now we've got the chance to really see some very quick stacking of potential profit targets. First target at 93, next target up here near 95, final target up here near 98. Okay, notice we never got to 105. This all happened over about 3.5 trading days. We were out of it on St. Patrick's Day. Was lucky for us. We cashed in the remaining green there that morning. But you can see here, 102% sell half. Sell the next half of our remainder, quarter of our original position at 203%, and our last piece sold at 304%. So the idea is that, okay, look, you're in it to capture that. And you say, well, why would you get out there? Why not? We get this question a lot. Why not trail stops? Because a lot of times you trail stops and then you get thumped like a future morning where it then gaps down against you, right? So we take that kind of bird in the hand philosophy. A double, a triple, and a quadruple are all healthy targets. But at that point, we're saying, look, we don't need to hang around in this strategy for 5 baggers. We're happy to book those and say, that stacks real nicely in your portfolio. By the way, all these examples, you know that past performance never guarantees future results. The next time we call it AMD or any name, it may be a loser, right? So there's going to be winners, there's going to be losers. Let's talk about a loser here. And this is one actually that happened not too long ago where it could have worked out, but we didn't. Our rule said don't hold and hope. This was Fluor Corp. This is, of course, the construction giant. You've been waiting instead of all these like government handouts, been waiting for them to put in place kind of almost the FDR style, reconstruction of our highways and bridges and other infrastructure. that has been given failing or near failing grades in a lot of cases by construction groups. And so it's like, okay, Fluor should benefit from a build out in our infrastructure, right? But that's a should, right? The key is that when we're trading, we're saying, look, we're getting that both of these are now looking bullish here as we break out on Fluor stocks trading there near about 34 and a quarter. We bought about 10% out of the money, bought the 37 and a half calls out into, that was late August, into the third Friday in October. So we actually had like almost 7 weeks to go before the expiration. And we bought them for 66 cents. So like, hey, these options are cheap. If this thing keeps going, we're in a really good spot here. And percent R, this red line here, as it pulls back under there, that was still kind of hanging in there. But the CCI had sort of lost it here a little bit before that, right? It was starting to lose a little bit of that support level. And we just said, look, it's not worth holding on and hoping. We lost 16 2/3%, just under 17% the next trading afternoon. And we said, okay, look, this is where I used to use this strategy a lot on a daily chart, and it worked, but it would make me get stuck holding losers longer than I wanted. So we moved to an hourly chart, got a lot of the same effect on the speed of movement when we were right, but also said, you know what, if it hits our time stops, let's go ahead and cut and run. And you see that then popped on up to 35 and a half plus in another day or day and a half. But, you know, that happens sometimes. But, you know, the structure was pretty good, but wasn't still both indicators holding up. One of the two is still holding up. We'd like to see both of them holding up. And if it doesn't, exit, come back to play another day, right? The idea is that, look, part of your philosophy in trading has to be that the market's a constant stream of never-ending potential opportunities, right? That if you hop out now, you can always hop back in. I remember the great trading psychologist Mark Douglas talked about that in his book, Trading the Zone, which is just, to me, his books are just must reads if you want to get into trading psychology. But that was one of his big kind of points that really caught me, was like we get so stuck in this, like, well, if I get out now, I can't get back in. I'll feel stupid if I get back in at a higher level if I just exited that call the day before. But the idea is that, you know, we're looking at a flow of opportunities, right? So we say, okay, get yourself cleaned up on a trade that's not doing what it should be doing. That not just cleans you up financially, but it also cleans you up psychologically. It gets you in that mode of saying, okay, next, you know, next play, as Coach K would say. You know, the idea is that, you know, we're looking at that. Don't stand there admiring your last shot or moaning about your last trade that didn't work. Get on to the next opportunity. So let's talk about one that we got out of the last piece, just a touch early because we didn't want the overnight risk. Here was Delta Airlines back in June. So Delta, again, not a sexy name, right? I mean, stocks trading here about 36 and a half when we get our signal of both of them crossing up, percent R and CCI. Remember, you get all these settings when you become a subscriber. Stocks trading about 36 and a half. We buy the July 39 calls, about 2.5 points out of the money, 6 weeks to go before expiration. And you see, again, there's some, so this actually embodies what I would call the stair-step approach, which is that the first step actually is, you see a slight little retrace here on both percent R and CCI, but it holds. And then the next step comes in here as this thing pulls back here. You see that's coming at a little bit higher level. And so if we kind of mark off all these retest points along this chart here, I can just kind of draw these lines off of, you see the CCI does a really nice job of kind of catching these little retracement points throughout this move here. And so, okay, if you're drawing those lines and then kind of connecting the dots, what do you get? You get a stair step, right? You can see how it keeps stepping up here. So the idea is that you keep on marching higher. That's what you want to see in an uptrend, right? Higher highs and, more importantly, higher lows in this case. But those retracement points define for me what should be the short-term swing trading low for the next week or so, you know, and if it doesn't hold, then that tells us something else. So you can see we're waiting in this case for a little over a week till we get our first target. In this case, because it's a cheaper stock, 39 strike call, this does pop up to just under 40, and our $1 option that we bought is now turned into $2. It's worth about, what, 3/4 of a point? So it's still plenty of time value in that. We're selling the first half out at a double. Then we get the next target. So that's target one, right? 100%. Target two at 200% is achieved. We get up here to about $41. Now it's about 2 points in the money. We're selling it for $3. It's still got an extra buck of time in it. And then the final exit happens because we take it out a touch early at 270% because it's advanced on up here at about 42. It's about 3 points in the money. We want to sell it at 4. We can't quite get that. We get out at 370. That's a 270% gain versus our $1 entry. So think about that. You bought it $100 a contract. You're selling each of those contracts at 370. So again, you don't have all original 10 of your contracts if you've invested $1,000, right? You sold 5 of them out when it went from 1 to 2. 5 of them at 2 got your original $1,000 back in your pocket. But you see, in this case, it says, oh, well, we would have gotten the target. This took 9 trading days. It's a little bit longer than I'm used to expecting. Usually a lot of my targets can get achieved in about a week or so. But I said, there was this mid-June, there's some kind of inflation report or whatever it was coming out. Let's just take it off the table. We've made most of our final target at 270% on our last quarter of our position. So, you don't want to get too greedy about trying to squeeze that last few bits out of a trade. If you're like, I'm most of the way there on all my objectives and there's event risk coming up, let's not let it slip away. So kind of bird in the hand philosophy is definitely something that's kept me in the game over my 34 years or so of trading, is, not being shy to go ahead and lock it down. As you can see, just one of these winning trades can generate a tremendous return already on even a small trading account. If you're trading a $5,000 portfolio, just one of those that hits all 3 of its targets makes $1,500 or $1,600. Might put your whole portfolio up 30% for, on a portfolio basis. We're not talking about trade by trade here, but let's actually account for all the trades, winners and losers. When you go back over the full history of our Grand Slam options program, which takes us all the way back to the beginning of 2017. And it seems like a long time ago, given that we had the pandemic in 2020. Of course, we had the bounce back, then the bear market last year, then the rally this year into July, then the shakedown into late October. And now the big bounce, best week of the year, hit last week, right after I told subscribers in late October that the markets were due for a really nice seasonal positive bounce into the end of the year. You can see we updated through today's action. All of our closed trades would have generated $26,187, adding up all of our winners and losers before commissions, before subscription investment. This assumes you never put in more than $1,000 a trade, and we don't compound these numbers. So, if you started a $5,000 portfolio and now it's up to $31,000, we're still saying put $1,000 in a trade. That would be only a few percent of your portfolio per trade. So we're not trying to show it at its absolute maximum potential here, but just showing you, even with all those ups and downs in the markets, that this is definitely a growth strategy that for me is kind of a core of where I want to be positioned. From a trading perspective, it's saying, okay, I'm not saying it's the only place I want to be. I want to get some income strategies in there too. But if you're looking for growth, this one for me is my favorite growth strategy, options or stocks. So the idea is that, okay, sure, the future will not look like the past. It could be better or worse than this in the future, right? We can't guarantee the future. Past performance never guarantees that. But the idea is that, look, it's all about following the same system, which is our approach. You say, well, what have you done for me lately? How about the last couple of years? I mentioned the bear market last year, the mainly bullish run this year, but with a little shakedown in the fall, that a $5,000 portfolio would now be up to $11,764, adding up all winners and losers before commissions, before subscription investment. So you say, okay, that'd be 135% gross return, despite the fact that the S&P was down last year 19%, the NASDAQ was down like 30% last year. And so the bounce back this year actually hasn't even recovered a lot of that pain last year for the NASDAQ especially. So it's recovered some, but that's what we're here to take advantage of. So again, past performance never guarantees future results. But you see, just in the last 24 months, pretty pleased to be able to guide people to a better than doubling of a portfolio. And now, say, okay, where do we go next, right? So the future is going to obviously vary from the past, but the idea is that let's make sure we're following the system with the indicators I'm sharing with you here today. So the idea of this is that, okay, let's recap these indicators here and talk a little bit about it and then show you another example. So Commodity Channel Index. Donald Lambert developed the CCI in the early 1980s to track trends in futures markets. And I was actually interested, even before I read deeper into his kind of philosophy and what he was noticing, I was like looking at the charts and just noticing as I sort of adapted some settings, which is important, right? Don't use default settings. You'll get my customized settings for CCI for big name growth stocks on the way up and the way down when you get signed up as a Grand Sum option subscriber, and more on that in a little bit with a great starter sign up special. But the idea is that, look, okay, we want to find the big trends in the outlying, the things that aren't supposed to be happening. Whenever I hear the term outliers, everybody assumes that outliers means that that's a rarity, that shouldn't happen. That's like the 100-year flood. But we've seen a lot of 100-year floods that happen a lot more often than once every 100 years in the markets, in economic data, go pick whatever you want to pick. That, these outliers are happening with greater frequency than people would expect. And so this gives you a way to trade those and to really profit from those. And also knowing that the markets are going to rotate. They're going to go from, one sector to another. They're going to, sometimes the heroes, if it's gold, if it's crypto, if it's, whatever the hot thing is, are going to sometimes become zeros or become, on their way down, just as good of trading on the way back down when the bubble bursts, right? So we trade them in both directions. But the idea is that I want to see them both give me fresh signals, CCI and the %R, with a tool I use to visualize it called Big Trends Bands, which just says, okay, it tells me it should be stuck in this range. Breaking out of this range is no longer a %R reading in my mind. It's a %T, trend signal that now we're moving. It's based on the philosophy of the 80-20 rule, right? When you look at kind of the classic top 20% of readings, you would think, well, that is very overbought. That shouldn't be happening. But actually, the top 20% of readings is where I get 80% or more of my gains in my call trades, because the idea is that I'm finding stuff that's the institutions are pouring on the gas. And so you want to make sure you're participating, getting a piece of that move, what I call the sweet spot of the move. That's where it's easier to trade and still gives you very clear rules on how to hop out. So when you get fresh breakouts on both of those indicators together, I call it double confirmation, right? It gives you a double confidence. Certainly gives me a double confidence that if I'm calling out trades for subscribers, I want to feel like these have the best potential based on not just what I'm experiencing in my own trades, but also what my data says gives the best profit factors over a long trade history. Again, the future, the past never guarantees the future, but the idea is that, look, I'm going to give you full access to what I found works the best when you get signed up for a really great starter price point here. So you'll get access to all that stuff with the starter package here in a little bit. But let's talk about another one here earlier in the summer that basically was one that I was surprised hadn't really participated. And when it did start to participate, boy, it was a nice steady move. This was Intel. The chip stocks, the whole hype from the first half of this year, the two letters that everybody's talking about, AI, artificial intelligence, right? Everybody's hyped on it. The chip stocks have been a big winner. Of course, the NVIDIAs of the world were viewed as they're going to be the biggest winners. But, Intel was the original chip stock, right? I mentioned we just had that double on half of IBM. It's hard to believe when you think back to that. Basically, IBM had the Intel business and the Microsoft business all to themselves and didn't realize it. And basically, Intel and Microsoft sort of stole that out from under their noses and those markets essentially. And IBM was stuck looking at the past mainframe market as what they thought was their big market. It's an interesting little side note that IBM really controlled the whole market at one point and just kind of let it slip. But this is kind of another case where Intel had kind of let it slip, right? Where basically, but they're kind of on the comeback trail here. And you say, okay, well, little side notes here. You see June 12th, first hour. There's our big first hour surge, right? I like to see first hour surges. I want the launch. I want the power. I want the takeoff, right? If you have a rocket, it's worth nothing if it has no fuel, right? The more fuel is applied with that rocket, the better the launch is going to be. Stocks trading 32.5. So the idea here is that 32.5, what are we buying? We're buying the 35 strike calls, 2.5 points out of the money, about what, maybe 7.5% out of the money. Say, okay, we're looking for a pretty good move in Intel. We're buying the 35 strike calls that are about 5 weeks ago before their expiration for 81 cents. It's $81 to control 100 shares of stock that would cost you about $32.50, right? So again, not massive leverage here, maybe in the 40 to 1 range. But the idea is that, look at our structure. It starts to move in our favor. Then a little retrace, right? There's our first retracement, right back about where we got in. Then it starts to go, another retracement now on the CCI back into this late second day action. And then you can see it's still holding. We get our first target here, by the way. There's our first target, 103% and change made as the stock is now 34.5. So it's rallied 2 points, or roughly about what, 6%, and we've made 103%. So again, we're in about the 17 to 1, 18 to 1 leverage ratio. So not huge leverage, but the idea is that it's a very steady move. Now here's the thing: it gets to 36. Now it's rallied up past our 35 strike price, right? It's a buck in the money, and we're in at 81 cents. We're selling the next target up there, target 200% gain at 202%. When we're about a point in the money, that option is worth about 245 is where we got out. So you can see that we've on about a 10% move, we made a 202%. So now we're about 20 to 1 leverage. We got to about 250% right here near the peak, but actually 0.3 intra-bar there, wasn't at the low of that bar, but more like 35.5. Our trailing stop was hit. That we don't want to give back too much of our maximum gain. So as we start to get healthy gains, we will put out trailing stops for subscribers on the remainder of the position. So that's something else you can count on, is that that we'll guide you through any market. If it's working or if it's not working, you know where to get out. We never leave subscribers hanging. You can see, actually, it's a good thing we got out there, because then the stock went the other direction to the downside. That wasn't so tradable on the downside based on some of our other trend filters, but it kept us out of that trouble. They announced that they were going to build a multi-billion-dollar chip foundry to get more chip capacity, and Wall Street didn't like the cost, apparently. But you can see, if you bought up to $1,000 worth, that 12 contracts would get you in for a total of $972 before commission, and then gross profit before commissions on the 12 contracts in, 12 contracts out, of $1,401 with all those 3 targets, or all those 3 profits being booked. So we didn't get the final target, but it still was a really nice trade over a total of just 1 week, 5 trading days, right? So that's the idea, is that you capture that sweet spot. The hourly chart gives you plenty of updates and data points without it being too noisy. I don't really like to trade few-minute charts, right? I want to trade something that's meaningful in the price action movement. So that's really, and Keith said he made money on Grand Slam options on that one. Thank you, Keith. I appreciate it. Great to see you. And it's fun to be around these trades when they're hitting, and obviously there's going to be times where they're not hitting. And so the big part of the philosophy here is that we don't want you getting too high or too low with your trade management and your capital allocations. Just be steady and consistent on the on your capital allocation. So if you have a big winner, don't load up on the next trade. If you have a loser, don't bail and not take the following trade. Be consistent on your execution. I think you'll find with a healthy system that over time you'll be pleased with your results. And frankly, while we can't guarantee the future, the idea is that it will simplify your life and take your stress level down dramatically when you focus yourself on execution alone. Meaning, when we send out the real-time email alert, the WhatsApp update on your smartphone, say, okay, we're buying this option at this price or less. Okay, now we're telling you, once we're in it, get out at this price or less, then raise your stop to this price or less. And you fall on the execution. Sure, you still got to implement that, but now you don't have to play the guessing game of, which system do I follow? What should I do? How should I do this? We guide you through that. So now you just have to execute. Your job just became massively simpler in helping you to implement a system effectively and cleanly and not have to second guess it. So the idea is that, sure, we're not going to hit on every trade, but we're going to control risk. We're going to obviously want to play off of our track record and know that we want to keep executing the system, knowing that we can't predict the future, but we know that, like I like to say, the names, the symbols will change, but the system remains the same. The system is our guiding force, right? We must execute the system when it says to get in, and when the system says to get out, we must get out. That's how you build trust. It's how you build confidence. It's how you build conviction in wanting to take the next trade, whether we just had a winner or a loser, right? But you can see, if we're looking at our history, looking at, okay, this goes all the way back to the beginning of 2017, and it says, okay, you know what? We've had a lot of different market conditions, but the idea is that, okay, we're going to capture individual stocks that are moving, whether they're moving cleanly up and fresh breakouts on the upside with both of the double confirmation indicators, or whether they're both moving down together, right? So the idea is that, okay, even just putting in $1,000 a trade, and you don't have to start with $1,000 a trade, by the way. You could start with less. Obviously, $1,000 a trade maximum generated over 26 grand in profit back to the beginning of 2017 to now, taking every trade. But the idea is that you don't have to, that will probably get you at least 10 contracts, right? Because we're never paying more than $100 per contract. So you'll be controlling at least 1,000 shares of stock on every trade with $1,000 potential commitment. But if you're like, that's too much for me, well, you could do it with, I would say, start with as little as 4 contracts. If you want to trade small, 4 contracts at $100, that would be $400 a trade. Obviously, if you're doing 5, just to say around $500 a trade, you'd have half of the profit. But still, that'd be on half the capital. The effective return would be right there at the similar kind of levels. But the idea is that, you can trade this with less. And so, but I would not recommend just one contract, because we don't want to have you just say, well, I got to take the first target at double and then not be around for a potential triple or quadruple. Past performance never guarantees future results. We all know it. But, I appreciate, Geoff mentioned how long he and I have worked together. He helped me create the Big Trends Toolkit, and I'm going to actually try to give you this offer and then give him hopefully a few minutes to tell you a little bit about the Big Trends Toolkit as well, because what I'm sharing with you here is just a piece of also what's in the Big Trends Toolkit. But of course, we're doing the monitoring for our Grand Slam option subscribers and calling out the trades. You do all that work yourself, but the toolkit gives you a lot of those tools to be able to do it if you have the time to do it yourself. You say, well, how can you get a test drive on this? How can you start to access these trades for the rest of this year into the end of 2023 and kicking off 2024? And so I set up what I call the Metastock Appreciation Package here, which means that I'm going to give you access to the next 3 months of trade alerts. A lot of times with Grand Slam options, it's been so popular, and we've got so many people already in the service that I limit the spots, and will oftentimes typically sell a year as the lowest starter point. But I'm going to give you access for the next 3 months, just to say I'm that confident that give it 3 months, I believe it will prove it to you of what you've been missing out on here for some really bona fide growth in your portfolio opportunities, and helping you manage the risk on every trade as well. So if you bought it off my website, it'd be $297 a month times 3. That's an $891 value. I'm going to definitely slash it well below that, so hang with me. We're going to also give you extra things that we typically would give to longer term subscribers only, which is I'm going to give you my settings and rules sheet, so you know the inner workings of the Grand Slam options system. I'm going to give you weekly video training every week that you have access to Grand Slam options about what I saw, what I liked, what worked, what didn't, what I'm looking at next. And then dedicated email address to me and my analyst team. If you got a question about your Grand Slam options portfolio, we'll tell you how to kind of reinforce what we're telling subscribers via the real-time updates. And then $891 slash it to just a one-time investment of $177 for the next 3 months. There's no future auto bill. You're going to want to lock it down after you see what we've done for you over these coming 3 months. But this is the link you have to go to take advantage of it. And note that it's not a www link. It's members.bigtrends.com/slam3. So I'll pop that in the chat box here. When you go to members.bigtrends.com/slam3, that page will be looking very clean and easy to get you started. Let me show you what it looks like real quick. So pop that up, and then I'll see if we have any questions and then hand it back to Geoff here in a couple of minutes. But let me just kind of reinforce what we're looking at here. Get 3 months access, and you say, okay, what's the trades per month with Grand Slam? We would expect typically an average of about 6 trades a month, maybe sometimes 8 trades a month. But the idea is that we say expect about a trade or 2 trades a week, right? We're not trying to hyper trade here. So we've already taken the promo code discounts, and there are no further discounts here. You get it all next 3 months, next 90 days of access, which will take you out to the early February of 2024 for just 177 bucks. That's like 80% off plus off of my usual 3-month pricing. You can also see we left in there an extra bonus. You can also get lifetime access to the Gamma Options Bootcamp, which trains about the philosophy of Grand Slam options and why we mentioned Gamma and selecting options and all that stuff. It gets deeper into that several hours worth of training you can get today when you hit the add to order for just $77 more if you want to add that lifetime access to the bootcamp training. But this is 3-month access to the Grand Slam trade alerts for just 177 bucks. So go there to that link that I mentioned and popped in there, members.bigtrends.com/slam3. Quick reminder on the performance just for the last 2 years. You can see more than double, despite the fact that the market dropped a bunch last year, then rallied back this year, right? So the markets haven't actually done that much in the last 2 years net, even though there's been plenty of opportunities in both directions. That's what we're about, is helping guide you through that. So while past performance never guarantees future results, no, that averaged 281 bucks in profit per month. And here I'm giving you the access to 3 months of trades for just 177 bucks, less than that 1 month average. Obviously not guaranteeing any given monthly result, but the idea is that we're going to keep it simple for you, keep it effective, and allow you to stay focused on how you can find growth opportunities on low-priced options. You get great bang for your buck. You don't have a lot of capital commitment. You can start this with as little as 400 bucks a trade, all in for just 177 bucks when you go to that link, members.bigtrends.com/slam3. Take advantage of Grand Slam options. So I'm going to hand it back over to Geoff. Maybe he gets a few minutes, hopefully, to tell you also about the Big Trends Toolkit and Metastock. I highly recommend it if you're a do-it-yourselfer to get all the tools that I like to use to find great trades across all kinds of different time frames. Thanks so much, Geoff.
All right. Thank you, Price. A couple questions, if you don't mind.
Sure.
Let's see. Lewis wanted to know what are the indicators you were using, and we told him a CCI, percentar, and big trends bands were the kind of the ones that you highlighted today.
That's right. And big trends bands is basically another visual representation of the Williams percentar indicator. So those are basically kind of one and the same. The difference is that don't use the kind of typical default settings and parameters that a lot of platforms will give you for percentar and CCI. So ours are different settings. So when you get signed up, the settings and rule sheet will actually teach folks the change they need to make in those underlying parameters to really turn them into effective trend following indicators.
All right. Interpol wanted to know, do you see market behavior changing in view of the upcoming elections or China policies?
Great question. We said actually that seasonality has been right on cue. That I don't see market behavior changing is my short answer. But basically that there's going to be ups and downs, and this market, Geoff, this year in 2023 has fit the seasonal cycles almost to a T. A mid-January bottom, a late July top, a late October bottom, and it says that even with the big run we had last week. That we still have more upside to go based on the seasonality, and that if you look into election years based on the question, that there's not quite as strong a seasonality as we've seen here in these last couple of months of this year, but that we will still have a positive bias. There will be a lot of noise next year. There will be a lot of talk about because of the election cycle, and there's usually a lot of chop, especially in that midsummer to early fall period pre-election. But it doesn't always last right into the election day. A lot of times that uncertainty is pretty clear to the markets, clearly resolved enough that the markets are ready to rip into the end of the election year or late next year too. But I'm expecting good things overall from here, Geoff.
Do you think it's going to be noise from the market or noise from the elected politicians, or both?
I'd say both. I'd say, the elected politicians are those that are trying to get elected or reelected, as the case may be. Basically, the idea is that there's going to be tons of noise there. There always is, right? None of that has changed, right? There's always been news flow. There's always been worry. But when I get worried on the markets, Geoff, it's when the worry disappears, right? I mean, we had in July everybody saying that AI was the savior. It was as big as the internet. That a lot of people were claiming it was in the early innings, and I'm like, well, I think it's a good time to take some chips off the table and basically kind of anticipate that we're going to get some seasonal weakness, and we did. And then everybody was telling me in late October, "You're crazy to be wanting to buy this market. The S&P had just broken its 200-day average, and da 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 da." And I'm like, the seasonal work says it's like the best 5 days of the market coming up for the year, and we got a 6% rally in 1 week, right? I mean, so I wish they were all 6% rallies every week. We know that's not going to happen, but the idea is that you have to be positioned to not get caught up in what the masses are saying and thinking and feeling, because that's actually what creates the opportunity when too many people are underinvested. And there was a lot of people, big institutions, underinvested coming into this year, Geoff. So I think that was part of the reason the market rallied, even in the face of various uncertainties and higher interest rates not derailing the market. And I would remind people that part of the reason that the Fed's higher interest rates haven't derailed stocks yet is because you have so much government spending, right? So the Fed can only do so much. And the government spending, I don't think, is going to be slowing down regardless of who gets elected. So that's where I think you have to watch the inflation. That's why the worry about inflation is still out there.
All right, last question, and we are out of time. Go Bananas in the YouTube chat wants to know if he can get performance account statements.
Yes.
Are those available?
Yes, if you go, I'm glad you asked. Thanks so much, Go Bananas. If you go to the order page and you want to just give us a call or shoot us an email, we'll be happy to send out the past performance history. Our email is clientcare@bigtrends.com, or you can see right at the top of that page, or 800-244-8736. I remember that number easier by just saying 1-800-BIG-TRENDS is how it's spelled out on your phone. So basically, you can call us at 800-BIG-TRENDS toll free, or email clientcare@bigtrends.com. Happy to get past performance history.
All right, perfect. And that we did get all the questions. So thank you, Price. I am going to talk a little bit about that really cool toolbox that we made.
Thanks, Geoff. Appreciate it.
Go Banana says thank you. Thank you for the question. Thank you very much, Price.
Take care.
All right, very cool. Let me go ahead and do this. We'll make a little bit of some changes here. And let's see, where's my control panel? Let's turn on the lights. Let's change me to the presenter. Okay. And then we'll just do this quickly. Obviously with Price, one of the best. One of the things that we don't talk a lot about, or that we haven't talked a lot about, other than kind of talking a bit about it, is, or alluding to it, is the system tester in Metastock. And so I just ran a really quick system test. What I did is I picked the systems that were available in the Big Trend Toolkit. And there's, as you can see, I think about 12 or 14 of them. But I ran those against the S&P 500, the Dow 30, and then the NASDAQ 100. And you can see, for the most part, they perform very, very well. This is just a back test over the last 2 years. It doesn't take into account any option strategies that you might be using. It's just if you get a buy signal, it buys, and if you get a sell signal, it sells, and that's it. So if we're kind of looking down here, you can see the average profit of the best performing system was about 6%. And for the most part, just kind of in a rough market environment, these systems performed really, really well. And by testing all 526 stocks in that basket, Dow, S&P, NASDAQ 100, I can kind of get an idea of how well a methodology works. And with Metastock, the thing I like about the system tester is it does have the ability to test as many ideas as you want against as many stocks as you want. I just chose these 500 as kind of a benchmark. But if I kind of wanted to go in there, our best performing system was the DMI difference. It made about 6%. You can kind of get an idea for how well it works on a bunch of stocks, what stocks it works well with. Here we've got Tesla. It made almost 100% gain on 22 trades last year, 10 of them taking profit and 12 taking losers. So Pentair, about 72% gain over 17. And so we didn't really talk about system testing too much. I think system testing is incredibly valuable. I think system testing does have some weaknesses. For example, I think if I'm trading something, I'm not trading it like a robot. I kind of have stops, and I might be using leverage and things like that. But it gives me a good benchmark for how something works and how well something works. And this is something that is available as part of the Big Trend Toolkit. In addition, I just pulled up Tesla. This is the Big Trend score system that we wrote, that Headley and I put together. And just kind of wanted to give you an idea of how it worked and kind of how it showed on the chart. one of the things that I'll show you real quickly, I'm going to go to the commentary here. And the way that this actually works, this particular expert, is it'll take a score. It'll take all of Price's favorite indicators and score them up and kind of give you buy and sell signals based around that. And so if I'm looking right here, Tesla right now, the Williams percent R is neutral. The percent R, 2-day percent R is neutral. The CCI is neutral. Efficiency is bearish. Acceleration bands is neutral. And so this sums it all up. If I'm looking at this, the way this system would actually trade it is if I have a negative score and I get a trigger down below these bands, it's going to go ahead and give me a signal to buy. Now that doesn't exist here, but it did happen when we had kind of a bullish score, as you can see right here, back in the past. And so I'm just going to highlight this. We had a buy signal that came back in on June 1st. We had a big trend score of 80. You can see where it's breaking down kind of the components of that score. One of the things that I really like about Price's methodologies is when I talk to people about what expert advisor commentary should look like, I provide them a sample of what Price wrote for his. And the thing that I really like about that is kind of the level of detail he goes into the strategies that you can use. So for example, if I'm getting a trigger here, let me just kind of zoom in a little bit so you can read it a little bit with me. The BTS indicator has recently crossed above 80 and the price is broken above the high. This indicates a potential long system. Traders interested in taking advantage of this opportunity should look at buying the stock or buying a call options 2 months before expiration. If you're aggressive, you should look to do this. Here's when you should look to exit the position. And all of that is very, very well defined. He just does such a really good job with kind of putting things together. And one of the things that I really like about Price is kind of the pickiness of which his systems. He always talks about it, and it's just something that I kind of admire. There's a lot of opportunities. There's 6,000 stocks, and what he has focused on is finding the best opportunities. So the Big Trend Toolkit 3 for Metastock is the most encompassing. We've on version 3. I said yesterday, if we're on version 3 of something, it's done really well. But this is the third version. These are the methodologies that are in the system, the ones that you can test. Looks for stuff like, is it accelerating? Is it in a trend, but is it accelerating into the trend? Is it moving efficiently? Does it have momentum behind it? And those type of things are things Price really, really does well. So those are the methodologies. In total, it has 17 different explorations, 17 expert, 17 system tests, which is what I actually just ran and showed you, 15 templates and 18 custom indicators. It does come with a very, very comprehensive manual that Price and I put together as a joint effort. And it's very, very... So the price of the Big Trend Toolkit is only $49 per month. And the special that we're doing matches the special that we're doing for Metastock. So if you buy a month, we'll give you your second and your third month for free. If you're interested, you should try it out. 800-882-3040, metastock.com/saleschat, or metastock.com/bigtrendsA would work. All right, very cool. I did notice what time it is. We are Metastock. We are doing the extended trial to show you the system testing, how well it works, and all that kind of stuff. Get in touch with us. There's a reason Metastock's been rated #1 30 years in a row. Now, we are not, I know we're a little bit late on time, but I'm not going to not give away a prize. In fact, right now we're going to give away 2 prizes. So if you are watching in YouTube and or GoToWebinar, we're going to pick one of each. What I would like for you is to determine a number for me. The number that you put in is going to correspond with the number. I've got this spreadsheet of all of the registrations. So if you give me a number, that number can be anywhere between 1 and 10,656. Type it into the chat. The prize that we're going to be giving away, I've got them both right here. I'm giving away these copies of the Adrian Mance Around the Horn book. Now, this book is $95. You can tell because it says it on the back. But it's a fantastic book. Adrian Mance put it together. It talks about all of the patterns. There's lots of really good pictures in there. I really, really like this book. Somebody's going to win. What I need you to do is come up with a number. I don't see any numbers coming. Oh, I need to scroll down. I'm like, there's no numbers. All right, let's see. Paul, I didn't see your question about Bob Lang earlier. So, okay. I do see lots and lots of numbers now. So Weston says 929 from GoToWebinar. And let's just figure out who that is real quick. And that would be or David L. with a Gmail account. You didn't put a country in here, David, but I'll reach out to you. I need to get an address for you because this is physical. We're going to have to send it to you. So the next number that we're going to go through is 10,125. Mark, thanks for the number. And that's Mike B in the US. Mike B with a Yahoo address. You also want a book. So thanks for participating, everybody. Weston, thanks for the number. Goran, thanks for the number. John, Frank, Paul, Geoff, nice name. Mike, John, Alex, and Penny. Good to see you guys. Let's go ahead and move on. A little bit late, but that's okay. Here is our next presenter, Ed Downs. Ed Downs has a really long history with Metastock. He's been a friend of Metastock for a million years, or at least 25, 26. I remember when we started, when I started here 26 or 27 years ago, we sold a bunch of his methodologies as part of a Metastock bundle. I remember they were really, really good. He contacted me about, a while ago to put some of the tools that he's been creating into Metastock. And one of the ones I really wanted to put in there was the chart pattern one. And so we did that. It's amazing. He's going to talk about chart patterns and how to trade them and how to find them, all that kind of stuff. I'm going to let him do that. Ed, let's go ahead and get you going.
Hey, am I live?
Yeah. I am going to, one of these days, update my photo. And then as soon as I'm done updating my photo, I'm going to update your photo too. But I do actually,
well,
like a look.
You don't have to.
You look very smart with glasses on. So.
Well, actually, you're wearing yours. Okay, so this little thing that happens to you called cataracts.
Oh.
Yeah, so it's the surgery's coming, but I was going to try to wing it without the glasses because you've never seen them on you before.
Yeah. They look good.
Oh, thank you.
I've been in contact contacts since or glasses since I told my elementary teacher that she shouldn't draw on the chalkboard because nobody could see it anyway. So, in any case, the name of the book, Mauricio, is Around the Horn. And it's not from AAII, but this is the book. So, all right, Ed, we can see you. I can see your screen. I know we're starting a little bit late. Let's go ahead and get going. Thank you.
No problem. We'll just work it into it. It's not a problem at all. Hey, thanks so much for asking me to come and speak again about one of our products that we put into Metastock, Geoff. As you said, our history goes back really. I hate to date us like that. It's kind of, don't want to do it. But 1990 or so, 91, my company, Nirvana Systems, I started it in 87 to automate stuff about trading, kind of, work on that idea. And so in 91, we built some automation utilities for the DOS version of Metastock. That goes way back. And they kind of ran it to do things, to get reports out of it and stuff. And it was pretty popular. People liked it. And Geoff and I sold each other's products and, all that stuff. So it was a lot of fun. And I just continued on the process of trying to automate, indicators and systems and different things about the market. Back in 96, we started working on artificial intelligence. We have some artificial intelligence offerings. Actually, we put our entire AI engine into Metastock. It's called the Fulgent AI package. And but the other thing that we did that actually, when I see it running in Metastock, it just gives me goosebumps. And I hope you have the same reaction to it. It's our chart pattern engine, because it's now in about its 7th version, and it's really good at finding chart patterns. So I think you'll see that when we look at the charts. But I'm an educator just by nature. I've always taught everything I've ever done: hang gliding, skiing, whatever. And so I like teaching people about trading the market with different tools. And so one of the things I've been doing for a very long time is teaching about chart patterns. So one of the things I want you to come away with on this seminar, of course, we're going to show the product. We all of us in Geoff's awesome thing here, have products that we built. So you're going to see that, and you'll have an opportunity to get it at a really good deal. But I want you to go away from this knowing a little more about chart patterns than you did before, because there are certain things about them that are highly predictive just with your eyeball looking at them. And things that I've learned and used continuously in charts, my staff uses them. And so I'm going to promise to give you that. It's not just going to be a sales pitch. We're going to look at everything about chart patterns and how they work. Okay, so let me go ahead and move a couple things around here. Don't need my picture on the screen, that's for sure. All right, so let's go ahead and dive into the presentation, finding the most predictive and profitable chart patterns in any market. And, as I say, in any market, it don't matter what's happening, there's always stocks going up, always stocks going down. And you can find great situations and setups using chart patterns. One thing I did want to mention is that we do have a free thing that you can get. I'm going to be going through a lot of material. And so all the same ideas, concepts, pattern targets, what the best ones look like, all of that is in this book. And it's at our website for Fulgent AI. Now, a little bit about Fulgent. We actually created the Fulgent company to take our tools out to the world in other platforms. And of course, I contacted Geoff first, and he's my favorite, of course. So we have tools and products that are in Metastock, including chart pattern engine, AI, and other things. So that's what Fulgent's about. It's just for the purpose of packaging our stuff and going, taking it out. So if you go to fulgent.ai and the platforms and click on Metastock, you'll find this page. And that to the right there is a free book, the chart patterns, and just click it. You get a download. And it's, like I said, it's pretty long. It's got lots of examples in it, but I think it'll be a good resource for you to look at after you've seen this. All right, so let's start with the basic, what's a pattern? And I know most of you have probably been trading for quite a while, so you know what a support resistance level is, consolidations and things, but really the essence of a chart pattern, it's really an amazing thing about the market, and this fascinated me very early when I started studying it, is that when a pattern occurs, it's showing you what the market's thinking about that stock. In fact, Ed Seykota famously calls fundamentals fundamentals, because you think about a market going straight down, COVID, whatever, all those stocks didn't lose that much value intrinsically. They were still as valuable as they were. It's just people wanted to sell them. And it's the psychology of what's happening, why people buy and sell. That's what moves price. Now, fundamentals certainly have a place. Something like a Tesla or an Amazon, very good companies. They're going to go up over time. But when we're talking about trading them, the fundamentals kind of get in the way. So you want to look at, what is moving this market right now? And I saw that Price is doing a lot of that. Excellent work, by the way, Price, if you're still on. And so that's what they show, but they also cause things to happen. So if you have a support level and you break it, okay, well, that was broken because people, felt like the stock was going to go down from there. But as soon as it broke it, it accelerates. And that's highly observable, that you see a pattern form. You want to trade it because everybody else is seeing the same thing. So we're going to focus on looking for very clear patterns in the market. And those are the ones that you want to trade because that's the ones that people see. We talk about all these different patterns. The question is, what is the best pattern? I made this chart of the S&P a little while back and just kind of took a pen and went through and marked things like consolidations that have targets. We're going to talk about that. Trend line breaks, volume climax patterns, all these things through here that you can mark in an index chart. It's actually fairly effective to do this on an index. So which one's the best one to trade? Well, actually, they can all be very, very good. And we're going to be talking about the ones that I think are the best, the top three, after we go through the various ones that you can find. They're all good. They all have a place, but there are some that are really, really predictive. All right. So I have broken the pattern universe down into these 7. And if you've read a book like Bulkowski's chart patterns or whatever, there's like lots more than that, right? Like 30, 50, I don't know, lots of them. But if you really think about it, they're all derivatives of these 7, and I'll explain that. So here are the 7 patterns right here. I wrote a little book that's on Amazon. You can get it. It's very short. It's about 30 pages. I wrote it back in 1998, and It's okay. It goes through the same sort of idea that we're going to talk about today in very short form. But these are the patterns. So we start with the trend line break and reversal, support resistance break and reversal, consolidations, volume climax and trend, Fibonacci retracements, gaps, and saucers. And these little letters out here are what we call them in the software. So when you see 3 letters next to something, that's what they are. And so if you think about, well, what about head and shoulders? What about, a cup and handle? So taking a cup and handle, for example, I think you'll have seen these a lot, like the market will dip down, it comes up. So that's the cup, and then it forms this consolidation over here. So what that really is a saucer followed by a consolidation. Head and shoulders is basically trend line breaks and support resistance breaks. So if you just really learn these 7, you could pretty much see the psychology in any market by what's going on. Okay, so we're going to start going through them, and let's begin with trend line breaks and reversals. And just to define this very quickly, we have these pivots formed. You all are familiar with pivots. Typically, we'll use zigzag or something for that, but there's a little more sophisticated methods than zigzag. But it's price goes up, price goes down, and when it starts going down by a certain amount, we say there's a pivot there. And so we get enough of them, we can draw a line across them, and you have the 2 phenomenon of the market breaking that line or bouncing off of it. Okay, so we're talking about the breaks, right? No, actually both of them. Here's a trend line break, and these are trend line reversals. So you come down to the line, you bounce off of it. That's a good place. That's really a great place to enter a trade because that's a higher low. That's what we call it. There was a low here, there's a low here. And if you've got, this is a line formed, that's great. And there too, there's a break. Okay, so now we're trading the other way. So now we're going to do reversals off that line going down. Okay, so that's what they are. Now, back in the old days, I was doing these webinars to people, the whole course. I would pull out my gazillion examples right now that I screenshot from the market, right? And say, okay, here's one, here's one, here's one. Well, we've got something a lot better than that today. And that is Metastock itself with the chart pattern engine. So I'm going to use that to show you all this stuff, and we're gonna have some fun here. Okay, so this is Apple. It's about 3 years of Apple in the chart, and I will zoom in on it here in a second. But if I want to talk about the trend line breaks and reversals, what I can do is go to my Fulgent engine here, which there's a little F. So this is running. And this project is the first time I've talked about it. It runs in the background behind Metastock. You hardly know it's there, except there's a nice little, menu to bring it up and actually launch it. And these are different products that are in this thing because Fulgent is multiple things. It's AI, it's different trading systems we've done. The one we're going to talk about today is patterns right here, Fulgent technology patterns. So I'm going to double click that. And here they are. Okay, so what I can do, and we're going to talk about what's this stuff out here in a little bit when I get into the detail of how this thing works. But all I want to do right now is just click on trend line breaks and trend line reversals and say, look, Mr. Chart Pattern Engine, I want to see every one of those that you can see out there. So I do that. Let's minimize this and refresh the chart. And bingo, bango, bongo, I should see these things show up. Now, the other thing I'll say about the software as I talk about the pattern itself is that we color coded the setup ahead of the pattern. So like this blue right here is that trend line reversal. It's like, there's a line, invisible line drawn across those highs, and the software is detecting you've got a reversal off that line right there. And so the TLR shows up in the chart. I know it's really small on your screen, but that's what it says, TLR, and a signal. So every pattern that we do, here's a trend line break right here. Where's the line? And I'm going to attempt this, Geoff. I don't know. I'm not very good at it, but let me try. Okay, let's see. Trend line break right there. There's the line that it sees. Oh, stay. Thank you. There's the line. And so it breaks it, and great trade. Great opportunity. Here's another one right here. So I can draw this one too. And we could just spend about 30 minutes drawing lines here. But and of course, you can do this yourself easily if you train your eye or put zigzag on the chart and train your eye to see those pivots going down. And when you break one pretty decisively, the market sees it and it's going to go to town on that. Okay, so that is your trend line break, and then trend line reversals. Let's see, we've got 2 here. We go draw one more line. All right, and we go across here like this. Yeah, and actually, if I was a good chartist, I would zoom in on this so you could see it better. So let me try that here. All right, there we go. Now, so what you know, we go kind of back and forth between the software and the actual patterns. The software is looking for any place that it sees the setup for this thing to happen. You know, there's no hindsight in it. So when it sees that you've got movement at a point where the pattern could easily happen, it will tell you it's right here. So it's not, you know, there are places where, like, let's see right here, it says trend line reversal. Why does it say that? Because it's seeing a line across here, and it says, well, you're kind of going down a little bit, but what you want to wait, if you're trading this, is wait for just a little confirmation, like, oh yeah, it actually is reversing off that. But the software will see wherever it sees one, it'll tell you. This is really important if you're trading, because, you know, there's nothing that will just say trade this and you make money. It doesn't exist that I've seen. What you want to do is learn about the chart and what's going on around these things. And it's like, for example, this trend line break here was really pretty obvious, especially when you came back up and kind of got near this trend line. I talk about this in the book. And then it goes down again. That's really good. So there's just things that your eye can pick up that are really important. But the beauty of it, of the software again, is that it will tell you where these things are happening, so that you can go through them and say, oh, wow, look at that, whatever it is. It's really good. So the trend line break and reversal are pretty good patterns. We're going to see better ones coming up, but it's really very effective. So let's see, let's go here. Here's a trend line break, and it looks like it's off of perhaps these, a line through here. Not sure on that one. Another trend line break going up here. Very nice trend line break here going up. There's one, a short-term trend line break off these little pivots right here. And then we've got reversals going up the trend up there. All right. So that is trend line break and reversal. Now, we could spend a lot of webinar time here going through charts. So I'll do one just to show you sort of how we could do that. This is Amgen. And so if you just kind of look at where they're happening, it's, you know, same thing. You've got, you know, trend line break across these highs right there, a trend line break here through the very short-term little pivots right there, trend line break here through these highs. So, and any stock you pull up is going to kind of look like this. It's going to have all these things marked. All right. We'll do one more. What the heck? What I want to do is go back to Apple, kind of stay on Apple mostly, so that we're not. And this must be from another time that I did this, because these are still on here. If I can do it. Trend line, yes, thank you. Anyway, I drew these before. I'll just take them off. And okay, so if we look, yeah. Anyway, you can see that for yourself here, just looking at the different places where, like, trend line reversal right there going down, and a trend line break off these little pivots right here going down. So it tells you where they're happening. All right, let's go back to Apple, and we'll move on because we've got 7. And they tend to get a little better as time goes on. Okay, so I'm going to go back to the PowerPoint, and let's do number 2, which is support resistance breaks and reversals. And very much like a trend line, it's really the same thing. It's a horizontal trend line where you have these pivots formed, and when you break them, the market reacts to it, and the chart will either go down or up depending on whether a support level is broken or a resistance level. And so here's your reversals. You have a nice channel formed. You're getting really at that same point. What does the market see there? They're saying, wow, it was, you know, it was there before, and it kind of lost all this. It's there again. Wait for it. What's it going to do? You don't know. But as soon as it starts doing it, then you know. So it starts to back off of that. And of course, the software will tell you. There's an SRR right there. Starts to back off, and you go, okay, that's a really good, you know, buy a put or short it. But I agree with Price about puts and calls. The nice thing about that is you can take a small amount of money and just get in the market and get in for like $100. So it's great that you can do that with options. Both viable. So the market will participate on these breaks. So this is a really good pattern to trade. And if you have a support break, you can see panic coming into the market very quickly. See that first big gap down off the support break, and looks a little scary, but those usually will continue for a ways because, you know, demand just dried up. Everybody's trying to sell the thing. So, all right, let's go back to Fulgent. And I'm going to go back into the engine here and have it, let's see. They've changed windows. This used to be on the taskbar. Now I got to go in here. This is in the system tray. That's okay. All right, so go back into patterns, and we're going to turn those off and turn on support resistance right there. Okay. And if the reason I'm turning them off is if I put all 7, this chart will just be covered with patterns. Now, having said that, at the end of this, we're going to look at, there's a way you can have the software only display the best signals, and I'll talk about how that works when I get to it. But that's a thing we have that gets you, to the better signals if you want to use that. Okay, so here is support resistance. So there's a level right there, and I can just kind of mark some of these. This one right there. So we broke it. Here's one here, broke it. Here's a reversal right there, a reversal off those lows, a break of that low right there. So again, this is going to tell you where all these things are. And that's what's so great about it. Okay, one more chart. Look at Amgen. Yeah, some pretty good examples here. Here's a support resistance reversal. So it's looking at these little pivots right here, going across right there. You reversed off of it. Here's a break through that line right there. And that's a beautiful reversal right there. Look at that. We came all the way up to here. It backed off, gapped down, tries to get above that. It can't break that high, starts down right there. And that's, so if you were to trade that to the projected target, which is right down within 20% of that low, that's about a 50% move. So that's, 3%, something like that right here. Here's a break. So one of the things I also want to say about patterns is they have time frames. So if I had the time to plot the pivots on each of these charts for the 3 time frames that we're monitoring, you would see that there's some that span about 8 bars, like the pivots are 8 bars across to the lows, like 8 bars, 8 bars, 8 bars. Then you have 16, 16 and 32. Those are the short, medium, and long-term pivots that we look for in the software. And right now I'm showing all of them. So you can just show the short term or just the medium term or just the long term. But again, that's part of that control. Right now we're just looking at everything it wants to throw at me and not being that selective. So I can just show you anything I see. So nice reversal there off that support level. And this one was good, breaking that resistance, but it kind of got waffled around. So if that's happening to you, you want to get out. If you go back through that level again, you want to go and get out there. That's a stop that you would set because it's not going to fall through. So, but pretty easy to see where those are. Beautiful support reversal right there. And again, you bring up this chart, you see it, you see the signal right on the right edge right there. You go, yeah, there's really good support to the left of that. That's a good opportunity. And there's volume things you can look at too that we're going to talk about in a minute. Okay, go back to good old Apple. And I'll delete that support line. And let's go to number 3. This is one of my favorite patterns, and the software is really good at this one. This is that kind of the cup form, so you can have a handle. These examples don't, but typically, if you see that, a very smooth change in supply and demand on the stock, you can draw a trend line across the top of those peaks right there. And this is the first pattern that we're going to talk about, a kind of a target. So from the previous high, if you get about 50% of the way, that's a good place to look at taking profits, because that's typically where they get to. They can go past that and rally on past that, but that's a really good place to look for. So the ones underneath are called rounded bottoms or saucers. The ones that go the other way, like inverted, I don't have an example in this picture, but those are called rounded tops. And the same thing applies. In fact, the rounded tops are really nicer because if people start getting afraid and they want to sell when they see that happening, and it creates more movement. Fear always creates more movement than well, except last week, than buying. So they're very, very effective. But this is a good fear pattern. So okay, and it is very reliable. Let's go back over to Metastock. Bring up Mr. Fulgent once again. Show it to me. Thank you. And he's right there. And we're going to go and turn off support resistance and turn on the saucers. They're down here. Okay. All right. Okay. Now just look at this chart. How many of these signals would you not trade? Seriously. And again, these are all happening on the right edge. I mean, it sees that rolling over right there, and it goes, okay, in the short-term time frame, you've got a saucer pattern. It sees another one right there. We've got one there too. We've got one here. We've got one here. There's an upside one. There's some nice upside ones there. I mean, they're just golden. These things are, so you probably guess this is one of the three I really think are great. And all of this, there's just no hindsight in this at all. It's all on the right edge is what it does. But that pattern right there is killer. Whether you're looking for it yourself in charts, and it's just that slow. This is a beautiful one right here. Let me zoom in on it so you can see it better. If I can find it here. I get used to these glasses here. All right, there you go. So, it thought we were going to have a consolidation, which is a bullish pattern, but it just didn't do it, and it turned around. So it sees that curvature, and it says, well, that looks like, that's the right kind of thing for a saucer pattern. It's not real pretty. There's a pretty one, but it didn't go as far. There's a pretty one. So I wouldn't say just trade the pretty ones. Anything that's a nice smooth reversal the other way is a good candidate, and you can put a stop, right at the start of the pattern to get out. Because if it goes back the other way, it's a consolidation. It's not a saucer anymore. And I don't actually see. Here's a failed one right here. See, I'm just trying to find a failed patch. This one is rolling over, and at that open, it's not right. It's not going to follow through. The market likes buying it right here. So, but it was good for a couple of days of down, just not continuous like the others over here. Isn't that beautiful? I just love that thing. All right. So you can tell we're kind of getting to the better and better ones as we go along here. So I hope you're getting as excited as I am, even though I've shown this many, many times. Okay, so you go back to our little pictures here. And, okay, so Fibonacci retracements. Again, an amazing pattern, works really well. We look for this in all kinds of scans and everything that we do. But it's basically these numbers, 38%, 50%, 62% retracement have been observed to be psychological turning points. They just are. And it's just something about the human brain. When you see a turn near one of those levels, people just go, oh, that's going down. So why does it happen? We just know it does. That's the thing about technical analysis. You can't really tell people, well, that's because earnings are up, or something. It's the market is reacting to the stock, and there's buyers and sellers interacting, and what they do determines what happens, and then you can trade off that. So there are other Fibonacci levels that people trade. I think 12% is one of them. I think there's an 80% level, but these are the main ones. These are the ones that you'll always see in books about it, and they are extremely powerful. So let's go ahead and look at that for a minute here. All right. I hate to take off these saucers, but we're going to do it. All right, here we go. Bullish comes up, go back into patterns, and turn off the saucers. Where are the fibs? Right there. Okay. Put that down and refresh. And I mean, what's not to like? They don't happen that often, but here's I think that's a 62%. So that's the perfect segue for me to talk about the expert, because we do have something in here that talks about these patterns. And so let me go ahead and view it here. Here we go. And it's very simple. It just shows the same pictures that you saw. So let's look at this one right here. Let me click next to it, right there. So that's a Fibonacci retracement. And it tells you, the same thing that's in my slides, that the primary ones are 38%, 50%, 62. It doesn't tell you which one it is. It just knows that it is one. And of course, that says fib right there. So it doesn't really, you can see it. But that's 50% down to right there. And it's a great place to buy. Here's one. This one looks like maybe a 62. And let's go and do a couple more charts here. We're on Amgen. Let's go back to Apple. And so there's a failed one. Yeah, so these got faked out. But so again, you want to see that follow through. It's saying there is the retracement here based on prior high and low is right there, but it doesn't follow through. So it's very easy to tell, like the next day or a couple days, it's not going to reverse like that one. And we're going to do one more to the right here from Amgen, just to get more examples of it. And yeah, so you've got, this one here, this one here, this one here, these two here. This is a little early, but it was okay. So again, the value of this is it's going to show you where they are. And if you see, that reversal happening, that's great. Great place, a very low risk trade at that point. Okay, let's go back now to this. And we got a couple more here, 3 more, and we're done. Okay, so the next one is price gaps. Also, big deal in charts. There's basically 3 kinds. So if you've been going up or down for a while, and you make the turn, and you start going in the other direction, that's what you call a breakaway gap, because it was going, and it went boom, broke away from that high or the low here. So it was before this, it was going down, and then it breaks away to the other side. If it happens at the end of the move, before the turn, like you're going down like this in a big gap, then you kind of start to turn a little bit. That's what we call an exhaustion gap. These are great because it means everyone who wanted to sell that stock just did. And there's usually a lot of volume associated with this, and so there's no more sellers. They all did what they did their thing. They sold it. So you have a lot of buyers and no sellers. What happens? And so that's pretty easy to explain, that one. The one that's hard to explain is this one, the measured gap. This is one of 3 measured patterns we're going to talk about, so-called. And the measured gap is a gap that occurs in the middle of a move. So you're going along here and you get a gap out of nowhere in the same direction. These things are amazing because what they do, you have to let it go a little bit because it could be one of these, right? It could be like I'm at the end of a move and it turns around. So you got to give it a little space. But, once you do, then, you can expect the price to go twice the distance. So that's what the measured means. So from here to here, go twice the distance, and that's very likely where it's going. We see this all the time in charts, all the time. Happens tons of times. So let's go and look at some examples. And let's see here. Get my thing back. Okay. All right, go back into patterns, and we're going to turn off fibs and turn on gaps. Okay. So because of the measured gap phenomenon, we just show where the gaps are happening, and then you have to look at the chart and determine, what is it, and is it tradable? So if you're going, this was a good breakaway gap here. This was a good measured gap. I don't know if you can see that the gap is right there in the center of that move, and then it continues twice the distance. So I can find another one here. Yeah, let's see. So American Express isn't really great. Let me go back to. Okay, so here's like a breakaway gap here, a measured gap here, a nice measured gap here because we went from this low up to this high up here. So these are okay. I'm still not seeing a lot of really good examples in this time period. Let me go forward. One more to a chart we haven't seen yet, Boeing. And so there's a measured gap. Okay. Yeah. So this, on these patterns and these charts right now, so it's been a while since I've gone to market with all these patterns in Metastock like this. These will benefit from the accuracy tool that we have that will only select the most accurate patterns, and I'll show you that in a minute. But its job is to show you where the gaps are, and you look at the chart and say, okay, it's probably this. So a little more work to it, but still just knowing, and I wish I could find a really great example, because even looking at these visually, so this one right here is going straight up, big gap down right there. That's a great breakaway gap. This one up to here, right out of the middle of nowhere, boom, it gaps up. That's a good measured gap. And it goes actually past twice the distance. Here's a really good breakaway gap here. Here's a pretty good breakaway gap here. Here's an exhaustion gap. So we're going up, big gap, and then it turns around. That means you're probably at the end of that move. So gaps to the upside at the end of a move are actually reversal patterns. Okay. All right. I'm going to go back to Apple here. So get a little more work on gaps. You have to think about what's happening. What is, are you near a low? Are you near a high? Here's that nice breakaway gap. So that's really important that you evaluate it and then see what happens right after the gap occurs. Okay. Next, two more. This is my favorite pattern. I really like saucers. This is close second. Okay. This thing, I think I actually invented part of this because I didn't see it anywhere in literature. I just observed it and then started writing about it. But it's the volume climax and volume trend. And we all look at volume. I think everybody does. When you see a breakout or something, you want to see how much participation there is, how much imbalance there was by looking at how far it broke out and how much volume is coming into that move. So that's great. What this is it's either a reversal or a trending pattern. So if a market is going straight down pretty hard and the volume is rising to meet it because more and more sellers are coming in, more and more, and then the buying and selling kind of stops and the chart starts going up. So the sellers have beat themselves to death. They're done. And now the buyers are, coming in over here. It just takes almost no volume to move that chart up because an imbalance of buyers and sellers equals chart movement, and the sellers are done. So you can have them from to the upside and to the downside. So you have the little hat formation here. It's like right there. It starts to back off on the volume. This is turning around. That's your first opportunity. The first bar it does that. After a couple of bars it's doing it, that's a really low risk trade. You can set your stop right at that pivot, and it's great. Now, what if price is screaming down, you get this formation, but it keeps going down? That's what I call a volume trend, and that is also a measured move pattern. Because if it does keep going down, that's usually about halfway to the bottom or to the top. So from here, this thing would go, I would expect it to go, it got to here, it's still going up, volume backs off, probably up to right there is where I would expect it. And I put a profit target there. Let's go look at the software and check it out. These are pretty cool patterns, and I hope we get some good examples here. Let me see. All right. You guys are old hat at this by now. Just bring up Fulgent. And of course, you're not going to be doing this if you're using it. You'll set the ones on that you want. And here we go. So this is volume climax and trend. Yep. And we'll refresh and see what we got. And again, it's going to show every place where that's happening. So, and so you have, okay. So we just go through a couple of these. This, if you look, if I zoom in a little bit more here, I'm going to move the chart over so you can see it better. So you can see that these happen at reversal points. So you got the volume coming up here, the volume backs off, price moves, and there it goes. Here was a very nice one that followed through well. So some of these that are happening in the middle, this is right in the middle of that move, goes up, you get the volume spike. Let me see, let me get the cursor on here. You can kind of see where that occurs. So you see the volumes going up and then it backs off, the price keeps going. Now there's a down arrow there, but it's showing the pattern. So it's expecting a reversal is the default. But the fact that you had all that volume coming in right there and the chart kept going means it's got a lot of juice left in it. So this one, on the other hand, straight down, look at the volume coming up here, the volume backs off, and we go back up. So they happen pretty often. Let's do a couple more charts just to show that. See what we got for Amgen here. Yep. So that's a really good example right there. Coming down, turns around, very big increase in volume. Chart goes up, and then you have the ones in the middle of the move, like here. Here was a little early, and that's a very small pattern. So, so again, we have short-term, medium-term, long-term. The longer-term patterns are going to be larger in size. The volume will be the volume pattern will be larger, but you can see again, this is a volume trend. So you got volume down. It's looking for. It doesn't know, so it doesn't know if the chart's going to reverse. All you have is the right edge, right? You can't predict the next couple bars if they're not there. So the pattern will fire, says you've got that volume climax comes in, and it just looks for the slightest movement of price in the other direction, but it keeps going. So you know it's a volume trend pattern. We'll go for one more. There are three here, American Express. So beautiful. Look at that. You got the gap going down right at that low. If I get the cursor again and just look at where it's happening, that is a really pretty one right there. Straight up, the volume backs off right there at 2 bars, and it's going up. The same here. And so the definition of the pattern internally is any increase in volume followed by a decrease where price is going down and reverses any. Even just a teeny bit, it'll fire the arrow, the pattern. And then there's a nice one there that fired. So these are early. That's really a volume trend pattern because the price went halfway up. Okay. This is like an exhaustion gap because of that big gap right there. All right. This off. Let's go back to our PowerPoint. We got one more to talk about. Yep. Okay, this is also a really great pattern, and it's consolidations. If you look at longer term charts like weekly charts, you'll see more of these than in a daily chart, but they do happen, of course, daily. It's essentially any sideways movement. It can be sideways to down, so they call a flag, or a rectangle consolidation, a triangle consolidation. But you have a battle between buyers and sellers in a range, is all it is. And when you break through one side of it, up or down, that's the side that won. So you trade from in that direction. And the beautiful thing about this pattern, this is our third measured move pattern. So we had gap, volume, climax / trend, and then we have this one. So when you have a nicely formed consolidation and you break through, where it's going is probably this distance. So up to there, up to C. And it doesn't matter which direction. It's just, from here, this is where the pivot ahead of it. And how do you find that pivot? You actually go back in the chart about the same distance as this. So it's like right there, goes up. And so the idea is it will go double the distance. So again, a measured move pattern. We can go ahead and bring up the software and look at this one. All right. Okay. And all right. Consolidations right here. Okay. All right. And so this is looking for any sideways movement. So it's not real picky about it. It just says if you have it, it's gonna show it. So here we went sideways and broke out, sideways a little bit and broke out. And then you have the reversal patterns also. But it really is a very good pattern, similar to saucers in efficacy, but it's great. Okay, so we're going to do one more. I see we're getting close to our hour here. So, but you can see the reverse consolidations are also very powerful. So we plot those as well. Consolidation to the upside. And so you can see those throughout the chart here. It's going to show them to you. Okay, so I had said early, let me go back to here real quick and just talk about the software now for a minute, a couple minutes. So you've been seeing the chart with all these things marked in it, and we have the advice. If you click near any arrow, it'll talk about what that pattern is, and then here's how you turn them on. So there's other things you can do though, and so we're going to look at right now the strength rating, because actually there's a database with millions of records that we've captured that looks for things like the angle of a trend line, how big the gap was. Like there's all like 60 or 70 different measurements that we take all these patterns, and we use that to create a database that we can tell then which ones are likely to be the most profitable or the most accurate. So show that really quickly here. Yep. Let me go ahead and I'm going to go back into this, and don't get scared. I'll enable all these things, and it's pretty wild, psychedelic looking because there's so many. There you go. That's all of them. Okay, so now we go back into Fulgent. We don't really want all of them. Let's say you start specializing, and you really like saucers. you really like the consolidation or the volume climax. So what you can do is you can pick the ones that you want to trade over here. And here's the long-term, medium-term, and short-term, those different sizes of patterns, longs and shorts. What I want to do is close this and go back to the main interface and say, just give me the 75% of the database range. Doesn't mean they're 75% accurate, but they're very, very good. Let's go ahead and close that. So most people will probably set it here, maybe 70 if you want to see more patterns. But if I do this, it's going to take away quite a few of those. And, so it's really trying to find the ones according to the database that have the most potential to move. All right, so break here, saucer down, trend line reversal, Fibonacci saucer, support resistance break, a saucer down, trend line reversal up. That was a false signal, saucer up. And I can do it again, do it one more time. We can just keep doing that. If you make it like 90, I found it's really sensitive, but the next one is pretty good if I can get to it. There we go. Yeah, so you can go 75 or 80, and 80 wipes out a lot of them. To only show, again, this is just a database that we created that's held up for a very long time, and it's really quite good. So if that's about the number of patterns you want to see and you want to see all of them, that's great. If you want to turn some off, you can, but that's quite a bit of control over what you actually see in the market. And then there's the short, medium, long term. So just do that really quickly. Let's see, here we go. So I go into patterns again. We've got these nice little convenient things down here. So let's look at all of the short-term guys. So let's turn off medium, turn off long, just short-term. And okay, with that rating where it is, constrained, it'll show me only the really short-term patterns, the ones that will go like 4 or 5 bars, right? Boom, boom. So very, very short-term in nature right there. And people that want to trade over like a week, they'll probably want to use, focus on more of the short-term. Okay, so you can play with those controls quite a bit to get exactly what you want out of it. And it's pretty fun. Wish you had time to see more charts, but it's okay. So I'm going to go back to like 70 here and make that my default. We get a few more showing up. It's a good selection. And to go back to Apple here. Okay, so the last thing, I've only got a couple more things to tell you here, and we're done. Chart patterns. First off, I won't have time to show this, but we have explorers for all the patterns. So what you can do, just like you've used the Explorer for anything else, you say, find me all the patterns that you see on the right edge. And it not only will tell you where they're firing, it'll tell you how many bars ago they fired. We have a thing called in trade. So a saucer pattern, let's say, or a consolidation, or hey, a gap that fired a couple bars ago, you can see where the chart's going after that gap. You just look for all the ones, you can't see it here very well, but there's a bars column. And so you look for the ones that are 2 or 3, and then you double click and you'll get the symbol that has that pattern a couple bars ago. And that's how you know, okay, the psychology is there, it actually did it. It went in that direction. And so that's really, really powerful. And we already went through all the configurability, but so again, don't have time to show that. But if you're prospecting, one thing that you'll find, and we got 2 minutes. Geoff, I'm conflicted. Well, what I want to show is how fast it is, because you can scan the S&P 500 in just like a minute, and it'll do all the patterns on the S&P 500 and show you, which ones are firing on the right edge. So
you're doing great, yeah. We did start you a little bit late, so I'm not going to take too mad at you. I have a ton of questions, though.
Oh, good. Let me show the last thing, and then we'll do the questions. Okay. So this is just the 3 that I really like are the breaks, support, resistance, the saucers, of course, and volume climax are my 3 favorite. Whether you're eyeballing charts or using something like this, they're really, really very, very accurate. And the other thing is you want to trade the ones that are really obvious. This chart's too volatile. This one has very nice behavior, so it's much easier to trade, right? Not so choppy. And finally, I know you have other things that you've acquired from Metastock, other plugins with signals. these patterns are fantastic for confirming whatever the signal is. I just put something on here, RSI 14 reversal signals, but you will, if you turn on, let's say it's strength 7 or 8, and run that, you just look up from your signal and turn this on, the advisor, or turn on the template, sorry, for chart patterns, and you'll see them. You'll say, oh yeah, well, your system, whatever it is from whoever, is confirmed by chart pattern engine. All right. And that is really what I have. So there's that book. Again, you can get it if you want to get it on our website.
Let me go ahead and push that out too as well. And we'll talk about some questions because there are tons of them. I really like the way you implemented this in Metastock by the way too. Couple questions. I'm going to kind of boil them together. Frank wants to know, is there a time frame that you advise? And Dennis wants to know if it's good in any time frame.
It is good in any time frame because the psychology works in any time frame. It's actually very interesting in weekly. It's really good, but also real time. So these patterns will find real time patterns. What I find is consolidations are great in real time. We have a rage break, but it's, yeah. And of course, any instrument, it's just looking for that basic market psychology of those things indicate that the market thinks something and is acting on it. And that's what you're trading from.
All right, cool. Marius wants to know, what do the color changes indicate? Does that indicate the start of the pattern? And I think he nailed it.
It does. That's very good. It actually indicates the bars that the pattern is based on. So like this green right here, it's like this softer pattern right there. Let's say SRR. The green is what it's looking at to create that pattern. So now in the case of this, it really, it's forming a pivot right there. It's looking back this way, but so consolidation, purple, it's all those bars. So that's what the color coding is for, to show you where it is, like the bars that were used.
And David said, what can you do with the hit rate column? And that's the last question. So thanks for the question, Dave.
The hit rate column, let me see.
I think what he was talking was the, what is the exact terminology? Yeah, the hit rate.
Okay, well, that's AI.
That's more for the AI product.
It's
also, you know, AI is kind of a very popular topic these days. Another product Ed does is Fulgent AI, which we don't have time to talk about today. I was going to try and tease you and be like, just give us an overview. But if you are interested in AI, artificial intelligence, all that kind of stuff, Ed has a great platform. And we can send you some videos about that if you get in touch with us.
Videos. So the chart patterns, just to answer the actual question, is that we don't, it isn't a system. We're not measuring how many of them were accurate or made money. It's idea of it is to show you where they're happening, which you don't have time to do every day. You don't have time to look across the whole market and find the saucer patterns. You know, they're kicking butt. So this will find them. And that's what it does.
Awesome. Okay. Ed, thank you very much. One of the things that I just think is cool is because chart patterns are something everybody looks at.
Yeah.
But due to their more visual nature, they can be a lot harder to find. And so the fact that you've put them all together and done such a great job, and there's so many patterns there. Great job. Great work.
Thanks, sir.
We're going to talk a little bit more about it. Thank you for coming. Thanks for all of the work you've done with us. I'll talk to you soon.
All right, sir. Thank you. Thanks, Geoff.
Thanks. All right. Very cool. Let me go ahead and do this. We're going to make a few changes here. Okay. And then I did want to talk a little bit, because there are tons of stuff that's included, and there are a lot of things that I kind of want to highlight. And then we're going to move on. But right here, here's just a picture. All of the patterns are identified for you. I love how he's actually talks about exactly what he's looking for and gives you a good example. Ed does a really good job with the commentaries and just drawing them out and being able to find them and scan for them and have them listed for you and have an ideal price pattern. It's such a great not only learning tool, but trading tool and finding tool and all that kind of good stuff. So for the chart pattern engine, there's basically 13 total scans that are available. that expert advisor, a very, very comprehensive manual. And Ed and I sat down and we did like a 64-minute boot camp where we kind of talked about here's how you do the patterns, here's how you do the expert advisor, here's how you can we really kind of got into all of the into the woods in terms of showing how to do this. And the thing I like about kind of automating chart patterns is because they can be somewhat objective. And if you look at something hard enough, you'll find a pattern, right? But to be able to go in and kind of have that all drawn out for you and shown, yeah, absolutely. It does such a really good job. So here's a list of the patterns that it's going to identify you. Consolidations, cup and handles, fib retracements, gaps, head and shoulders, saucers, support and resistance, breaks and reversals, tops and bottoms, trendline breaks, trendline reversals, the volume climaxes. What we're doing here at the event today, it's normally $14.95 for the chart pattern engine. Here at the webinar, as part of the conference special, what we're going to do is actually give it to you as a $9.97 price. And we're going to back it like we do with the rest of our products. All of our one-time products have a 30-day money-back guarantee. So if you don't have a copy of Metastock, we'll include a trial for you. You can also do the extended trial where you can try it out for 3 months. If you decide that this isn't helpful for you after you kind of go through the manual, learn how to use it, go through the training, really get comfortable. If it's not helping you find better trades, your risk reward is great. You can just return it. We'll give you a full refund. But you're going to like it. And that's why we can back it with a money back guarantee. We want it to work well for you. So to order, you can give us a call, 800-882-3040. You can visit us online at metastock.com/sales-chat. We'll be happy to send you charts, answer questions, whatever it might be. And then you can also go to metastock.com/promo. And I'll just put a couple of those in the chat. So there you go. Ed, thank you again for all of the great work over the years, the AI engine, the chart pattern engine. As soon as we started to talk about chart patterns, I really wanted to make this available in Metastock because it is so cool. So $9.97, one-time cost. You don't have to pay for it over and over and over again. You own it. 30-day money-back guarantee. If you don't like it, if it's not helpful for you, for any reason, we'll give you a refund. 800-882-3040. Metastock.com/sales-chat. Metastock.com/conf-promo. Of course, we're Metastock. We're going to talk a lot about Metastock. Before, I know we're a little bit behind. Not too bad. It does, I feel. Thank you for the question. You can use this on any data set, any time frame, anything like that. So thank you for that question. And if I missed a question, I don't think we did. If we missed a question, just chat in with us. We'd love to answer it for you. It is prize time. So let me go ahead. What I'm going to say right now is if you're paying attention, I want you to put a number down. Put a number down in the chat. The number can be anywhere between 1 and 10,656. The number you give me is going to correspond with a number I've got on a spreadsheet. It's going to lock into somebody that's registered already, and they're going to win a prize. What prize are they going to win? Well, I'm glad you asked. Let me tell you. Let me see. Okay. If you guys were here yesterday, thank you. You saw Steve Primo talk. Steve Primo talked about his strategy number 4. It's a methodology that comes with Metastock. It comes with 12 courses. They're available to you as soon as we set you up for it. We're going to give away Steve Primo strategy number 4 for Metastock, a value of about $500, $599, I think is the value on that. And we're going to give away 2 copies right now. So I see a lot of numbers. Thank you, Goran, Marius, all of you guys. Let me kind of go scroll up a little bit. 3759 is the first number in you go to webinar. So let me go ahead and tell you who that matches up to. 3759. And that would be John or Shafiq W in Singapore. Shafiq, congratulations. We'll go ahead and get that set up for you and get that to you. So thank you for the winning number. Appreciate that. Out of the YouTube chat, we've got Maverick coming in strong with a 717. Actually, before I do that, let me write down that number. What happens is if I forget to write these down, I have to go back and watch the video. So I don't like to do that. Let me go ahead and look at the next winner real quick. It would be 717. Thanks, Maverick, for the number there. And this would be a Ruslan Eye out of Malaysia. So Singapore and Malaysia showing up for the winners. I doubt you guys are in the audience, but if you are, say hi. Congratulations for winning. You probably are watching the replay because it's probably, well, actually it's 10 at night. I mean, you might be here live. If you're here live, say hi. You just won a prize. So before we go on to our next speaker, I do want to say thank you to all of our sponsors today. But we'll highlight Stocks and Commodities real quick. Stocks and Commodities is a great magazine. They've supported us for a number of years, actually, and they do a really good job. And I remember like 10 years ago, we said, hey, I want to do this all-day conference, and come and do it. We want you to help us with it. And they've been such great partners ever since we started these multiple session events 10 or 11 years ago. And we certainly appreciate them. So Stocks and Commodities, you can find out more about them at traders.com. And but we really appreciate their support. It's a great magazine too. You should get a copy. So our next presenter, we have a little bit of a last minute schedule change. We can blame the Comcast Corporation for. Martha Stokes won't be able to speak today. She doesn't have internet. And she doesn't know when she's going to get it back either. So we're going to work on rescheduling her. I'll get the schedule updated as soon as we kind of figure out where we can put her. It's probably going to be on a different day. But Scott Brown is going to come in and talk to us. Scott has been well, he's been part of Metastock for almost as long as I have. He's a great guy. I absolutely love him. He is now the president and owner of Metastock. Actually, he's the owner of Metastock. He's going to talk about the forecaster today. Scott, I'm going to go ahead and read the legal disclaimer for you too, except for I don't have it here. So I'm going to kind of jump to that. My slides are a little bit in disarray, but today's presentation is designed to instruct you on using Metastock and the company's software add-ons. It's not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading, and Metastock shall have no liability for any investment decisions based on the use of the software or any trading strategies or any information provided in connection with the company. Scott, are you ready to go?
Oh, let's go.
All right. You look great. Even better than this morning when I saw you.
You look 10 times better than I do, Geoff.
All right. Let me go ahead and make you the presenter.
Okay.
And then I'll make sure I can see your screen and everything's all set up.
Okay.
If we have any issues, we'll run in there. Perfect. Looks great.
Okay. Thanks, buddy.
I'm out of the way. It's you.
Okay. First off, huge thank you to Geoff Gibby for doing this. I mean, if everybody was here, they'd be applauding him and absolutely. Can you imagine trying to, put together a conference with so many presenters? I mean, just like what happened, poor Martha can't get her internet, and Geoff will figure all this out and does all the time. But really what you guys and what I'm thankful for is this massive organization that he's done for the conference. It gives us all so much a platform that we can hear from some of the best presenters out there, discuss different trading strategies, and that's a great thing. So Geoff, great job as always. You absolutely crushed it, and thank you. So my presentation today is on the forecaster, and I love presenting this. This is one of the best things out there. This is something that we have a patent to. That's a side note. Trying to get a patent here in the USA, that can be a really long and tough road. But we have it's pending, and it's really cool, the technology that I'm going to go through with you. And before I start this out, I want to give you some background on this. So the Metastock forecaster happened years and years ago. About 10 years ago, I bought the company from Reuters, Thomson Reuters at the time. And at the time, we had a programmer that had worked for Metastock for over, now he's worked for Metastock well over 30 years. He created back testing inside of Metastock, and we've had that for a long time. One of the first people ever to program back testing inside of software for anywhere and for anyone in the world. And this gentleman, he had stopped working with Metastock, and he had gone on his own. And he had created this trading idea and strategy of the Metastock forecaster. And he showed it to me, and it was unbelievably impressive. And I was so excited to get Metastock. I asked him to come back and work for us. And we were able to get the forecaster inside of Metastock. And this programmer individually also came back to work for us. He's been here the whole time that I've owned Metastock. And so I'm super excited to go into this with you. And really his ideas were, look, technical analysis emphasizes the past, right? And we want something that's going to emphasize the future. And so that's really how he came up with the forecaster. And how can we show that? And what we decided to do, or what he decided to do, was build it into these probability clouds. And we're going to dive into those and really get some information on this. And I know that this is going to be valuable to you. If you're a current Metastock user, you have to listen up, because most of you out there don't understand the intricacies of the forecaster and how it can help you. So let's go ahead and dive into it. Let's go to my next slide. There we go. So Metastock, just kind of some background, and this is really cool. Geoff touched on technical analysis of Stocks and Commodities magazine, and we've had a great relationship with them for many, many years. And what they do is each year they do the Reader's Choice Awards, and the readers get a vote on what they think is the best software out there. And for the last 30 straight years, we've won the best analysis software from the $200 to $499 category. And so we want to thank all the users out there. And I know they're help sponsoring this event. Take advantage. This is their magazine is really great and has so many good ideas in it as well. So what does the Metastock forecaster do? Well, it's going to analyze the price action after past events to determine the probabilities of future price action. It answers the question, really, where are prices most likely to be in the future after an event occurs? And an event is much like an indicator or a trading system. It can include things like crossovers, divergences, overbought, oversold, breakouts, or candle patterns. The Metastock forecaster, what can you do with it? You can draw your own patterns, and I'll show you how to do that. Really cool technology there. You can copy patterns directly from the chart. So if you're an individual that loves to trade patterns and you see the perfect trade setup right on your chart, you can actually highlight those bars, and we'll create all the formula language behind it so that you can see the clouds, the probability clouds, right on your chart. You can rank recognized events, and we're always including new event recognizers. So we have over 70 different events inside the Metastock forecaster, and anyone that is using Metastock 18 will have access to everything that I'm showing you. So make sure that you have Metastock 18, and if you don't, we can get you upgraded. But everything I'm doing today is on version 18 of Metastock, and that's both for Metastock daily charts and Metastock in real time. So let's dive into this and we'll kind of look at one. Right now we're looking at a basic chart of Rio, okay, Rio Tinto. And you're seeing these little yellow triangles, okay? And these are specifying every time an event happens on your chart. And when these events occur, for example, this one right here is a moving average 50 cross down. What you can do is actually click right on the triangle and a cloud will appear. And you can do these clouds based on 30 days, 90 days, or 180 days. And then this cloud will get drawn out. And then what you can do is this cloud, there's a probability scale, okay? 0 being very dark, and then the lighter the color of the cloud, the higher the probability that that price could go through it. Now, let me be very clear here. There's no guarantees on this, and nor is Metastock saying every time that you click on that event marker and it goes into the future, it's going to be correct. And so we'll show you some of these different ways to use it. Now, we were looking right here at the price, volume, and event markers. Now, if you click here on the performance tab here, every time it's getting a new bar, this cloud is evolving. So this cloud right here, oh, excuse me, I'm sorry. For example, this cloud, when we clicked on the event marker, right here, it never changes. It's a static image there. When we go to this one, it's going to change every single time we get a new event marker because it's learning. It's learning more information every time it's getting more data. So right here is the CCI overbought event, and this one is using Adobe Systems. Okay, so if you this is historical here, and if you click on that, it goes into the future, and it'll show you that. And this one right here, it shows you, hey, look how it performed, with that specific event marker of the CCI overbought. So another thing you can do, and we can show you kind of how to forecast, is when you're in the software. And let's do that. Let's go into the software. So you have Metastock 18. This is what it looks like right here. And we have our Power Console up here. From the Power Console, we can do a number of different things. We can come up in here and bring a chart. We can look at different quotes. We can look at explorations. We can do back testing. We can do forecasting. And we can do the option scope as well. Okay, so you can look at different options. If I want to pull up a chart in the forecaster, I need to come in here and say, for example, let's look at IBM. So we come in here and we say IBM, and we can come over here and look at the interval. If we want to look at the forecaster on an hourly or a 30-minute, weekly, monthly, quarterly, or hourly or yearly, you can do that. Or we can say daily. And what we're going to do is look at an IBM daily chart. So if we click on Start Forecaster, it will now bring up IBM right here. And what it's doing is sorting out all the different event recognizers sorted by right now the highest profit potential. We can actually sort these by highest profit potential, highest profit potential long only, highest profit potential short only, most accurate current break or forecast, most pronounced current breakout, the most distinct forecast cloud, most recent event, or the most events you can do. So on here, let's go ahead and let's just look at the most recent events. We'll be looking at other ones as well. So here's Geoff Gibby's indicator I created for fun, and I'll show you how to create some here in the future. Here's, for example, an RMO buy. If you're into that, we have the candlestick raising window. And what I want you to get used to looking at, you see all of these yellow event markers. Again, every time this candlestick rising window occurred, it will display it right on your chart. Now, we can come over here and look at charts on 30, 90, or 180 bars. And we're going to start with 30 bars, okay? Man, IBM is just all over the place, right? It's oscillating so much. But if you come in here and you say, okay, I'm going to click on July 27th, the cloud that was available then. So I click on that cloud. Here's a 30 bar cloud. Again, the brighter the color, the higher the probability it is for this cloud. And you can see right here, it's a very high probability, and the cloud actually went through it, and you can see that it trailed up. You can come on here and say, well, let's look at a 90 bar, cloud. Wow, look at that one. That's pretty cool. So the darker it is, the higher chance of probability it is. I literally was just bringing up IBM and showing this. So, why is this super valuable to you? Back on July 27th, when we did this, you can see the price here. And if we were to say 3 months from now, we think that the price is going to be right here in this cloud. Boy, that's a huge advantage for someone like an options trader, right? You might be able to get options a bit cheaper, 90 days out, and have that opportunity right there, okay? So let's look at a 180 bar candle or cloud, and we'll see how that looks. So you see this, and it says, hey, look, even from right now today, we're saying, about 76 future bars ahead of us. We think it's going to be right in here. Again, there's no guarantees. This doesn't mean that IBM is going to cut, right through that cloud. Now, down here, we have a statistical report that really someone that's into technical analysis is really going to enjoy, and it's really going to like looking at. It says, hey, look, over the last 5 years, basically, this event has occurred 38 times. On average, it occurs about every 32 bars, okay? The shortest gap between the events is 1, the longest is 226 bars. And we're looking at daily bars. Statistically, 7 bars after the event occurs, and with a probability of 95%, the closing price appears to be about 0.33% higher, with a standard deviation of 0.0379. The statistical margin of error is approximately 16%. And it goes down, and it will do that for 7, 14, 30 bars, 60 bars, 90 bars, 180 bars as well, okay? And what you're looking at here, and what I found to be a cloud that helps to make it much more accurate, is you need at least 5 of these event markers to draw a cloud. If there's not at least those 5 event markers, it doesn't want to draw a cloud because it needs data. And the more times your event marker has occurred, then obviously, what I have found to be better results on that cloud being created and being a little bit more accurate. Again, this is a static image. So if we come in here and we say, look, where's this bar going into the future? You can click on this one right here. This one is, again, a static image. But you got to remember, every day we're getting a new bar, right? As you see there. If we click on the forecast cloud tab up here, you can see that every single time we're getting, new bars, this cloud changes. And it's going to show us kind of, what's the most recent, what do we think of right now? And again, it says, look, this is based on past performance looking into future price bars, okay? So that's a little bit right there of the IBM that we looked at. Now, I want to show you all the recognizers. If you have Metastock 18, here are all those event recognizers that come with it. Now, I've created some myself that are also in here because I'm using my own personal laptop for this. But you can see there are a lot of different events and systems that you can get into. And right now, every time we bring up a chart, we've enabled them, so it's actually sorting all 70 plus of these onto the chart. So let's go ahead and we'll look at, let's say, Microsoft, for example. Okay, we're going to look at, let's say, the highest profit potential, and let's look at a triple witching event, right? We'll keep that one. And let's start with 30 bars, and we'll see how it goes. Back on March 17th, Microsoft started climbing, okay? And then let's go to a 90 bar cloud. So as you can see right here, it popped right there. But look, you can see that within that 90 bars, it said, look, we feel that looking at the historic events, we feel that the probability is probably around 300. Well, if you see, it was actually above that. So the cloud didn't get it, right there. And then let's look at 180 bars. And so it missed it right here, kind of in that 90 range. But wow, look at that. You see a little bit of purple there. And if you were trading this, that day one, I don't know, let's say 275, and you wanted to come out about 6 months in advance up to 350, you might be able to have gotten some pretty cheap options there, right? And so what this is, again, when I'm looking at which ones I want to look at, I want to find a few. So if I click here on this moving average cross up, I don't like looking at this one. And the reason simple is because when I click on it, there's only been 6 events in 5 years. So the data that it's looking at historically, it doesn't have a great, way. For example, your statistical margin of error rises to 40% right here when you're looking at 7 bars. Okay. When I look at 5 bars or more, it says, hey, look, we have 9 times this event occurs. It drops to 33%. 52 weekly high, it's happened 115 times. And so it's down to 9% margin of error. So it helps to just have so much more of that in there. And you can click on that event marker. Here's 180 bars, and you're going to get some weird looking clouds sometimes. As you can see in the middle, it's pink and purple and a little bit of purple right there at the end. But it's interesting how that cloud splits, right? It says, hey, based on event markers 6 months out there, it could go either way. We feel stronger that it's going to be up here in that range. So, really interesting things that we're looking at, inside this. Let's look at another one here. This is the E-mini that I know a lot of people like to trade. And I'm going to go ahead and look at the most pronounced current breakout. And we're going to look at the CCI oversold. This event has occurred 50 times. And let's go ahead and take a look at this. I mean, it's really oscillated a lot. And, we can just click on some of these bars. And the great thing about this is you can kind of go down and say, okay, see that one right there? That mirrored pretty good. Let's go to the next one. And what this can kind of do is build some confidence. But you got to remember, this is looking at historical data. So if this was to drop off a cliff, as you're looking at this chart historically, it's saying, well, it maybe not has dropped off a cliff. So that cloud, probably would not mirror that. Okay, and you can come in here and say 90 bars. And again, let's look at right here, the probability scale. Remember, if it's yellow, it's a high probability it's going to go through it. If it's a really dark, red in here, there's a nice probability there. A lighter pink, you're looking at about 50%, if it's going to go through that. Now, another one here is Tesla. We're just going to give quite a few examples, and then we're going to go and dive into some other things as well. So here in Tesla, we're looking at the most current or most accurate current forecast. This is a moving average 310 cross up, okay? And we can get in here and we can, look at these. We have 30 bars there. Come back historically. Start, clicking on those. Followed that one pretty good. Which you can see right there. But what we're interested in, obviously, is where is it going to go now, right? So this one right here actually has one kind of close there. And we can say, okay, let's take a look here on the 30 bar. Now look, so this one is going into the future of 30 bars. This one is going to go 90 bars here into the future on Tesla based on the moving average 310 cross up event, okay? Crunching so much data there. And then again, this tab is where we can select the cloud. This one on the forecast cloud is one where every time we're getting a new bar of data, it's recalculating where it thinks that is moving to, okay? Now, something really cool before we go into more here is you can go inside of Metastock. We can go to our exploration. We can come in here and select a forecaster, right? So if we're into the CCI oversold, we can come down here and say, hey, look, we're going to look at the forecaster CCI oversold with the let's look at it with the S&P 500. We'll start that exploration. And what this is doing is scanning basically the S&P 500 to find out if there's anything of these event markers that have occurred. So we'll let it kind of go through this, and I'll grab a drink while that's doing a little bit of screening. And so far, it's rejected 96% of them. And that is something that we want, right? Because every time we wake up in the morning, there's always this feeling of, hey, what am I going to trade? And then, once I'm in a trade, you're always, how do I get out of a trade? So this is one of those ways to find a way to get into a trade if you love the CCI oversold. And we can pull up a chart, and I'll show you how easy the workflow is inside of Metastock 18. Again, if you're a Metastock user, you want to be using the latest version of Metastock, with it is version 18. And at the end, I'll show you how to get, able to upgrade to that version. And for individuals that are prospects or new to this and seeing it for the first time, man, Geoff has put together some great opportunities for individuals to go ahead and try out Metastock. So right here, you can see a list of different ones, that we're going to do. And let's come in here. We're going to say, let's select Citigroup. Let's select Goldman Sachs. And let's open those charts. Okay. So here's both these charts. and you're looking at it and you can say, oh, okay, well, it's great that we have a chart, but anytime you're doing charting in Metastock 18, you can right click on it and go here to the forecaster. And what it will do, it'll just go ahead and launch that right here. And let's go here to our CCI over, I think it was overbought. Let's see what we did there. It was oversold. Okay, wasn't the overbought. And let's do oversold. And you can see the chart right here on Citigroup. And what we're going to do is look at the cloud here. And we'll just go back here in time and kind of look at these on a 30 bar as we get closer to where we are at. That's what I'd recommend when you're doing a bit of research on this. See, you can kind of see, oh, okay, we're into October 6th. How did it perform? How did it perform on October 26th? How's it performing on October 30th? And you can kind of do a little bit of analysis that way. So again, if one of these recognizers you like, you can actually screen for it inside of Metastock, and that will help you, find opportunities based on a watch list that you're looking at. So kind of cool. One of the last ones, let's look at Bitcoin here. Okay. And what I wanted to do on this last one was the most events, right? And here's an indicator I created when I was doing a presentation, and we called it Kelly Clement, right? There's a name for you, and it has it has 170 times this has occurred in the last 5 years. And again, we can just kind of see how that's performing, right? We can click on it. And you can see, oh, hey, right here, kind of missed on it. Let's look at another one. It did pretty well there, called that uptrend there. And then currently, it's saying, oh, actually, let's look at this one right here. This is the most current one, November 2nd. It's saying, hey, look, this is where we think Kelly's indicator's going to on Bitcoin. So I am going to do something super cool that's going to blow your mind away. Again, this is available, Metastock 18. If you're sitting at your computer, how many of you out there love to look at patterns? I guarantee at least, I would think about half of you love to look at patterns. How many of you out there wish you could create your own pattern? I know a lot of you do. So if we come in here to the Recognizer library and click on Draw New Pattern, we can actually create our own pattern. And we can call this Scott's pattern indicator. I can come on here with my mouse and I can draw whatever pattern I want. So if that's the pattern I like, I'm like, oh, that one doesn't look that good. Let's clear it. Let's do a triple or a head and shoulders. You're like, oh, you can invert it and do a reverse head and shoulders. You can reverse the pattern. We can clear that out. If you wanted to do whatever pattern it is. And the great part about this is you can take these little circles and you can actually adjust those to make your pattern a little bit more accurate, just in case your mouse, wasn't the most accurate tool, that you had on there. So what we'll do is we'll create this one. We'll save it. Let's disable all of them. And let's just search based on Scott's pattern indicator right there. And we're going to rescan the selected analysis. And this one is actually on Bitcoin. So we'll see if anything occurred on it. It actually occurred 34 times, my specific one that I created. And then we can get in here and we can see what we think of it. So again, there's a really good look at it. But I want to show you an area where I don't think it's going to perform well, because I want you guys to know kind of strengths and weaknesses of it, right? You're looking historical, and it's like, hey, it stayed still, and then boom, out of nowhere, it shot up. And so right here, let's do a 90-day pattern there. You can see that it missed on that growth right there because it shot so high so quick. But then it kind of recovered a little bit of that. And then I think another place it's going to struggle is when it drops, right? So let's take a look at that. And let's say, right here, we'll select this one. And you can see right there, it does really well, and then it starts to drop, and that's where we miss out, okay? So that was an opportunity to draw your own pattern. Now, something else that I was saying in the intro of my presentation that I think is so cool is if you see your trade setup on your chart, you can absolutely highlight those bars, and we'll create all the formula language behind it and create that pattern for you. Again, only available in this is available in Metastock 18. So let's say these 5-6 bars, and I highlight them, and then it says first off I clicked user defined pattern select, highlighted the bars, and then it says, do you want to capture the selected price formation as a user defined pattern? Yes, I do. So instantly it creates the pattern here. So we'll name this Scott's original pattern. Okay, we'll click OK. It's already drawn and created there. So we'll click Save. And we are going to go to Scott's original, and we are going to rescan the selected analysis. And now it's only scanning Scott's original pattern that we just created. And it occurred 38 times here. And you can kind of get into it and say, okay, let's see how this is performed. That's a 90 bar. Here's another 90 bar. And then again, if you go up into the forecast cloud, every single day we get a new bar. That cloud now updates, okay? So really, great, interesting. I know this is unique. For the Metastock user, you're sitting there going, boy, I did not understand this that well. Hopefully this clarified it. To the new person that doesn't own Metastock or hasn't used the forecaster, you can see how this can become a tool to help you, whether you're trading options or if you're just holding the specific security. And as you saw today, I went through stocks, we went through the E-minis, we went through crypto. We have the data that you need to power this forecaster inside of Metastock 18. So, as I go through it, I always get really excited about presenting this because this is so unique. There is no other software out there that has this, specific, forecast clouds and the forecaster and the ability to create your own that we have. And so this is one of those very unique items that Metastock has that a trader really enjoys and can really take advantage of, right? So let's dive back into the PowerPoint. I know that this was the most unbelievable hour of your life, and we won't get into all. We actually went through all of this. So how much does this cost? If you're a real-time user, and you want to use Metastock 18, everything I did today in real time, and that includes market data and news, that's $265 a month, okay? If you want to do this end of day, it's only $69 a month. And everything I did can be done in both the daily chart version and it can be done in the real-time version right here. Now, Geoff has an amazing offer that we're doing right now. We have a 3-month trial. So if you buy 1 month of either one of those, you get 2 free. So you're going to get 3 months to really try this out. And at such a small price, you're going to get Metastock 18. You're going to get the data region of your choice. So if you're in the US, we'll give you North and South America, right? If you're in Europe, you'll get Europe, Middle East, and Africa. If you're in Asia or Australia, you get the Asia Pacific. We have a white glove installation support. Our support every single month, we send out a survey for people that contacted support that month. And I have never seen the customer satisfaction percent below 90% in the 20 plus years that I've worked here. You can sign up by calling 1-800-882-3040, or here's the sales chat that you can go into. Now, if you already own Metastock, you need to upgrade to version 18. And we have these at really great prices, especially during the conference. So just call up or definitely go into the chat and you can upgrade to our latest version, Metastock 18, and really get everything that we have there. The last thing that we include, which is $99 in itself, is Unleash the Power of Metastock. And that will go over things like how to do scanning and back testing, how to use the expert advisor, how to use forecast, right? And we're going to show you how to use Metastock so much better and so much more. So this right here is really a key to, helping you with Metastock. And so I really appreciate the time. If there are any questions, Geoff, or if someone wants to see something in the forecaster, I'm happy to do that.
Cool. We did have a quick question, and they just wanted, it was a name I can't pronounce because it's in Arabic characters, but out of YouTube, they wanted to know how to get to the forecaster. So if you could show that in the Power Console.
Yes, no problem, Geoff. So we're going to go back into Metastock. And right here, so if you're brand new, you're going to upgrade to Metastock 18, or you're brand new and you're going to get a version of Metastock. Let's close all this down because this is what it's going to look like when you get it. Now what we're going to do is we're going to go up to this P that stands for Power Console. And right here, you can look at a chart, you can look at quotes, explorations, backtesting, forecasting, or option scope. And we're going to select the forecaster right there. And then what we can do is just put in a symbol, and then that symbol, like if you're Microsoft, you can come in here and let's say you want to do it in real time. You can select an hourly one. You can do Start Forecaster, and it will go ahead then and bring up a 60-minute Microsoft chart that's based off of, my original pattern. And you can come in here and say, well, we can enable all of them and rescan all the analyses, and it will go ahead and do that for us.
All right, we have a comment in here that says, this is somebody by the name of Lars.
Oh,
hey Lars.
Lars, this is a shout out. Lars is literally one of my favorite customers of all time. I've worked with Lars for 20 years.
He said, that's interesting. Thank you. So there you go.
No question. Guy.
Just, it's interesting.
Just a comment, huh?
Yeah, he wanted to say hi. Lars, it's good to see you. I didn't even know you were here. Thanks for saying hi, Lars.
Yeah, for sure.
All right.
And Geoff, you're absolutely crushing this. Again, a big thank you. I know I speak. Guys, this is unbelievable. We have over, I mean, we have thousands. I won't give you the exact number, but thousands and thousands and thousands of individuals that are registered for this event. They're watching it through GoToWebinar and also on YouTube. I mean, Geoff, you have created an event that is absolutely amazing. And I know for sure the people that have tuned in, and this is free. Are you kidding me? Great job, Geoff. Great job.
If you keep going, you better stop within about 5 minutes or so. But I'm going to start blushing.
I love it. I love it.
No, it's actually, thank you, Scott. I appreciate that. I'll take it from here.
Okay. Have a great day, everyone. I appreciate you. And
Cool.
Thank you, Geoff.
And it is a great event, but it's great because of you coming. It's because you're here. And we really enjoy having you. All the great speakers that we've got lined up that have agreed to come in and talk. Like, it is a great event. I'm just here to keep it going.
Yeah, but you also organized every speaker. How many speakers are there, Geoff?
I think it's like 46, 47.
That is phenomenal. Wow.
Cool. And thank you for coming. Like, we wouldn't have any speakers if there's nobody listening. So
right.
Thank you for everybody.
Much appreciated.
If you're on the YouTube, make sure to hit like and subscribe. It helps a lot. And we appreciate it.
It does.
So,
you'll get more content like this that you want.
Let me put my headphones back on. All right. Thanks, Scott. The one thing, let me go ahead and kind of take this over. The one thing that I think I like to kind of talk a bit more about is the fact that it's been just rated so highly for so long. So 30 years in a row, it's been rated #1 software. And this is by the readers of Stocks and Commodities magazine. So Scott did a really good job. He went through all the pricing, all of that kind of stuff. But I just kind of want to break it down a little bit. So it's $265 per month for real time. That includes like an institutional quality news service, all the data you need to run it, any news that's coming out, earnings, whatever it might be. All of that's included. If you go with the end of day version, it's going to cost you $69 per month. That's going to include the data that you need. It's going to include that white glove installation support. And it's funny because we had a really, really good comment by, oh my goodness, it just jumped out of my brain, by our last speaker last night that was talking about, I just talked to Lucian that's having some problems. He did such a good job. And it's not uncommon for those guys to get like 100% rating for the whole week. So you get white glove installation support. They're going to help you answer any questions you've got, kind of take you around the program a little bit. You're going to have our Unleash the Power Metastock that's going to help you run it. But just think about it this way. Right now it's November 8th, right? So December, January, February 8th. So if you buy a month today, you're going to be running through the holidays. A lot of times you'll have some downtime where you can really play and do analysis on stocks and that kind of stuff. But you'll be running through the holidays. And if you do the end of day version at $69 a month, which is what it costs here in the US, that's literally going to break down to $23 a month. And I'm not sure how much Starbucks you drink every day, but that's probably one Starbucks based on the inflation. So $23 a month, and you can try it out. 800-882-3040, metastock.com/sales-chat, metastock.com/conf promo. Such a great tool. The forecaster is just another reason. Tomorrow we're going to have Kelly come in and talk about systems analysis and systems design, all that good stuff. If you haven't tried Metastock yet, you should. We want you to kind of try it out. We're going to give you 3 months. We're going to really support you while you're going through that. We want you to be one of those customers that's been with us for decades and decades and decades and reports back in our surveys how well you do with your trading and all that kind of stuff. Because the bottom line is if it doesn't work for you, you're just going to cancel. It's going to be $69. But if it's something that helps you find good trade after good trade after good trade, well, then you're going to keep subscribing. And that's why we've been able to maintain so many subscribers over the years. And if you've been using Metastock for years, thank you for that too. We appreciate it. So metastock.com/sales-chat, metastock.com/conf promo, 800-882-3040. So Lars, it's good to see you. I'm glad you said something. I didn't even know you were in there. So let's go ahead. We'll do a little bit of some things here. We're going to talk about the CMT Association. CMT is a sponsor of the event today. CMT is a very well-respected, well-reputed company. If you're interested in managing money, or you have money managements under assets, or if you're just really interested in some good courses and want to put CMT after your name, you can find out more about the CMT at cmtassociation.org. They do have a content portal. You can see it right here, content.cmtassociation.org. It's prize time, guys. Let's go ahead and do a prize. What I need from you is a number between 1 and 10,656. If you haven't registered and you're watching us on YouTube, make sure you do that, because I'm going to refresh the list after we get Geoff Bysche started. But what I want you to do right now is give me a number. It can be anywhere between 1 and 10,656. I'm going to give away a prize. So what prize might it be? Well, let me pull a prize for you. Start typing. All right, hold on a second. What's next? Okay. All right. So Silas Peters talked yesterday. He did the 3S code method. M tops, W bottoms. That's the pattern that he talked about quite a bit. This particular prize is a 997 value, and it's the weekly price action alerts. You'll receive the top trade of the week and avoid hours of research in the market. You'll get the daily market analysis video report, a weekly price action members workshop, and all of that stuff is going to be free and available to you if you're number 9824. Thanks, Yossi, for that number. I'm going to go ahead and figure out who that is. Give me just a second. Okay, and that is Jerry, who signed up under Trader. So I'm not sure where you're at, Jerry, but you have a simpatico, so that tells me you're probably up in Canada. Congratulations, Jerry. Jerry Trader for winning. Let me make a note of that. I need to kind of get caught up on those. 9824. The other winner, same prize. We're going to take this out of the YouTube chats. I want to say thank you, Chuck, for giving me a number, 2024, and that is going to match up to Marcy R in the US. So Marcy R, congratulations, you won that. What's going to happen with all of the prizes? If you win a prize, you probably want to know when it's going to be delivered. Next week, I'm going to be going through the list of prizes, sending them over to where they need to be, and you get contacted from the company that you won the prize from, and they'll help me deliver it. So there you go. Metastock.com/conf promo, 800-882-3040 if you want to get in touch with us. Thanks for coming in, everybody. Let's go ahead and get over here to our next speaker. Our next speaker is Geoff Bysche, actually. Geoff's done a number of these things with us, and there he is. Geoff, what are you going to talk to? You're going to talk about how to identify the best trades today. Or how to identify the best trends to trade. I can't hear you.
It would help if I unmuted myself. I'm going to talk about the best trends to trade right now. I'm going to talk about a game plan for the end of the year, and you know what some of the things we should focus on in the last 2 months of the year.
Cool. Let me go ahead and make you the presenter. I can see you. Oh wait. I gotta wear my glasses too, because let me go ahead and make you the presenter. And I'll let you know as soon as we can see your screen too. Thank you everybody for participating in the contests and picking numbers and all that kind of stuff. So I can see your screen. I can hear you. I can see you. Everything's looking good. It's your turn.
All right. Well, thanks a lot, Geoff. Thanks a lot for having me. It's always a pleasure. And thank you, everyone, for attending. So just so that I can make sure that you can hear me, if you just put a quick hello in the questions box, maybe where you're from, maybe day trader, swing trader, just some feedback. And I am going to ask one quick question. You can put that in the answer to that in the questions box too. The market, 5% higher or 5% lower by the end of the year? Which one is it going to be? 5% higher or 5% lower by the end of the year? So you could just give me a higher or lower. I'm curious. I always like to get a sentiment reading. Hello from Texas. Awesome. All right. Well, we do have a limited amount of time here, so I am going to jump right into it. And if you have questions during the presentation, please do not hesitate to put them in the questions box. I will try and answer them as I go through the presentation. Hopefully we'll have time at the end to go over any specific questions. And if I don't get to it as I'm going through the presentation, it's only because you'll see, if you've never seen me present before, it's really easy to get me off on a tangent. I love what I'm about to teach you. And I can just go way off on a tangent, and I don't want to do that until the end. I do know I have a limited time frame though, Geoff, so don't worry about that. One last question, and thanks. I would say we're kind of in split between higher and lower, and I was thinking somebody would question me on the 5% number. That's a pretty big number, but I'll let that one slide. If you have never heard of Market Gauge, so let's just put new to Market Gauge, which is where I'm calling in from. Just put new in the questions box. I'm curious. Or if you're familiar with Market Gauge, maybe just familiar or know it. Might be easier to spell than familiar. So let's dive right into it. As you can see from the title, the 2023 year-end game plan for the active investor, how to turn a seasonal edge into a big payday. I tend to like to describe my presentations with a pretty literal description of what I want you to take away from this. Payday, as you're going to see in a minute, may not be what you expect, and game plan I think, will hopefully include some information that is brand new to you. And before we get started, I do need to make sure that you understand that I will be talking about stocks that I have been in, could be in, and may be in terms of trading. I need to make sure you understand that I'm not a licensed financial advisor. And for that reason, access to this webinar is for educational and informational purposes only. So what do I mean by a big payday? Well, as someone who's traded for 30 years, payday, in my perspective, can mean a bunch of different things. One of the most important things for me, for you, or to do for you is to help you get more peace of mind that you're currently building a secure financial future. So that's one of the reasons I built this presentation. I also hope that you'll walk away from this presentation with more confidence, that you'll know when to adapt to market conditions, so that you can have more peace of mind. And I would also like you to walk away from this presentation feeling like you can execute on what I'm showing you and still have plenty of time and have profits now. So we're not just talking about building your wealth for the future, we're doing it right now too. Now, whenever I approach trading, teach anything about trading, or analyze anything that somebody's telling me about trading, I always have these two criteria. Is it easy? And will it make my trading more enjoyable? So in order to accommodate that, I want to show you something that will help you prevent big losses and also enable you to not have to worry about FOMO, or the fear of missing out, which for a lot of traders right now, after the biggest 1 week move in the market all year long, could be a very real thing. Don't worry about it. If you have what I'm about to show you, you will always know that there's another opportunity, and you'll be confident in your ability to take advantage of it. So another big goal that I have for today is that the next 2 months for you could be some of the most successful active investing months that you've ever had, because you've got new information, potentially new strategies, and new tactics. And I want to cover all this in the next 45 minutes. So I am going to talk as quickly as I can. I'm sure I won't talk too quickly, but if you again have questions, please don't hesitate to stop me. Now, I am also hoping that you'll walk away from this presentation feeling the same way that these people have. For example, Tom saying that to paraphrase, Triple Play is an immensely huge day-to-day guide used against some excellent setups. That's what one of the things I'm going to be talking about here. Also, Dylan over here on the right, just saying that he's fortunate to have stumbled on Market Gauge. A lot of you said you were new to Market Gauge, so I hope you will feel the same way. Dylan also goes on to say that he's learned a ton from our webinars. Well, here you are. Here's your chance. I hope you have the same experience. And Keith, who says, wow, sure wish I had known about this trading a long time ago. He's referring to what I'm about to show you. More importantly, on a longer term basis, when we work with traders at Market Gauge, one of the things that we feel is really important is that you have confidence and you trust your own decisions, so that trading, again, is easy and enjoyable and profitable. And so Lloyd certainly had that experience when he says we helped instill confidence. And Greg had the same experience when he says my confidence is unshakable thanks to you. And we also taught me patience. I thought that was an odd thing for someone to admit, but then I thought about it, and I'm always saying, I've already said it once in this presentation, don't worry about it. There will be another opportunity if you know how to look for them. FOMO, we don't want any FOMO. All right. So you tell me, would you feel good about your ability to find new trades, find profitable trades, if you could identify when a stock was going to trend like this? Now, I have to say that it's important to know that this trend happened right now. So as the markets have been selling off since July, this particular stock has, as you can see, trended almost doubled from the middle of May until just a few days ago. This magenta line is a 10-day moving average. This blue line is a 50-day moving average. So if you're interested in finding stocks that trend like this, give me a yes in the questions box. And if you're not, give me a no with a reason why not. Sounds good, works too. Because that's what I'm going to show you. Not only how to find them, but how to identify the turning points and how to have confidence that they're going to continue versus roll over as everything goes through its own cycles. All right, so in this presentation, great. I know that the questions are a little bit delayed. I'm moving on. I am looking at the Q&A or the questions box. Awesome. All right, I don't have any no's yet, but if you've got a no, let me know and tell me why. So what you're going to learn in this webinar, why markets are so difficult to figure out, and why do markets constantly do the opposite of what most people think, and why they're about to do the opposite of what most people think, and why now? Why is there a massive opportunity to profit from the market right now? And I want to show you a strategy that you can use to take advantage of it. And it's not just a strategy that works in the last 2 months of 2023. As we started off by saying, the essence of what I'm about to show you is how to identify the best stocks and ETFs to trade right now. That's going to be true whenever you choose to pull out this playbook. So many of you said that you hadn't heard of Market Gauge. I won't spend a lot of time on this because I can tell you pretty succinctly. I've been a part of Market Gauge since 1997, along with my partners, Keith and Michelle Schneider, who are sitting right underneath me in this picture on the right. But Keith and Michelle were trading in the 1970s and 80s on the floor of the Commodities Exchange. I joined Keith in 1990 on the floor of the Commodities Exchange. So the three of us have been working together for 30 years, which is pretty unusual in this business. In the 90s, mid-90s, Keith and I managed money for a quant-based hedge fund called Millennium Partners, which is now one of the biggest, most successful hedge funds in the US, probably even the world. And at that point, we got into strategies and the proprietary indicator development. Currently, Keith and Michelle also manage assets at Market Gauge Asset Management. And you may have seen Mish on TV or on media as she is on Bloomberg, CNBC, Fox, Yahoo Finance, Real Vision, which is a really popular one, Benzinga, Market Watch, and probably about 10 others. So if she looks familiar, that's because you've probably seen her on TV. If you have seen Bysche on TV or you've read her book, Plant Your Money Tree, let me know in the chat, seen Bysche or no Bysche. That's always of interest to me. Now, yes, we're all online, but I just want to make sure before we get started that you understand we don't want to be a faceless website. We've been doing this since 1997 for professionals, for individuals. And one of the things that we've always believed in is you should be able to pick up the phone and talk to us. You can call our office at the 888 number and talk to Mary. You can get a free strategy call by giving Rob a call at the 407-770-7637. That's actually his cell phone. Send him a text. Tell him you want to talk about what we discuss here. And you can arrange a call at marketgauge.com/call. And one of the best ways to get us is live chat. It's on our website. Even if it says offline, it converts to an email right away. Glad to see some of you have seen Bysche. Thank you for that. So how did I discover what I'm about to show you? Well, it really came about because markets aren't what you think. They aren't what we think, I should say. And I figured this out pretty quickly, perhaps not quickly enough. And I also happen to like programming. And so I spent a lot of time tinkering around with different indicators and algorithms to try and find an easier way to figure out what the market was really doing. And out of that came these two indicators that I'm going to show you. But before we get into that, there's a common belief about the markets that I want to dispel. And I want to do that because this belief tends to frustrate and hurt investors. It hurts them in the form of just doing things that don't make any sense, having expectations that simply are unrealistic. And that belief is that when the market goes up, it's easy to find good long trades, right? Let's just not start with the assumption that in a bull market, I can just get into almost any stock and I'll be fine. That's just simply not true. Now, this is or should be painfully obvious in 2023 because we have experienced that when the market goes up, not everything goes up and not everything is necessarily that easy, right? We've lived through this year of hearing way too much that the 2023 bull market was really just the magnificent seven stocks. And while they may have contributed to the majority of the gains on the index, I would argue that there have been more than seven, but nonetheless, the number's pretty small. And if you want to be successful, even in bull markets, you need to be in the right stock or the right sector. And you can't just assume that because it's a bull market, everything's going to be okay. Now, the good news is that what I'm about to show you in how to identify good stocks and good trends, it's going to work in down markets too. So here's what I mean. This is ANF, which is the stock that we were looking at earlier. And you can see here that as ANF was pulling back consolidating here in July, the market was peaking. And then when the market sold off, ANF continued to go higher, right? There was a news event, it gapped higher. And that all happened as the market was breaking the 50-day moving average, rolling over at the 50-day moving average, falling apart from the 50-day moving average. And instead of falling apart, ANF just pulled back a little and went right back up to its new highs. And then when the market pulled back to the 200-day moving average, ANF just pulled back to the 10 and then rallied back up to new highs. And when the market broke down and made new lows for the move, ANF just pulled back a little and then took right off again when the market rallied, right? So whether the market's going up or down, if you're in the right stock, you can enjoy a strong, reliable trend. We just need to know how to find them and know when we've got one and know when to get out of them. Right now, I'm going to get to that in a second. There's a bigger problem. The bigger problem is that most traders struggle because they're looking at the wrong stuff. All right. I heard a term this morning listening to Bloomberg, and the term which I wanted to put in here and I didn't have time was headline roulette. And so what does that mean? Headline roulette is what we're living through right now, which is every day we come into the market and the news organizations are telling us something new about what's driving the market that should be driving it higher or lower. And you never know what that's going to be. And sometimes it's bullish, sometimes it's bearish, but it always seems to be like a new problem. Now, a lot of that is due to the fact that traders or active investors believe that the way to figure out which way the market's going to go is to understand the economy, is to understand politics, is to be able to anticipate the earnings. It's to be able to understand what the news is saying about the markets, or you're just listening to the news about the markets, which is telling you there's going to be a recession or job cuts or whatever other headline that's being written to get our attention. Interest rates has been all over the news. Currencies becomes a big part of the news. If you're trying to take the news flow, which is all about these things, and digest it and figure out which way the markets are going to go, you're going to struggle. It's going to be really hard. You should forget all that for a second. You see, because what a professional is going to look at is how all those pieces of information are reflected in the market. So the secret behind understanding what to look at and what to focus on is not to focus on all those common beliefs. I'm not going to say they're completely irrelevant, but you need to know what the market is doing in terms of some very specific market behaviors. At Market Gauge, we break these market behaviors down into categories like this: price trend, momentum, leadership, seasonality, sentiment, positioning. If you just look at the market through these lenses, not through the economy's lens, the political lens, the earnings lens, the latest headline lens, but instead really look at the market in terms of what it's doing through these types of trends, everything will make a lot more sense. Now, that's not that easy to do if you don't understand all these things. But the good news is if you understand even just one or two of them really well, that's enough to get started. And I'm going to focus on one of those for you today. But the other thing that we need to be clear about is that what really makes the money is profitable execution. And profitable execution comes from having strategies, tactics, most importantly, risk management, understanding how your emotions play a part of this, and knowing what instruments you should be trading. So in today's presentation, I am going to focus on teaching you how to identify what's going on with market leadership. And the reason I'm going to focus on market leadership is because in the last 2 months of the year, especially after a strong year, the stocks that are most likely to have the best moves are stocks that are leaders. Now, that's almost always the case. It's even more so the case when you've got stocks that are already strong leaders and the market is now trying to chase, for lack of a better term, performance into the end of the year. They're most likely going to run into the leaders. So if you can identify where the leaders are, then you're going to be in those right trends that we talked about earlier. Now, as I've already said, that is good, but it's not going to do you any good unless you have the right tactics and, most importantly, the right risk management. So at Market Gauge, we teach that you need to know these professional secrets, and we help you identify the way to execute profitably using these different areas of what I'm labeled profitable execution. Now, when you look at the market this way, it can make a dramatic difference in your trading. And this is why we get the responses that we get. So here's just two examples. Greg, for example, before he found Market Gauge, he would describe his trading as kind of boing, boing, boing type of education, sort of grabbing the most recent source of information, resting before me. And most importantly, he said nothing was working. When he started working with Market Gauge, I'll paraphrase, he said, my success is consistent and so is my source of income. He also said that it's helped him see crystal clear view of the market and understand how it works. Right? He's the one that said, my confidence is unshakable, and it's also taught me patience. So really understanding what to look at, how to look at it, and how to trade it is the difference between struggling and not understanding and being successful. Lloyd, same idea, different flavor. He wrote us and said, I was mostly a buy and hold investor and he thought it served him well until the market tanked in 2021. And then he realized buy and hold didn't work in down markets, right? Started working with Market Gauge. He found one of our sector rotation programs. And as he put it, it gave him a base on which to build his Roth IRA, which he manages. He also said, you helped instill the confidence I need to trust my decisions. So if that sounds like something that you'd like, then that's what I'm hoping I'm going to start you on in this presentation. Now, I have a premise, I'm not the only one who says this, that there's always a bull market somewhere. But there's a caveat to this. There's a lot more bear markets out there than there are bull markets. We see that in 2023. The really crazy great years are when it seems like everything's in a bull market. But just like we have the Magnificent Seven, they just have a name right now. The fact is, you're probably feeling it. If you trade individual stocks, you have to be in the right one. If you're not, you're going to feel like you're in a bear market. All right, so let's talk about the year end. The year end has a particularly bullish bent to it this year. And so if there was one thing I could put forth in a presentation that's truly unique from, say, this year to another year, is it's what's really going on with respect to this. So it's the year before an election year. You've probably heard a lot of these stats. And so I'm going to focus on the fact that from these professional secrets, we've got a lot of things going on here. I'm going to teach you how to find the leadership. I'm going to just show you what the seasonality looks like. And I'm going to show you some sentiment indicators and some positioning indicators that will demonstrate how much of a great opportunity you have right now to take advantage of these leaders. And then, of course, we're going to talk about tactics and risk management. All right, so the game plan, as I'm describing it, is to leverage the advantages that you have right now, and let's identify and trade those bullish stocks and ETFs and avoid the head fakes or the hidden bear markets that are out there. So you may have seen this chart. It's not mine. It comes from the Stock Traders Almanac, a great resource. And this seasonality, you may already know, but if you don't, please write this down. Take a picture of it. And even though it is the year before the election, you can see by the black line, this is all years. So the pre-election year is particularly strong. That's the blue line here. But the basic pattern is the same. We've got a basic bullish bias. The summer comes along, it gets choppy, either in October or November. But actually, I didn't know this until this year. The last 2 days of October and the first 3 days of November are the most bullish 5-day. That's the most bullish 5-day string of days of the entire year historically. It's called the October turn, and we certainly got it this year, right? Biggest week in the whole year. But as you can see, that's just the turn on this seasonality chart. And after that, you usually get a strong part of November, maybe a pause of November. December, actually, you can't really feel it here, but it is often the first couple weeks can be kind of flat and choppy, and then the second couple weeks are relatively strong. So knowing that, we already should be looking for bullish patterns. But on top of that, the market is oversold. And it's oversold in a couple of different ways. This way that we're looking at right now, we have a product called Big View on our site. It's I don't know if this is part of the free part or not. Some of it's free, but these are statistics you can find elsewhere as well. The statistics are really simple. It's what percentage of the S&P 500 stocks are above the three major moving averages: the 10-day, which is magenta, the blue is 50-day, and the green is 200-day. Now, on the left, we've got the S&P 500. On the right, not labeled, I have the IWM, or the Russell 2000. So you can see the magenta one bounces around because that's a 10-day moving average, but you can see it got down to a pretty washed out level at the end of October. So did the 50-day, really washed out level, and so did the 200-day. So the 50 and the 200, the 50 and the 10 will move around. The 10 especially, you can see. I could spend a little more time on the 10, but I don't have time. If you don't have this, pay attention to this. This is really good when it gets to extremes, to give you just a heads up, like, hey, the market might pause here, market might reverse here. It's too lopsided. On a 10-day moving average, that's a really short-term move. But when the 200, that can be a big move. So this line here is that same 200 period, same 200 moving average number. In other words, this is the percentage. This black line was the green line in the other chart, and it is the percentage of stocks that are over their 200-day moving average. So when you get down to only 20% of the stocks are above the 200-day moving average, that's a pretty bearish market, isn't it? I mean, that's ugly. The market hadn't even gotten to the 200-day moving average, and this thing already had close to 30% of it, 70% of its stocks were under the 200-day moving average. All right, so when this has happened, just looking back since 2017, in 2018, the market really roared. In 2020, well, we know what happened there. The market really roared. In 2022, in the middle of the year, like June, July, the market had a nice bounce. In 2022, around October, that was the low. And now we're right back at that level again. Now, I'm not suggesting that we need to go on to have a multi-year bull market just because of this statistic. But it's the end of the year. There's a bullish bias. And the market has really sold off hard. That's what this is telling us. Now, it's not just the market having sold off hard. People are bearish. I don't feel like the news says this. I don't think this is as obvious in the headlines. But the AAII sentiment ratio between bulls and bears is below 50%. Now, you may not know what that means. I wouldn't expect you to. But below 50%. In the past, I've summarized this table here to say that when this has happened in the past, 74% of the time, the market has been up 1, 3, 6, and 12 months later. More impressive though, up a month later, 2.6%. That's double what's normal. In 3 months, 4%. That's double what's normal for a 3-month move. 6 months, 8%. That's double what's normal for a normal 6-month move, right? And 12 months, 13%. That's a healthy 12-month move. So I don't know if we're going to be up 12 months from now, but if we're only focused between now and the end of the year, maybe January, that 1 to 3 months, that is a bullish bias based on the fact that people are bearish. Now, it's not just individuals. This is a chart of positioning for professionals, CTAs. And this one's even more bearish, right? So this is the amount of short positions that professional CTAs have. 100 billion. 100 billion here, 100 billion there. What difference does that make nowadays, right? But it's not the 100 billion that's as important as it is the relative amount. This is as bad as it was in 2018, which was an ugly end of the year that, if you recall, had a huge bull market in January. It's worse than 2020. It's worse than 2022. So it's not just that people are negative, retail investors are negative, professionals are short. Now, maybe they'll be right, maybe the market will go down, and maybe they'll make a ton of money. But if they're not right, and this could be why the market ripped the other direction last week, because a lot of shorts out there, and if they're not right, this is a lot that has to flip to the other side. All right. The market has a tendency to do what causes the most people the most pain. So if everybody's on one side of the boat, which is where they are right now, negative, if we turn higher, there's a lot of fuel to push that thing higher. All right. I'm not predicting it. I'm just saying that scratch that. I am predicting it. If the market's started to turn higher, and now it has started to turn higher, I think we've seen the low for the rest of the year right now, and we could have a really nice move into the end of the year. If we don't, I'll control my risk. If we do, I want to take advantage of it, and I hope you will too. So let's talk about how to take advantage of it. All right. We want to talk about what the real market leaders are, because those are the ones that are going to rally into the year end. When the market rallies, it brings up a lot of other stocks, but they're not really rallying. They're just being pulled up. A real market leader is a stock that leads the market higher or leads the market lower. In other words, it's going up almost regardless of what the market wants to do. You just saw that in the ANF example. Now, the cool part is they don't have to be at 52-week highs, all right? And they can go up when the market's going down, as I just showed you. Now, what we're going to focus on is why these have so many advantages, and how to identify them, and how to trade them for big gains, and where to find them. All right, so ANF again as my example. When you are in a stock like ANF, and let's just use, for example, the idea that you're a buyer with a simple cross through the 10-day moving average. All right, now I've got a little bit more of a set of confirmations for it. But if you're in the right trend and all you do is wait for a pullback to or under the 10-day moving average, and then you enter with the right stop and targets, you can then hold that for a long time until that pattern breaks down. In this case, the first time that happened, you're down trading around 35, you're trading at 65 just a few months later, right? You'll be able to, when you have real market leadership, your drawdowns or your pullbacks are small and the recoveries are faster, and it's a much more predictable trend, right? So we need to be selective. We need to have a way to find trends that have that reliability to them. And that's what we call triple play leadership. We find it with price leadership, volume, and a sprinkle of volatility depending on your trade setup. So here's the example of the price leadership. I'm going to show you an indicator that has a blue line, a red line, and a black line. The blue line is a short-term measure of market leadership. The red line is an intermediate-term measure of market leadership. And the black line is a longer-term measure of market leadership. You read these like you would read any set of moving averages, right? If they're all pointed up, good. You want the fast one over the medium one, over the long-term one, even better. Right now, I'm just going to focus in this presentation just on the blue versus the red. It makes it easier. And it's, as you can see here, very effective. The simple rule, if you want to just take this and use it right after this presentation, if you look at a 10-day moving average or a 50-day moving average, and you look for transitions from below it to above it, and you only trade the transitions where you have good leadership, because good leadership is going to indicate that it can follow through, it's as simple as this. Is the blue line over the red line when you get your transition? Yes, there's your trade. Your stop below the low of the correction. We can get more specific than that, but we don't have time in this presentation. And you can see how in a strong trend, this works beautifully, right? And it may be a correction, it may be a breakout. So here's the correction, you're not quite there yet. Once it breaks out above it and then pulls back, Now you've got all clear, moves higher, all right? On this pullback, when it's coming through, you've already got the all clear. On this pullback, it never even got to the red line, so it's even stronger. That's that shallower correction that takes off even faster. And more recently, it doesn't even get down to the red line. It's really strong. Keep it simple, all right? Now, volume. I could spend a whole presentation on volume. I have to do it in about 1 minute here, 2 minutes. But I can do it because we're going to look at it in much the same way. We're going to look at a volume trend. We're not going to look at bar by bars. That's impossible. And I'm always going to use it to confirm. It's not going to be the reason I get in. I'm always using price as the reason to get in. Okay. Now, the bonus of looking at volume this way is volume will often shift before the price is obvious. So let's just take a quick example. In this chart of CF, we're basically going sideways, right? And if you told me that you could figure out which way this thing was going to break based on the volume bars, God bless you, because I know I couldn't. But when I convert that to a blue line over a red line, the colors are the same, the data is completely different, you read them the same way. So the top here is your price leadership we just talked about. The bottom, is the blue line is the short-term volume trend. The red line is the intermediate. Read it the same way. If the blue line is over the red line, it's bullish. All right. So I can see all during in this, it's weak as it's weak, but not really that weak coming off a strong run. But let's call it weak. After that, it's strong. Now all I'm waiting for is the price action to break out. I'm not going to buy it just because it's got strong volume. I want a price action breakout as we got here. Strong leadership, off to the races. That's essentially what we do with triple play. We've got a leadership line that's measuring the leadership in terms of price. We've got a volume line that's making sure that the volume trend is good. You can get these same exact lines on your Metastock platform, so you can have these same exact charts that you're looking at right here. All right. So here again, in this case, we're looking at Meta, which got absolutely obliterated in 2022. But look what happens at the bottom after that horrible last earnings report. It pops, and it doesn't just pop, its leadership turns positive. Something you can kind of see from here hadn't been happening. And its volume turned positive. So now I'm just looking for a price reason to get in. So a move above the 50-day moving average, and it runs nicely. A move above the 200-day. Well, with a gap, I'm not going to tell you that I know to get in before earnings. I don't. But a pullback after that, and then the 10-day transition, and then you can see by these green arrows, every time we'd pull back to the 10, and this stays positive, a turn up was a great trade opportunity. All right. So here's Apple. Apple around the same time, except that in the end of 2022, Apple had lousy leadership. So while Meta was looking really good, Apple was falling out of bed. All right. And you can see it in the leadership. You can see it in the volume. But when it starts to turn, unlike this turn here that never materialized, this turn here had strong leadership and strong volume. So I knew that was the one. I waited for it to get over the 50. Honestly, I didn't really believe it. I was a little bit of a skeptic. But when it got over here, I got in. When it got over here, I added. When it broke out here, I added. And I held it because the line kept me in until right up here, actually this break of the 10, because it made a new high and leadership did not. I mean, the divergences like that are glaring. When this makes a new high, leadership really should be right behind it. Now, earnings were coming out, so I got out because I could see leadership was rolling over, and I had a run that I didn't expect to have. I didn't expect it to go that long, but I had no reason to get out. All right, that's what I mean by easy and confident. So I'm showing you these examples of the same time, different stocks or different ETFs, because the market's going to do what the market's going to do, but leaders are going to do what they're going to do. Not always, but that's where you want to be. You want to be in the stocks and in the ETFs that have their own strength to do their own thing. And you want to be out of them when they're going against you. So here's the end of 2022. You can see that the XLV, the healthcare sector, was really strong, and so was its leadership. All right. This led analysts and talking heads on TV in the early 2023 to be saying it's going to be the year of healthcare. Well, as soon as 2023 came around, leadership had already rolled over. It started to break down below its 50-day moving average. If you could see what you could see now, you'd be looking at these people on TV and saying, I don't know what you're looking at, but these things have rolled over and they're headed lower. And that's exactly what happened. Meanwhile, the most hated stocks on the planet at the end of 2022, large cap stocks, large cap tech, they were doing the opposite. We just saw it with Meta. We saw it with Apple. Here's SMH. It started to sell off in December and was weak. But as soon as 2023 came around, leadership exploded in the semis. Volume exploded in the semis. I remember everybody saying these things are never going to last. This blah, bear market rally, this, that, whatever. All I know is that what the stock was telling me, what leadership was telling me, not what the common beliefs of the news was telling me, was that these things were being accumulated. These lines get moved by big money flowing in or out of them, not by you and me buying our 100 or thousands of shares. All right. So if you just follow what's actually happening with leadership and only act on it when price is in agreement, you'll be way ahead. All right. Does this make sense? Now, if we had more time, I would spend more time on this. If you have this edge of being able to identify a good trend, simple tactics can be as simple as identify your risk entry point, which includes some kind of a setup, which right now I'm suggesting is simply a cross of the right moving averages, and then have your stop below that setup, use average true range to make sure that it's big enough, and then set your targets to be at least 1 to 2 times more than your risk, and then 2 to 4 for the next target, and have a good trailing stop, and you've got a solid strategy. I can tell you that's the case because we have programmed systems that use that basic template that don't know how to read charts, and they're wildly profitable. So your strategies and your tactics, or your tactics, I should say, don't need to be complicated. They just need to really understand risk management, and it can be that simple. Let's look at some more examples of some charts. Right? We just looked at healthcare and SMH. Let's look at NVIDIA. Right? Everybody was in love with NVIDIA when it broke higher and then began to run because of the whole AI craze. But the truth is that NVIDIA was under accumulation and a leader long before that. In January, the leadership turned up, the volume turned up, and it had one of the most reliable trends for the first 3 months of the year, both in terms of price, but in terms of its leadership and in terms of its volume. So it really wasn't any surprise when we had great news. I didn't know the news coming out, but it was just a rock solid stock, like something is up with this thing, right? It's all there. It's the market telling you what it's thinking. So let's take a look at technology versus energy. At the top of 2021, technology was really strong. Technology, XLK made a new high. Leadership was rolling over. As technology broke down below its 50-day moving average, leadership was already broken down. Volume had been bearish for months. Right? There was a huge divergence in volume. So when price broke its 50-day, it was game over. I don't need to say anymore. But at the same exact time, look what energy was doing. Almost the opposite. All right. Energy was breaking down at the end of 2021. But then as soon as 2022 started, it broke out. Leadership exploded. Volume was strong. And it did the exact opposite of the market. All right. So when I say there's always a bull market somewhere, maybe not always, but if you look, there probably is one that most people aren't aware of. CF, this is in the beginning of 2022. All right. Fertilizer. It makes sense once you see it happening. But before that, all you had to do was look at the charts and realize this is a really big move in terms of leadership at the end of 2021. And then when it breaks, when it pulls back to its 50-day moving average and starts to rally, leadership is in a great place, volume is a great place. That is a perfect retracement to a 50-day moving average. Probably don't have to tell you guys how powerful that can be, right? And then you can see the breakdown here and the breakdown here and the slide here in volume. And then when it comes back up through the 50, everything's in gear, right? It doesn't have to be that complicated, right? Here's Apple at a different time. This is when 2022, again, when everybody was so gloomy for good reasons, but Apple sitting right at its 50-day moving average. If you think back what everybody would be thinking, Apple rallying up to its 50-day moving average, time to sell, resistance, can't go higher, right? But leadership was telling you it wants to go higher. If this thing breaks out, it's probably going to run. And that's exactly what it did. It did until leadership rolled over, right? It wasn't ready to go to new highs. And the market told you that. Leadership rolled over along with volume rolled over. So as soon as this thing really broke down under its 10, as much as I wanted it to go higher, I had to give up on it. Merck. So it works on big, boring stocks too. I know I'm running out of time here, so I'm going to have to go a little more quickly. But right now, okay, I want you to be able to look for stocks that have pulled back like a Merck has. Now they're coming up through their 50-day moving average, and they've got great looking triple play and good looking volume. And if we miss them because we had this big move and you don't want to pay up, you're just going to wait for a simple correction back to the 10-day moving average, if that's what you want to use, and make sure you've got good triple play leadership and good volume still in place. If you don't, those are the ones that are going to roll over and keep falling. If they do, those are the ones you want to follow, because if the market doesn't fall apart, they're going to turn around and run. Now, how are we going to find these? Well, we have a scanner in a member area that all you have to do is pull it up and you'll see this when they're changing market phase. And we have a triple play score where it goes from positive 4.5 to minus 4.5. If it's a 4.5, it's got great volume and great leadership, right? 3, pretty good. 0.5, not so good. Makes it really easy to find the right ones. So I talked about volatility, and volatility we just use, or I'm going to talk about quickly with one pattern, which you're familiar with. It's a squeeze. When your Bollinger Bands get too close together or get close together, the next thing that's going to happen is it's going to contract. The thing with Bollinger Bands is you don't know which direction. So we use triple play to figure out which direction the breakout should be. So if you have a squeeze pattern and it breaks out, and it breaks out in the direction of your triple play, that's the direction you want to follow. I like to say these are great for options trades because implied volatility gets crushed when Bollinger Bands get squeezed. So it's great for timing. It's great for volatility. And these are just some examples of how quickly it can work. So here's a breakout that I bought some calls on, and in whatever this is, 5 or 6 days, they were up, you can see 106%. Here's an example of a breakout in Pfizer. You can see the Bollinger Band squeezed. You can see the volume giving me a heads up ahead of time. You can see triple play leadership giving me a heads up, the breakout over the 50, and then a month later, these are up 600%. They're not all going to be up 600%, but that's a pretty good move and not a surprising move coming out of a squeeze. So how did we find these? We go to our member area, we pull up the squeeze pattern, and this will tell us how long it's been in the squeeze, how tight the squeeze is, and what your triple play score is. All right, so to review quickly, when you have triple play, when you look at these 3 categories, whenever you look at a stock, you want to know, does it have good leadership? does it have a volume trend? Does it have some kind of volatility pattern? If it does, great. You know which way to trade it. If it doesn't, stay away from it. If it's got one or two, then it's a judgment call. Honestly, if I have a good price pattern and a good triple play price leadership, I like it. If volume's there, even better. The volatility is for specific patterns that I look for. If it's a squeeze, bonus, show me the options chain, right? It's just that simple, or it can be that simple. All right, so if you want to be a part of this, we have a trading course that's all online. It's about 3 hours that will show you trades that I wasn't able to show you here. I showed you the easy ones. I mean, literally, you could get these indicators, throw them on your Metastock platform, and be ready to go with what I've taught you here. But the course will show you some other patterns like high volatility reversals, breakouts that fail, and you could profit from them. The squeeze trades I did show you, ambush high, head fake lows. So there's a selection of patterns you won't find anywhere else without these indicators. It's all covered in the course. Course by itself would normally be $997. The indicators, which you can only get through Market Gauge, have to go on specific platforms because they need to be programmed in. Metastock, fortunately, has done the hard work for you. So all you have to do is let us know that you're a Metastock user, and we will arrange to have you get the add-in for these indicators. We would only sell those for $997 by themselves. But of course, I've got a package for you, and that package includes weekly live mentoring. So you can join me every Wednesday at 10 a.m. and I'm going over how to use these indicators as well as some of our other indicators, so you can ask any questions you want. Today, I actually went over specifically a whole bunch of new features that we have in the scanners for the triple play and which stocks to focus on right now, since that's the idea of mentoring. What should I do right now? So the recording is available. I'm sorry you couldn't make that one live. Obviously, that would have been impossible. But if you become a member, you'll have them every week. It can be almost like personal coaching. So I've kind of already shown you, we've got a member area that has scans for squeezes as well as bullish and bearish stocks. You don't see the phase changes in there, but they're in there now. Those were new. So the total package here is lifetime access to the training, lifetime access to the indicators, and now if you want lifetime access to, or a lifetime discount to weekly mentoring and the alerts that are available in the member area. We have two guarantees. One, if you are not satisfied that you've made more money in the past year using this, then your next year of membership of mentoring and scans is free. And also, we'll guarantee that if you've used it for 6 months and given it a try, demonstrated that you've tried to do it and just decided this is not for you, we will let you apply that 100% of that investment to any other product that we have. We understand that not everything is for everyone. And we've got a host of different ways that we help people. So as long as you're willing to put in some effort, we are willing to put in the effort to find the thing that will work best for you. So all in, the total value of the package is over $5,000, but the cost for you is just one payment of $997. And you can do that at marketgauge.com/triple play. Or give Rob a call at 407-770-7637. Or send him a text, and he can answer any questions that you've had. Now, I can't guarantee you're going to triple your investment like Jack did, trading just one contract. But I think you can see, based on what I've shown you, that that's pretty realistic if you know what you're doing and you're patient and you just focus on the right stocks. Now, normally, the mentoring and the alerts would be just 1 year bonus. But as I said, I've got an upgrade right now where you can get that annual value, which is $25 $400 value for the year of mentoring, $1,164 a year value for the scans, but you'll get that for just $197 a year if you want to do that. It's totally up to you at the end of the year. All the information about this is at marketgauge.com/triple play, or give Rob a call. So Geoff, I'm sorry if I went a little over there, but I am done and open to questions, but I know that you've got to wrap up.
You did great. It's 11:59. We started you 10 minutes late, so let's see.
Well, you may have not seen my change of course in there, as I realized I needed to speed up. But I was looking at the clock pretty closely. I really respect everybody's time here and appreciate the attendance.
Yeah, no, it's good to have you. That was really, I thought you did a great job. I appreciate you coming in. Thank you.
I am happy to be here. I really believe in these indicators. I've been using them for 15 years. They changed my life. I hope I can help them change other people's lives.
Cool. Just type in the thing into the chat here. Thank you so much, Geoff. I appreciate it. Great job.
Thank you.
All right. Very good. Let's go ahead. It's going to be prize time. So the address for that is marketgauge.com triple play /triple play, or just click on the link in the below. So, and I think actually, Kelly, if you're watching on YouTube, he may have done a QR code for it because he's getting fancy over there. In any case, let's go ahead and do. Jim says, excellent presentation. Yeah, he did a good job. Very thorough. So many great presentations, I think, today. Let me go ahead and make myself the presenter today. We'll go ahead and show my screen. And what I'm going to do is actually, where did my slideshow go? Okay, hold on a sec. Okay. All right, it's over here. I was actually kind of making some adjustments because, as you know, we've had a little bit of some changes today, and I'm just trying to get my slides in order. So let's go ahead and do that. It is prize time. So I know for a few, I've been saying, hey, give me a number, give me a number, give me a number. This time I'm going to do something a little bit different. I'm going to mix it up a little bit. What I'm going to do now, this time, to give away a prize is to actually, I'm going to look through the comments that we've had, and I'm going to randomly choose from the questions from both GoToWebinar and YouTube chat. So we'll do that here in just a second. I do want to say thank you to our sponsor, Stocks and Commodities Magazine. Such a great magazine. You probably know, well, one of the things that I try and do on a daily basis is get better at what I'm doing, whether it's trading, whether it's my job, whether it's, whatever it might be. And I really think that having a magazine delivered to you every month that talks about different ways to look at the market and keeping your mind open to kind of different ideas is really, really good. So I want to say thank you to Technical Analysis of Stocks and Commodities for sponsoring today's event. And the prizes I'm about to give away are going to be a year of technical analysis of stocks and commodities. So if you win, you're going to win 12 issues, 1 year of Stocks and Commodities magazine. It's an $89 value. And I've got the YouTube and the GoToWebinar chats open here. And I'm going to do this kind of randomly. I'm just going to kind of scroll through the comments for a little bit. We've had a lot of comments all day. And so for GoToWebinar, I'm doing it randomly, but then I look over here and, all right. Marius C. GoToWebinar, you won. Okay, Marius C. Now, if you are in the US, I'll say this too. It's a magazine. They actually will send you a physical copy as long as you're in the US. But if you're not in the US, they'll send you a digital copy of it. So, Marius, I've got your email address here. I know you're registered. I'm not sure if you're in the US or not. If you're still here, say hi, because you just won an $89 prize. So I'm just going to kind of chat. Well, I can do that in a second. Now, let me go over to the YouTube chats. If it's, and then we'll do it this way. This is fun, actually. All right. Penny S. Penny, you just won. And you won because you actually gave me a number earlier. That's kind of cool, right? So Penny S, I'm not sure if I have you registered. What I'm going to ask you to do is email me, jeffrey.gibby@metastock.com. If you're here in the US, I include your address. I need actually include your address anyway. Stocks and Commodities needs that for its database. Marius, I have your information. I'm going to go ahead and look you up in a second, and congratulations on winning the prize. Appreciate you being here. Appreciate the audience participation. It does help with that YouTube algorithm and stuff like that. If you ask questions, it helps a lot, and it helps us get the conference to more people. So thank you. All right. Jim said, excellent presentation. I totally agree with you. Hello, R. Thanks for saying hi. All right. Of course, we're Metastock. You can get an extended trial software. It's only been rated #1 for only like 30 years in a row. Why haven't you tried it yet? Well, if you're using it, thank you. If you want to do an extended trial, we'll give you you pay for the first month. We'll give you the third month for free. It's all powered by LSEG data, which is Refinitiv data, or what used to be Reuters before it sold a couple times. Some of the best data out there. You can get that at metastock.com/conf-promo, metastock.com/sales-chat, or 800-882-3040. Coming up next, and with a huge thanks for kind of fitting in the bill and coming in a little bit earlier than we had as planned, Dan Sugar. Dan talks a lot about trend lines. We've had him in the sessions. I think this is maybe his second or third time. He always does a really good job. I love trend lines. I love finding breakouts above trend lines. And that is what he's going to talk about. So trend line following, trend line management, et cetera, et cetera, et cetera. So Dan, thank you for coming in early today. I really appreciate it. I'm glad you could do it. Let me go ahead and make you the presenter. And let's see. Let's make sure we can hear you. How are you doing today?
Hello, test, Metastock, Jeffrey. Can you hear me?
I can hear you. Yeah. Good afternoon, I think, for you, depending on where you're at.
The last presenter was Geoff with a G, and you're Geoff with a J.
Correct. And we won't get into an argument about which is more appropriate, G or J.
I'm Daniel with a D, but good to be with you.
All right. Well, I can hear you. You're ready to go. I'm going to get out of the way. It's all you.
Let me just make sure to share my screen correctly. Click on show screen.
I can see trendlinebreak.com, trendlines and patterns, and I can see a cursor too.
You can already see it. Fantastic. Yep. All right. My big IT joke is I'm an analog guy trying to survive in a digital world. I wouldn't know a terabyte from a mosquito bite.
Well, you're all good. You got in here with less help than most people needed.
I wouldn't know malware from spyware from my boxer underwear. All right, enough of my sad IT humor, but we got a lot to cover, folks. So I would definitely grab a Sharpie or a pencil or a pen, unless you got a photographic memory and you're a founding member of Mensa. I do have two Bernedoodles, Big Boy Beer right here, and then a little girl Yogi. So if Amazon drops off a package, or the mail comes, or the landscapers next door come, you might hear a couple barks, but I'll try to mute them and do our best here. So welcome, everybody. So today's presentation is going to be all about trend following and trend lines. So I got about 38 slides with some great information, and then that'll take 30 to 40 minutes or so. And then I'm going to jump into Metastock charts and apply what we learned today. Okay. So I'm sure there's a few people in here that have been in my webinars and web classes before. And again, Jeffrey was correct. This is my third Metastock. So I really enjoy it and enjoy sharing. And I've had some great mentors and teachers in my career, and I look at it as giving back or paying it forward, whichever way you want to look at it. So let's jump right in. Again, there's my name and my trend lines and patterns, Metastock Trader Summit, trend following and trend lines. How to identify the macro trend and trade with it. You want to trade with the trend, right? The trend is your friend until the bend at the end. The bend at the end is the trend line break as well. So I'm going to show you some examples and again, definitely take some notes. And I think this will be very, besides being informational, it can be transformational. I know that's a little cliche and you may have heard that, but this stuff can make you money, folks. this stuff can make you money. It takes, a little time to get the nuances and get the foundation, but it's definitely a moneymaker. And trend following has been around a long, long time, and we'll dive into the history as well momentarily. So here's the government disclaimer. Trading can be risky. If you don't manage risk, you're not going to have any risk to manage, right? I always address whenever I email my database or I'm on a web class or webinar, I always say, good morning, risk managers, or good afternoon, risk managers, because in essence, that's what you are. If you want to have longevity and success in this game of trading and active investing, whether you're a day trader, swing trader, position trader, or investor, there's 4 styles. You need to manage risk. You got to watch your downside, and very, very important. There's my ethos and my mantra: integrity, transparency, and performance. If you're from Chicago, or if you've been to Chicago, you're familiar with LaSalle Wacker. That's how I got my LLC. The Board of Trade's on LaSalle, and the Chicago Merc is on Wacker. I'm a futures guy. I was on the floor for a decade in the bond pit. One of those screaming for dollars. If your hands were in the pit, you were buying. If your hands were out, you were offering a quick little floor trick. Hands in, buying. Hands out was selling. So I'm a 3rd generation Chicago floor trader. I got the DNA, won the DNA lottery for trading, I guess. I did that. Hey, relax, guys. Another dog coming by, sorry. It's actually another Bernedoodle, believe it or not. My neighbor got one after he saw my 2 Bernedoodles. But my grandfather passed away about 4 or 5 years before I was born, but he came over from Ukraine, went to New York, Philly, and then finally settled in Chicago and traded butter and eggs. Before there was S&P and bonds and Japanese yen, there was butter and eggs. Yogi, silencio, por favor. My dogs are bilingual, by the way. So, and then my father spent 35 years on the floor of the Board of Trade in 1950 to 1985. He got me my first job as a runner for E.F. Hutton. If you've been around investing for a couple of decades or so, you're familiar with E.F. Hutton. When E.F. Hutton talks, people listen. Who remembers that one, right? Hey, that's enough. So here's a quick little screenshot of my October numbers. Trading's a very performance-based endeavor. As you know, you can make money in simulation mode all day long, but until you have skin in the game and live money on the line, that's when the real learning begins. But I bought this, I subscribed to Trader Sync software. They just grab your statements and, from all brokerage firms live, and then they extrapolate the data. And so I was actually in Phoenix, Arizona, Sun City West, actually helping my sister the first part of October. We had to sell our condo and move her into not assisted living, but independent living. So I missed the first 2 weeks of October. But from October 18th to the 31st on a 60 grand account, I made 11.2, and the minus commissions was like 10.5, 10.4, 10.5. But trading micro ES and micro NQ. So there's Trader Sync software real quick. Oops. And here's another way of looking at it as well. Nice little growth chart there. I bang out a lot of singles and doubles, but I'm prepared and ready to go for the occasional home run or 2-run home run. Okay. I also manage money. I'm classified as a unregistered financial advisor at Interactive Brokers, which means I can have up to 15 clients. If I want to get 16 or more, then I have to become a CTA or an RIA, registered investment advisor. And then the government gets in my ear and behind my back. And so I'm happy with just having up to 15. So right now I have 8. So I do have 7 spots available. Today was a good day. Took a while for the mini NASDAQ to break, but I was patient. The mini NASDAQ was chopping around at about a 15 or 20 point range and finally flushed at like, I don't know, 11.15 or so, 11.30. And I had some nice shorts on. So that's IB, by the way, Interactive Brokers. There's my old trading cards from the early 80s when I was learning how to trade as a 17 and 18-year-old runner. Whoever owned property or a house or a condo in the early 80s, your interest rate was 12.5 or 14 or 15% on a 30-year mortgage. So 8%, 7.5% is still half of what it was in the early 80s, but I locked in at 4.25 about April of 19 when I bought this house. But bonds, the price is inverse with the interest rate. So when bond prices are at 60, like in the early 80s, it means the rates were at 14 or 15. Now bonds are at 120 or 130, and rates are at 5% on the 10-year note, roughly, give or take, and 4.5 or so on the 30-year bond. But I was learning how to trade on the side of the pit, as I was running orders and learning and so forth. But I kept some of my cards. So if at first you don't succeed, try doing what your instructor told you to do the first time, right? I'm a big believer in mentoring and, apprenticeship and getting, with somebody that knows what they're doing and has proven success and really learning from them. Goals, coaching, guidance, training, motivation, knowledge, support equals success. So again, I had some great mentoring. I had 2 guys on the floor of the Board of Trade that cleared their trades through Shaq and Arbor Karlov, which was my clearing firm. So besides seeing them in the bond pit, I would see them up in the office in the morning and for bagels and coffee or breakfast or then lunchtime, whatever. And they kind of took me underneath their wing. And then I also learned trend following and trend lines from a very successful hedge fund trader. Some of you that know me for a while have heard that story before. But this gentleman took a $1 million hedge fund to $1 billion in 10 years, Richard Scalone. And then he retired in his mid-40s and opened up a prop trading floor with a couple partners. And I was in that room in January of 2010 until about July of 2013 as his mentor, learning trend following and trend lines. And that's where I got this knowledge. And I, again, pay it forward and enjoy sharing it. But phenomenal experience. So again, a lot of great mentors and teachers. My dad being the first one. I think I was 9 or 10 years old at the dinner table when I first heard cut your losses and let your winners run, right? Cut your losers, let your losses, cut your losers, let your winners run, cut your losses, let your profits run, mean the same thing. So some of you, if this is your 4th or 5th presentation since 8 or 9 o'clock this morning or yesterday as well, I have 3 quick little jokes here. Here's a gentleman in court. He's up for some felonies, and he looks at his attorney and says, he looks back and says, "Don't worry, I've watched a lot of Law and Order. I got this." Makes you feel comfortable, right? And then here's your flight from New York to London. I've just finished a YouTube video on 747s. Buckle your seatbelt. We'll be taking off shortly, right? And then the 3rd one, you're going in for some, heart surgery or clot removal. Of course, I can remove your blood clot. I've got Wikipedia. It means, folks, you can't become a successful trader watching 15 YouTube videos a day or attending these conferences all the time and just putting bits and pieces together. You really need to put together a foundation of knowledge and a mentor and some solid education, and in my humble opinion. All right, so there's my ebook, folks. I wrote an ebook about 2 years ago, Trends, Trend Following, and Trend Lines. We're giving away a couple copies later today with Jeffrey as well, but it's got a lot of examples, and there's your bullet points and so forth, how to trade bull markets, how to trade bear markets, the history of trend following, etc. I examined some nice white papers, and I got the history of trend following, and it goes back 110, 120 years from Charles Dow from 1900, 1895, 1890, 1900, 1905 are the first artifacts of trend following. So this is 2023, so we're talking 120 years. Again, I'm not here to poo-poo MACD or moving averages or Fibonacci or RSI or divergence or other strategies or order flow or volume profile. A lot of stuff out there, folks, but a lot of those are lagging indicators. Real-time price action, real-time trend following, and trend lines and patterns are live, real time. They're not lagging, they're leading. So just something to keep in mind. You want to trade off lagging data or lagging. You still can make some money, of course, but you might have to take some heat on the trade first or get stopped out a couple times if you're using lagging indicators. So trend following and trend lines are live, real time, and they're not lagging. So how do I identify the macro trend and trade with it? Markets are either going up, down, or sideways. So you got a 35% chance of calling the trend. And you can make money in sideways markets. Sometimes a stock or S&P or NASDAQ or Dow goes into a trading range for a couple of days or a couple of weeks. some stocks go into a trading range for 2.5 years. My go-to example that was eBay years ago, 6, 7, 8 years ago. eBay was between 48 and 60, $12 range on a $48 or $60 stock for like 3 years. And every time it got to 58 or 60, it was a short. Every time it got down to 40 or 50, it was a long. So a stock can go into a long, prolonged trading range, and it's more difficult to make money. The bigger money, the higher probability, higher reward trades are in a trending market. I even have a little sheet on my desk, on my office here. Only trade trending markets. It's much easier to trade a trending market than the chop and slop or trading range. If you Google chop and slop, it'll come up. Dan Sugar patented that term in 1988. So here's an excerpt from John Murphy. Some of you are familiar. If you've been around investing or trading, John Murphy's a legend. He wrote Techno Analysis of the Financial Markets in the late 70s. His follow-up book was Intermarket Techno Analysis, and he's one of the gurus and fathers of modern techno analysis. He started stockcharts.com a long time ago and used to be on, FNN and CNBC back in the day. But he wrote, the trend line is perhaps the simplest and most valuable tool available to the chartist, trader, investor. Simple and valuable, key word there. And then he also wrote, the violation of a trend line is often the best warning of a change in trend, right? From a bull market to a bear market, or an uptrend to a downtrend, or a downtrend line. If we get above it, we go from a bear market to an up move. And as an investor and a trader, that's your number one goal, basically, to see when the market's going to turn from weak to strong or from strong to weak. Sometimes it does it in 5 or 15 minutes. Other times it takes 2 weeks. You have a nice drop, you base and consolidate for a while. The macro long-term trend is up. So the higher probability trade is it's going to go back up and make some higher highs, right? So anyway, 2 big quotes from John Murphy that are very, very important about trend following. Simple and valuable, and watch those trend line breaks. Hashtag TLB. I hope your charts don't look like this. This is analysis through paralysis, right? I took this screenshot from a gentleman that was doing a presentation, and he was a guru, blah, 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 big following. And I'm like, are you serious? There's, pivots, moving averages, Andrew's pitchfork, God knows what else is on there. But I like to keep things simple. You guys are familiar with the KISS method, right? Not KISS, the 70s rock and roll band with Gene Simmons. Keep it simple, students, right? Not going to call anybody stupid. That's not right. Keep it simple, students. And I think a lot of new traders make trading a lot more difficult than it needs to be, right? Do your analysis, get comfortable with your strategy, manage your risk, and manage your emotion, right? I mean, just keep it simple. You're going to be wrong half the time. You can make money being wrong half the time as long as you're wrong for this much on average, and then your winners are this much or this much, 3 to 1, 4 to 1 risk reward setups. And in my humble opinion, trend following and trend line breaks offer more low risk, above average reward, above average probability opportunities than anything else out there. Again, 120 years of data. And I learned them from a very successful hedge fund manager. By the way, before he was a hedge fund trader from 1997 to 07, 10 years, he worked for the JP Morgan currency desk and learned how to trade as an institution from the currency desk with JP Morgan doing Forex. But one quick reminder, folks, trend following and trend lines can be applicable and applied to all asset classes, stocks, options, ETFs, futures, Forex, and crypto. You can do trend line breaks on Bitcoin and Ethereum, and it can be applied to all trading styles, which is day trading, swing trading, position trading, or investing. So once you learn trend following and trend lines, you're done. You can apply it to any asset class and any trading style. And you have to know what kind of trader you are. Remember that old, I forgot if it was Pluto or Plato or Zeus or Socrates that said, know thyself, which means, are you a day trader? Are you a position trader? Are you an investor? Do you do a little day trading, and then 35% of your focus is day trading, and 70% is swing trading options, or 0-day trading, and then you do 50% position trading, and then 50% investing. So know thyself and know your plan, know your goals, right? So depending on your account size and your time availability, not everyone wants to be tethered to the screen for 2.5 to 5 hours a day, but it all depends on your trading style. And day trading is very, very difficult, folks. I'll tell you that right away. Day trading is very, very difficult. So I think the best path, a nice comfort zone, a nice sweet spot is swing trading, futures, forex, options, or stocks. And swing trading is just holding a trade for day and a half or 3 days up to 3 weeks. Position trading is maybe a month to 3 or 4 months, and intraday is intraday. But I think short-term swing trading is a nice sweet spot for people that are new and can generate some profits and revenues relatively quickly. All right, so keep your charts nice and clean, and you'll see my charts in a minute. There's a quick example of some trendline breaks on the QQQs. I thought I deleted those. I thought I took them out. But all right, so here's 5 things you must know for success, folks. In my humble opinion, after 3+ decades in the business, actually 4, who am I kidding? I'll be 60 in 5 weeks. Here's where the part where you type in, Dan, you look 40 or 42. I like to pat myself on the back. Although my mom told me I had a face for radio, so I started learning that. So I started believing that after she told me that for a decade. But seriously, folks, 5 things you must know for any type of investing or trading. Number 1, you have to have a proven strategy and the discipline to follow it, whether it's moving averages, Fibonacci, Elliott Wave, MACD, RSI, whatever, or trend following. Learn that strategy inside and out, back and forth, up and down, and then have the discipline to follow it, right? Self-control. Number 2, risk management. We talked about that. Small losses are part of doing business. If you have a stigma over losing money, you're not going to be a good trader or investor. There's going to be some losses. You got to manage them. You can do very, very well in this game being wrong half the time. And one way to get over that stigma is think about trading as a business. In business, you have revenues and expenses. Your profits are your revenues. Your small losses are your expenses. Nobody's going to stay in business with large losses. Restaurant, manicure shop, anything, lawyer's office, and trading is no different. So think about your trading as revenues and expenses. Keep your expenses small. Position sizing is very, very important. Position sizing is very, very important. Even if you have a $100,000 account, don't flip 10 crude oil or 10 big ESs or NQs, and have those big swings. Trade small, grow tall, right? We used to say that on the floor. I got many, many old floor sayings that are in the back of my mind, the front of my mind, everywhere. But position sizing is very, very important. You don't want to risk more than 1.5 or 2% of your account on any one trade, right? You've seen this set up 10 times and it works, 9 out of 10 times. The one time you do it, you step up your position sizing because you felt so comfortable and confident. That's the 1 out of 10 times that it doesn't work, and then you get whacked, and it's a lot of financial capital and psychological capital. So even keel, grounded, stick with your position sizing. If you stick with your proper position sizing, every trade you make is the same from a risk management standpoint. 1% or 1.5%, or once you know what you're doing, you can do 2% of your account size. So, if you got 40 grand and you're doing 1%, $400, 2% is $800. Don't have a loss larger than that. Number 4, understanding probabilities in the risk-reward relationship. Very, very important. Risk-reward, 2-to-1, 3-to-1, 4-to-1, 5-to-1, right? What was that old saying by Peter Lynch from Fidelity? Most traders and investors, they trim their, they trim their flowers, they cut their flowers, and they let their weeds run. Anyone ever hear that one? Right? Great analogy. They cut their flowers and let their weeds run. For you gardeners out there in Chicago on the floor, those of you may have heard this before, but we used to say you don't want to eat like a bird and poop like an elephant. Excuse my French, it's after lunch, but you want to eat like an elephant and have small losses. Okay, so I mixed in a little humor there, but very, very prophetic. And prophetic sayings will lead to profits. Number 5, a sound psychology and solid mindset. Your edge starts in your head. Once you know your platform, Metastock, wherever you're at, once you know your charts, your platform, your brokerage firm, how to place orders, trailing stops, breakout, buy stops, whatever, and once you know your methodology, your strategy down pat, it all comes down to, it's all psychological. If I can do a paraphrase from Yogi Berra, 90% of trading is 80% mental. How about that? 90% of trading is 80% mental. Think about that one. But seriously, it's all psychology, folks. Do you have the discipline and self-control to stick with your plan, stick with your process, put that stop in, take your profit where you're supposed to take your profit? Yogi, relax. Yogi's the anxious, uptight one, and my big bear, burn a good old 90-pounders, super, super chill. Right, Bear? So those 5 things, folks, take a screenshot, write it down. You need those. It's like a 5-legged table. If you only have 3 out of 5, you're not gonna do well. Okay? Very, very important. All right. So successful traders narrow their focus, right? You don't want to be a jack of all trades and a master of none. If you're going to do order flow or tape reading, do it. If you're going to do moving averages only, learn it really, really well. If you're going to do volume profile or market profile, derivative, learn that in and out. For me, it's all about trend lines, trend following. I do love my 5 favorite patterns: bull and bear flags, ascending and descending triangles, and a wedge or a symmetrical triangle. Those 5, in my humble opinion, are the most reliable. And become a specialist. And here's a nice little diagram. Trading method, trading psychology, and risk management is your trading edge over all the other novice traders that are struggling. Okay, you got to have all 3 of these as well. A quick little math, right? If you lose 10%, you got to make back 11. You can do that mentally and financially. You lose 50%, you got to double your account. In other words, if you have a 15 grand account and you don't know what you're doing and you're not trading with position sizing correctly and you're not using stops and your account goes to 7,500 in a month or 2 or 3 or 4, you got to make double that just to get back to square one. So know the math. And then here's another math, extrapolate, on a 6-month or a 12-month basis, $250 a day or $400 a day. If you can average that, on average, some days there'll be more, some days there'll be less, some days you're going to have some small losses. But did you have the discipline to stick with your plan and stick with your discipline? All right, so 5 things you're going to learn today. Understand how powerful macro trends are. It's like an ocean with big tides and waves. Be able to look at a chart relatively quickly and confidently discern if there is a trend, up, down, or is there no trend, sideways. Realize the power of buying pullbacks and retracements during uptrends or bull markets and selling strength and rallies during downtrends or bear markets. We had, September and October were very bearish. And then the first week of November, boom, 6 or 7 days in a row. I think we're going on 8 or 9 for the NASDAQ, depending on what happens today. But very powerful rally the last 5, 6 or 7 trading days since November started. Historically, seasonally, September's the most bearish month of the year, October 2nd. So back-to-back, it's a very bearish period, and this year was no different. But now we've had a nice pop, and we've had lower highs. So we've had lower swing highs since January of 2022. So we're, more than 18 months into our bear market or downtrend, and we've had low. Every time we bounce higher, we make a lower high, and then we make a sell-off again. So I'm not sold yet on this bullishness. We got to take out a major swing high pretty soon to get me back bullish. Number 4, identifying high probability locations where to buy long or sell short. Supply or demand, support, resistance are used interchangeably. And then again, risk management, position sizing, and psychology we can touch on. So here's a quick little history of trend following and so forth. It goes back to David Ricardo, London stock and bond trader. Made a lot of money back in 1790 to 1818. He was the first one credited with cut short your losses, let your profits run, which is the #1 mantra for investing and trading. Arthur Cutten, Chicago grain trader in the early 1900s, stay with the trend. There used to be a bar and restaurant right behind the Board of Trade and CBOE on Van Buren and like Wells, called Cutten's. And then Jesse Livermore, sizing up the market and its trend for reminiscence of a stock operator. And then again, so on and so forth. I want to start going a little faster, but there's just a big history of trend following. John McGee, Edwards and McGee wrote the Bible, Technical Analysis of Stock Trends in 1948, a great book, right? Richard Dennis and his Turtle Traders all used Donchian channels in the 70s, which are trend following indicators. Here's one more last quote from John Murphy. 2 basic premises of chart analysis are that markets trend and that trends tend to persist. Trends tend to perpetuate. Yeah, Socrates, yeah. Trend analysis is really what chart analysis is all about. Trends are characterized by a series of peaks and troughs. Higher highs and higher lows, uptrend. Lower highs and lower lows, downtrend. Finally, trends are usually classified into 3 categories: major, going over a year or 2, secondary, and minor. A major trend, more than a year; secondary, intermediate; and then minor is a couple hours to a couple weeks. All right, so because trading markets offer the best profit opportunities, the most basic goal of chart analysis is to define and identify price trends so we can analyze and join them, right? You want to be able to look at a chart and just visually quickly. You don't want to spend 15 minutes. After you have the knowledge, you can look at a chart and within 45 or 60 seconds, notice if there's a trend or not, right? It's just boom, boom. Train your eyes, as my good friend Jeff Manson likes to say, train your eyes. I've been in front of the screen since 1996. I left the floor in March of 1996, was a retail broker for 10 years, and then 96 to 05, and then just been teaching and trading from 05 to 2023 here. So the definition of an uptrend: higher swing lows and higher swing highs. The buyers are in control. Swing highs and pivot highs, or swing lows and pivot lows, those terms are used interchangeably, swings and pivots, so same thing. Downtrend: lower swing highs or lower pivot highs and lower pivot lows, right? The lows are in control. In a downtrend, the highs are in control. In an uptrend, the lows are in control. Trends tend to persist and perpetuate, and a trend in motion tends to stay in motion, right? Who remembers their sophomore biology class? Or was it chemistry? All right, I know. It was physics. It was physics. All right. Before anybody types in, you're wrong, Dan, it was physics. So again, you can use trend lines and patterns for any style of trading and any asset class. They're universal. One of Richard Dennis's, if you don't know Richard Dennis, Google him, but he's the Chicago legendary trader. Him and his partner argued, are good traders, are successful traders born, or can you teach somebody a methodology and strategy and they can become successful? And the latter is the truth. Yeah, there's some good traders that are born, but you can teach somebody a methodology and strategy, and as long as they have the discipline to stick to it, right, don't deviate. This gentleman, Michael Koval, was one of the original turtle traders, and he wrote several books on trend following and trend trading, and there's some good things as well about becoming a trend follower. Trend followers use reactive technical analysis. Instead of trying to predict a market direction, their strategy is to react to the market's movements whenever they occur. This enables them to focus on the market's actual moves and not get emotionally involved with trying to predict direction or duration. Super important. Good traders react to the market. They don't try to predict, right? I mean, I know deep down we're trying to predict is it going up or down, but we're going to react to the candles, to the trend, to our signals. We react, right? The goal, and then so there's very important. So again, all asset classes, markets don't jump up and down in a random fashion. On the contrary, they show definite organization and structure in their chartered course. During an uptrend, we want to buy long, pullbacks, or retracements to support/demand, or the uptrend line that has 3 touches. 3 touches is confirmation, right? During a downtrend, we want to sell short strength or rallies that fizzle out at supply or resistance or third touch downtrend line, right? And you want to join the trend. You know, entries are important, folks. When you're trading with a trend, you can get away with sometimes buying a little high, or, you know, you want to buy pullbacks, but sometimes you have to buy high and sell higher on a rally-based rally. You can trade that breakout on good volume, right? But entries are important, folks. And, you know, uptrend, buy pullbacks, you're getting something on sale, right? You got to have your stop in there in case it goes, you know, you want to buy that first pullback to a good demand zone or support. Sometimes it takes out the first support or demand zone. It gets stopped out for $200 or $400, and then it goes to the second demand or support zone or the uptrend line, and that one's the big 5-to-1 mamma jamma winner for 800 or 1,000, right? So you never know which demand zone is going to hold. You know, that's trading. But all right, 3 major applications for using trend lines. Why and where do we use them? Number 1, you can use them to lock in profits on an existing trade or investment. If you were long Netflix, you could have drawn, you know, a couple of years ago, before it went from what, 650 to 60 or whatever it went, 600 to 80 or whatever. I'll show you a chart of that. But if you would have drew a trend line, an uptrend line on the weekly chart on Netflix, let's say you were long at, you know, 350 or 400, that would be terrible trading or investing if you watched it go to 650 and then you get out at break even or a much smaller gain or a small loss or a big loss, right? So you could have put a sell stop below the trend line on the weekly chart, higher time frame for an investor, and it would have gotten you out at 575 or 550, and then it went to 150 or 125 or something crazy. So you can use it to gauge where to lock in profits on an existing investment or trade. Number 2, to locate favorable locations on a chart to join an existing trend using the 3-touch confirmation. You need 3 touches on 3 higher lows to be a buyer, 3 lower highs to be a short seller, to help recognize when the current trend is ending and a new trend forms in the opposite or reverse direction. TLB. I love those trend line breaks. There's a great one today on the ES 60-minute chart and the ES volume. I used a 10,000 volume chart on the ES as well. So it's all about volume. There's no time. Time is irrelevant. Every time there's 10,000 contracts traded, there's a new candle. And I'll try to show you those as well today. I lost money in the S&P today. I made a lot of money in the NASDAQ, though. So there's some good TLBs in the NASDAQ as well. All right. So here's some basic charting, folks. Here's your structure of a trend. The upper left is an uptrend. Once you have 3 higher lows, draw your trend line. And you want to, that third touch is the signal. Don't wait for the 4th touch. The 3rd touch is the signal. We have an uptrend. And your sell stop would go just below it. And then here's the TLB in the upper right, right? You never know when it's going to break, but there's the trend line break, the little reversal, retest, break, small retest, and then a continuation of the downside. Lower left is the 3-touch short downtrend line. Here's the swing high, drop, lower high, touch number 2, lower low, shallow retracement, sucker rally, short covering rally, whatever you want to call it. Then you have a lower high. There's your 3rd touch. That's the signal. Go short, buy puts for you options traders, any other bearish option strategies. That's where you want to go. And then the lower right is the trend line break. Once we broke that trend line back to the upside, a lot of short covering and new longs came in. They don't all work, folks. Nothing works 90% of the time. If you're on a web class or a YouTube video that says, you know, works 96% of the time, log off and, you know, call their bluff. But you don't need to be right 90% of the time. Who's that? I just heard this quote. There's a famous, who was a Stevie Cohn from the New York Mets and one of the most successful hedge. He bought the Mets a couple years ago. He's one of the most successful hedge funds, SAC Capital. He said his best traders are 63%. They're wrong 37% of the time, and they're right 63% of the time. But when they're right, they let them run, some of them, and when they're wrong, they always take small losses. So it's like baseball. You know, you can fail 7 out of 10 times and succeed 3 out of 10 times and make a lot of money. So here's Richard Dennis and his turtles. Just a quick reminder, all of the turtle traders use Donchian trend following indicators. And then if you're familiar with Jack Schwager and his series of 5 or 6 books on interviewing top traders, hedge fund traders, screen traders, Ford traders, money managers. The majority of market wizards used trend following. All right, I have a bunch of testimonials and reviews, etc. You can email me, Dan at Trendline Break. I have over probably 800 or 1,000 testimonials. I've been teaching for 15, 16 years. My Facebook page has a lot of reviews as well, 119 on the Facebook page. All right, so here's the MetaStock Traders Conference special. I did a web class, a master class. I have a full 4-day class, but this one's a 5-hour, 2.5-hour episodes on Zoom, 2.5-hour master class recorded on trend following, all the bullet points there, how to identify the macro trend, how to draw trend lines accurately, where to entry, where to get in, where's your risk and stop, how to let your winners run. We go over some psychology, 5 reliable chart patterns we touch on there. So you get the 5-hour master class, 1 hour of live consulting with me to make sure you get it. And the consulting can be 3 days after you watch the videos or 2.5 months. If you're busy, whatever, it's on your schedule. Email me. Let me know when you're ready for the one-on-one consulting. We're going to record it on Zoom, so you can have that to watch it again and just bring a bunch of questions. And I have my ebook I'll throw in there as well. Normally that goes for $875, and today it's $625. There's the link if somebody can put that in the chat there. Thank you, Jeffrey. So again, a 5-hour masterclass, 60 minutes of consulting whenever you want, me and you one-on-one to make sure you get it, and then the ebook as well. And then, in my humble opinion, if you apply what you learn in the masterclass, the ebook, and our Zoom session, you're done spending money on education. It's a bold statement, but I have a lot of testimonials from students. I was an instructor with Online Trading Academy for 12 years, and I developed a very good reputation. And I have a lot of people that were struggling or they were brand new and are making money consistently. And again, I have the testimonials on a PDF. So you can take my word for it, or you can email me and say, hey, Dan, send me that PDF document of all your testimonials. I'll be happy to do it. I believe in trust, but verify, right? Trust, but verify. All right, let's get to those charts. It's all about the charts. I used to teach in Boston, and we would open up the charts. All right, if you also want my ebook by itself, $44.50 or $44.95. My ebook, there's the link for the ebook only. If you want that, you can put the link in there. And then if you're very, very serious and you want some serious 4-month mentoring, that's a little higher price point. But if you have the means and you're very, very serious, there's that link as well. You get a free ebook with your 30-minute consultation. And then I'm going to start a 4-month complete mentoring program with weekly Zoom sessions, a Slack group. You get all 4. You get the 4-day class. This is 12 hours, not the 5-hour masterclass, but you get 12 hours deep dive into trend following and trend lines. You'll get the recording of that, and then I'll do a live one as well. So I want to prepare you so you'll be prepared for the live session by just watching the recordings of the prior class. I'm recording, and then I'll have the new one. I'll do it live. So if you're serious about mentoring in 4-month, complete 4-month mentoring and coaching, you can hit that link as well. All right. I got this from a student in Charlotte, North Carolina. She's thinking about Valentine's Day and that perfume and that diamond ring. And the trader on the right's thinking about that trendline break on NVIDIA where he's going to make an 8-to-1 risk reward trade. I love that one. So I got that in there. All right, let's go to MetaStock. Let's have some fun on MetaStock. And we had 12 minutes or so. So this is the S&P. Some of you out there are already clients and customers of MetaStock. Very reliable platform, accurate data, lot of bells and whistles. They have great stuff on trend lines, of course. The trend line features right here on the upper left. So this is the S&P futures daily chart with some trend lines and some trend line breaks. I use the yellow ellipse to point out where the trend line breaks occurred. So number one, I mean, I love TLBs. Don't get me wrong. They're a money maker. But number one, you want to join the trend. pardon me. You want to find spots to join the trend once there's 3 touches and you want to join the trend. Number 2, you want to be ready for the bend at the end or that sharp reversal and the trend line break. Hashtag TLB. On Twitter, my handle's @ or # or at hashtag TLB Trader on Twitter if you want to follow me. Hashtag TLB Trader. But TLB is trend line break. So I put the ellipses, yellow ellipses, where the trend line breaks occurred. Some of them are 8 or 10 to 1 risk reward. This one over here, where's the one? This one over here in June, it only worked for a day and a half or 2 days for 15, 20 points, and then it didn't. So again, some are big winners, some are medium winners, some are losses, right? Some are losses, folks. You got to manage their risk. They don't all work. A lot of them do, but they don't all work. And again, nobody's going to come and tell you that everything works 100% of the time because that's a lie. But man, they can generate some, especially in the higher time frames. I love those higher time frames. So you just draw your trend line and you attach the lows. If you were a good connect the dotter in kindergarten or 2nd grade, you can become a good trend line drawer. There's a couple nuances where I'll shave off a wick or two because sometimes you get that emotional spike above or below the trend line, and if I shave off 1 or 2 wicks, I'm not going to curve fit and get rid of 3 or 4 or 5. But I've noticed if I shave off 1 or 2 emotional wicks that penetrate the trend line, then I get a tighter trend line in it. It can work nicely. Not all the time, but many, many times. But here's the trend line break to the upside. What was that? October. This is the daily, so October 31st. We got above a downtrend line. So there's all those lower highs since January of 20. Oh, that's July, excuse me. There's the lower highs going back to January of 22, right here. Right there up at 4,700. But we've had a bunch of lower highs and lower lows, right? But most recently, there's our swing high, July of 2023, 5 months ago. But we have lower highs. If we can take out these 2 highs right here, we're not that far away. If we can get 1 or 2 closes above these 2 highs, I'd turn back bullish. We are seasonally in a bullish period from November 1st through Christmas, and you get that Santa Claus rally 7 or 8 out of 10 years. So we'll see if that lasts. But the market's got a lot of headwinds to deal with a lot of stuff going on, obviously, geopolitically. Inflation's still pretty much there. You got to watch the bond market. You got to watch either TLT or the 10-year note or the 30-year bonds because that correlation has worked very, very well for many, many months. Bonds have had a powerful rally. They were trending down. Interest rates are going up. The stock market does not like rapidly rising rates. So there's some trend line breaks and some trend lines. Here's a great wedge pattern. Back in April of this year, we broke out of a tight wedge. Sometimes the market gets tighter and tighter, lulls you to sleep, and then bam, inertia. There's the breakout for a few points nicely, and then there's the retest. Sometimes you break out and it doesn't come back. Sometimes half the time you break out or 40% of the time and you get that retest. Breakout, retest, and then boom, boom, boom. So you get 2 trades out of it sometimes in a wedge. And patterns are also universal. They can work on all time frames. So let me type in another symbol here. Let's look at the NASDAQ and draw some trend lines. Capital NQ lowercase c1. Here's the NASDAQ futures, and let's just go to a different time frame just to show you. It's on different time frames here. Let's go to I like the 4-hour chart as well on the NASDAQ. Oh, look at we bounced back nicely. I covered my shorts nicely down there today, but we had a nice drop down to about 1528 or so, and here we are back at 1538. So, but let me draw a couple trend lines on here, folks. Here, starting here to the left, there's a nice little 3-touch trend line break coming out of a wedge, right? There's an old saying, folks. There's an old saying, folks. A new move comes out of the middle. A new large directional move originates from the middle of an old move, or the apex on a wedge, or if you're on the volume profile, that point of control, right? If you're a volume profile person, the thick part of the bell-shaped curve, sometimes a new large move originates from that point of control or the apex of a wedge. So, and all a wedge is, folks, is two intersecting trend lines. Lower highs meets higher lows, and you get that apex, and this one never came back. Look at that 4-hour chart. September 20th, NASDAQ went from 15.39 in 16 hours to 14.8. And there's an 8 or 10 to 1 risk reward trade. I know it looks easy after the fact, folks, but and I'm a great hindsight trader, believe me, but seriously, once you can see these and visualize them, and if there's no demand for a while or no support, let those winners run. Put on 5 micros or 3 micros. That's why I like doing micros. I might have 14 or 16 micros on, 10 NASDAQ or 10 micros equal to 1 NASDAQ, but I'd rather pay the $250 of commission or whatever it is. And then I like to scale in and scale out as I'm taking profits, or scaling in and scaling out. I love that. So anyway, a couple more trend lines on the NQ here. Here's a beautiful one. There's a beautiful trend line break. October 12th, a month ago. Look at that one. Drop, a little sucker rally, drop, a little sucker rally, drop, lower highs the whole way down, folks. Read the price action. Trade what's really happening, right? Trade what's in front of you. Don't trade what you want to happen, what you think is going to happen, right? Or you heard is going to happen. Trade what's really happening with the price action. So there's a false breakout. We got below this little descending triangle, lower highs with the same floor, but that's at least 60 or 80 points. And then it came back up. You get 2 trades out of it. Here's a smaller trade, and then the big trade was the second time down. And we broke a secondary trend line on that one as well. Boom. And again, here's where I shave off one little wick. See, if I get rid of one little wick, I get a better trend line break on that one. Couple questions coming in. What time frame would you look at for day trading and swing trading? So day trading, I hate the 5-minute chart, folks. There's too much emotion and zooming and zagging. I would go 240, 60, and 15 for day trading. I love the volume chart, 10K volume chart, as I mentioned earlier. But 240, 60, and 15 for day trading. And then swing trading, I would go daily. I love the 480 chart too, the 8-hour chart on futures or Forex. I do daily 480, and then like a 120, or daily 480, 60. And I look at my volume chart for short-term stuff, but those are a couple good time frames. Okay. There's no right or wrong answer. I'm not a big believer in the 5-minute chart. I lost a lot of money in the 5-minute chart. So, but there's a recent trend line break. Look at that one, folks. That's real recent. October 25th. Broke that trend line. Boom. So let's look at a few more. Let's look at Tesla. Or you guys can type in a symbol just to show you I'm not piggybacking, or what do they call that? Sandbagging any trades. Type in any symbol you want, and we can take a look at it. I can do oil, gold. Let's do move bear. I can do. Let me do. What did I say? Tesla. Let's look at Tesla's been a big downtrend lately. Oh, wait, I forgot to do the O. Oh, no, it still did it, right? Yeah, there's Tesla.O. Let's go back to a daily on Tesla. Well, let me show you weekly, folks. Let me show you weekly. You could. That's a great question. What time frame do you enter on? I can enter on any of the 3 time frames, to be perfectly frank. I can see a good trade in the daily chart. You might have to, risk is always going to be commensurate with reward, right? Risk is always commensurate with reward. So on the daily chart, you might need to risk 8 or 10 or 12 S&P points to make 30 or 40 or 60, or risk 30 or 40 in NASDAQ to make 150 or 200. But you can so you can take a trend line, join a trend, or take a trend line break trade on any time frame. Honestly, you don't need to go down to the lowest time frame. If you need to or want to, you don't need to. But if you want to refine your risk or whatever, you can go to the lower time frame if you want. But here's Tesla on the weekly. Oops, let me click on the trend line. So here was one. here's one more with a tighter angle. Some are 88 degrees. Some are, 65 degrees. You never know. I mean, they all can be, you never know which one's going to work or not work. But as you can see, you just grab the lows there. There's a beautiful one. February, we went from 273.60 to 180. 270 to 180. There's a $90 drop in 3 weeks. You can buy some puts. You can short sell Tesla, whatever you need. But we're approaching 3 o'clock, folks. I want to be invited back with Jeffrey in January or February, whenever the next one is. So I'm always watching the time. But hope you enjoyed it. Email me with any questions. Hit those links if you want the deal for the masterclass or the ebook, etc. And I hope you got some good information on trend following and trend lines. The trend is your friend. That was Tesla there. Yep. Say hi, Bear. Here's my Bernedoodle. Hi, Bear. Say hi, Bear. He's a beautiful Bernedoodle. He thinks he's a Chihuahua, though, at 8 pounds, but he's 85 pounds. Right, Big Bear? So, again, email me questions, folks, and I'll see you on the masterclass or the live Zoom consulting. And if you're serious about the 4-month mentoring program and deep dive into this, I can't say the word guarantee because that's a no-no. You can't say guarantee because I don't know if you're going to apply what you learn. But what I can assure you is if you apply what you learn, you'll never spend any more money on education again. All righty.
All right. Thanks, Ken. Appreciate it. Good job today. Nice talks.
Thank you.
All right. Very good. Good stuff. Thanks, Michael. Thanks, Vince. Thank you again, Dan. And we've got the links in the descriptions right now. So I'm going to kind of take over the presentation here. Let me go ahead and do this. Oops, not that. Cancel. What am I doing? Okay.
Let me know who wins the ebooks.
All right. We'll do. Thanks, Daniel. All right. Sound great. Let me go ahead and make myself the presenter real quick. And we'll go ahead and show my screen too. And wow, I can see myself really, really well. All right. Thank you again, Dan. That was great. We'll take a second now to thank our sponsor, CMT Association. CMT has been a sponsor of Metastock for a number of years. We really appreciate kind of what they've been doing and kind of who they are and their sponsorship. CMT, they're going to come in. Tyler's going to come in and talk tomorrow. You can find out more about the CMT Association if you go to cmtassociation.org. You can also call them at 646-652-3300. So there you go. All right. And of course, we are Metastock. It looks like it's getting to be prize time. With Metastock, you can scan markets, test trading ideas, forecast probable price movements, get real-time alerts, commentary signals, all that kind of good stuff. Normally, the pricing is about $69 per month. Here in the US is what the pricing starts out for our DC version. If you pay for a month, we will give you a second and a third month for free. So let's go here. Let's go ahead and do that. If you haven't tried Metastock, now's a really, really good time. So if you will, give me a number. What kind of number am I looking for? Give me a number anywhere between 1 and 10,855. Any number 1 and 10,855. Put it in the YouTube comments. Put it in the GoToWebinar comments, and we'll pick a winner. Give me just a second here. Okay. All right. And what is the prize? Well, I'm glad you asked. Hold on a second. Let me find one. Okay. Our next prize winner is going to be three trend writer for Daniel Cynics. So with Daniel's going to come in. He's going to talk tomorrow. He's going to be telling us about his Power Bundle 360 and another add-on that he has called Super Signals. Very, very good system designer, and he's going to talk us through the program and kind of give us some information on that. Right now, we're going to give away his trend radar indicator. This will help you find pullbacks, reversal, and new trends with this powerful indicator. You'll be able to see at a glance the current market conditions, and a unique heat map like visualizations will show you everything you need to know without looking at the chart. So All right, thanks for all the charts, the numbers. Let's go ahead and go with 3521, and I'll tell you who that is really quick. One sec. Okay. That's Joe Bergen. Joe. Oh, oops. I just doxed. Yeah, Joe. Congratulations for that. Okay. Let me go ahead and make that. And I noted that. I will forget who the next winner was as well. Okay. Let's see. 8256 from Mike in YouTube. So let me go ahead and look at that. I will figure out who the second one is. Alan C. Okay, Alan, we're going to go ahead and kind of make you a note of that. We'll go ahead and put that on there. So here we go. Okay. All right. Right now we are having a little bit of a technical issue that we're going to try and sort out with our next presenter. Give us just a few minutes. I'm going to play a little bit of a video for when this happens, but just give me a second.
Marketing director, I get asked all the time, what is Mel? Stick around for about 3 minutes and I'll tell you. Metastock is an award-winning software and data package that has been helping traders for over 35 years. Simply put, Metastock is a tool for traders like you to analyze the markets. Metastock helps you take the guesswork out of trading by offering a methodical, systematic approach to some key questions all traders come up against. Questions like, how do I decide which securities to trade when there are literally thousands to choose from? Which strategy should I use, and how do I test that strategy before spending my first trading dollar? When should I enter and exit a trade? How can I effectively manage the securities I'm interested in? And of course, how do I know where prices will go next? At the core of Metastock are the power tools. The power tools give professional-grade analysis tools to private traders like you and me. You can scan the market with the Metastock Explorer to filter and sort securities that show buy and sell signals based on your criteria. The Metastock System Tester lets you test most strategies through a process called backtesting, which allows you to see how your strategy would have performed over time. You can easily manage and monitor the securities you are interested in with Quote Center. Quote Center lets you sort on a variety of criteria to view the data that's important to you. Then just double-click on a security if you want to see its chart. With the Metastock Forecaster, you can even take advantage of patented technology to view probable future prices. If you're an options trader, you're going to love Metastock's Option Scope. Option Scope puts all the critical info at your fingertips, displaying sortable, customizable, color-coded options data, including the Greeks. And Metastock has solutions for traders of all levels and interests. If you're just getting into trading, you will appreciate the education offered by our many built-in systems. In addition to pointing out buy and sell signals, Metastock explains how they work in an easy-to-follow commentary window. Metastock has built-in systems based on popular strategies like MACD, Bollinger Bands, turtle trading, candlesticks, and many more. Metastock even has the very popular and exclusive Rahul Mohindar oscillator system, or simply known as the RMO. And as you become a more experienced trader, Metastock grows with you. Advanced analysts will enjoy the comprehensive list of trading systems and indicators and the ability to build their own systems. And if you're a day trader, you can't do better than Zenith, the real-time news, data, and analysis package offered by Refinitiv, a world leader in market data. Add on the world-class support, and it's not hard to see why Metastock has won the Stocks and Commodities Reader's Choice Award for 26 consecutive years. To find out more about Metastock and how it can help your trading, visit metastock.com or contact a product professional via phone, email, or chat.
My name is Martin Pring. Greg Morris.
My name is Mark Leibovitz.
Okay, I'm Price Headley.
I'm Stephen Cooper.
My name is Kevin Nelson.
I'm the founder.
All right, so we're gonna have a little bit of a new change in schedule as well. Adrian just texted me saying at the wrong time. We was our next presenter as well, so we're gonna go with the new plan. Kelly, Clement is gonna do his presentation tomorrow. That he was gonna do tomorrow. Right now, he's getting ready, and he should be ready any second now. Kelly, are you ready?
I was born ready, Geoff.
Yeah, I just got a text. They had us down for he thought it was on Friday, so I've been texting him. Hey, you coming? Hey, we'd love to see you. So in any case, there's a little bit of a scheduling issue. Kelly is going to join us from his office. He's going to do his thing tomorrow. So and then we'll see if we can get Adrian to fill in for us tomorrow during Kelly's slot. I'll let you know in a minute. Things happen. We really don't run into a lot of scheduling issues, but man, today, when they come, right? So, all right, Kelly, let's go ahead. We'll make you the presenter. I think you're logged in as a Metastock webinars right now, so let me go ahead and make you the presenter. Okay.
Yes, it'll be under that one. Okay.
Perfect. And I appreciate your being able to step in. We've had a few adjustments today.
It's been one of those days, but that's okay. We're gonna get through this.
Heck yeah. Well, I mean, and that's the funny thing. It's like a lot of times if people go short, we're like, well, let me show you this in Metastock, or hey, let me show you this. Well, I can always talk about this. So Kelly Clement, I'm going to introduce you. Kelly is my boss. He does a really good job. He's actually the president of Metastock. He's going to talk about systems testing today and the power tools of Metastock. And so without further ado, Kelly, I'll let you kick it off. And thank you for jumping in.
Yeah, it's the fastest I've ever gotten ready for a presentation in my life right there. All right, I am excited, everybody, because I do love coming in. I love talking about trading and some of the different tools that you can use in trading. And what I want to do is kind of show you some of my favorite workflows for identifying trading opportunities in the market. So we're going to look at some different things. I'm going to have some questions for you here in just a minute. But let's start with our all famous disclaimer. I know you've heard it a few times today, but every time we talk, we gotta go through it. So this demonstration is designed to instruct you on using Metastock and accompanying software plugins, and is not a recommendation to buy or sell, but rather guidelines to interpreting and using the specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. Metastock shall have no liability liability for any investment decisions based on the use of their software, any trading strategies, or any information provided in connection with the company. So risk in the market, we all know that. And if you're not sure of how risk affects you in the market, it'd be good to learn about that and understand the risks that are that happen in the market. So just a little bit of background again. I think Scott actually already took you through all this a little bit ago, so I'm not going to spend a lot of time on this because of the weird time thing. I don't have a lot of time, so I want to get right into that. So, but Metastock's been around for a long time. We've been around for 40 plus years. And of that, we've won the Technical Analysis of Stocks and Commodities Reader's Choice Award for the last 30 years. That's 30 years straight. We're very, very proud of that. But let's jump into what I want to talk about today. So there's some Metastock tools. We're not going to talk about all these tools. You've seen a lot of the Metastock charting with the different presenters today. Dan was just showing you some Metastock charts in the last presentation. We're going to talk a lot about market scanning today and back testing. You've already heard about forecasting. We have options tools, global data, powerful news, but what we're really going to focus on is scanning and back testing. But the very first thing I always like to talk about when I do a presentation is rule following. And the reason why I like to show a cockpit is because if you talk to a pilot, the thing a pilot has to do every time they step into that cockpit is they have to go through a checklist. And if they don't go through their checklist, something goes wrong. It's kind of funny. It's not funny, but one of my favorite shows that I like to watch is a show called Airplane Disasters. Now, it's a little bit morbid, it sounds like, but if you've ever watched Airplane Disasters, what they do is they go back after an airplane accident and they try and figure out what happened, what went wrong. Well, and usually what happens is, if it's not a mechanical failure, it's a pilot failure because the pilot didn't follow their checklist, and that leads to disaster. And that can be equated to our trading very, very easily. If we're not following our plans, if we're not following our rules, things can go south on us pretty quickly. And I can say I've had times when I haven't followed my plan and things have gone to a disaster very quickly. And I'm sure many of you in here could say that. You don't have to admit it in the chat room. That's okay. I'll admit it in front of everybody. I've had that. I haven't followed my rules. And every time I do, that's when things go wrong. Okay, so rule following is very, very important in trading. So what we're going to do is we're going to talk about how to find the best stocks to trade, when you should get in and out of a trade, how to test your trading system before you spend your first trading dollar, then how to add some clarity to your trading decisions. Now, when we talk about indicators and we talk about trading systems, there's really 4 groupings and types of indicators. We have these 4 different groups. We have trending indicators, momentum indicators, volatility indicators, and volume indicators. Now, one question I am going to ask of everybody, and I'd love to hear what your answer to this is what is not your favorite trading strategy, not your favorite chart pattern, what your favorite indicator is. Is it the MACD? Is it the RSI? Is it stochastic? Is it moving averages? What is your favorite indicator? So go ahead and throw into chat what your favorite indicator is, because I'd like an indication of what I can talk about today, kind of what your favorite indicators are. So go ahead and just throw one favorite indicator in there. So not, again, I'm not looking for flag formations or trend lines, things like that. Moving average, MACD, moving averages, whatever it may be, throw that into chat so I can get a good indication of that. So as we're talking about these 4 different types of indicators, again, we're talking about trending, momentum, volatility, and volume. So when we kind of break these out, we look at it and we say, okay, of these 4 different types of indicators, we have trend, and some examples here are moving average, MACD. We have momentum, so stochastic, RSI. Volatility, things like Bollinger Bands, average true range. And volume, we have on balance volume and Chaikin money flow as some examples. Now, you may not know all of these indicators, and that's okay. You don't have to. What we're talking about here are just some examples. And I'm seeing some great answers here. Thank you. So let's see. Michael, I have the moving average. Jerry uses market profile. Mari, I hope I said that right. Maybe it's Mary. RSI. Charles, money flow. Michael, RSI. Ralph, CCI. Okay. So we've got some more coming in. So it looks like we have a varying look at different indicators that people use or their favorite indicator. And it's always interesting to me to ask that question because people trade in different ways. And each of these different indicators that I just mentioned that people are using are different. So maybe Michael's a momentum trader. Maybe, let's see, who's using MACD? Okay, all right, let's see, Sarah's using MACD, so maybe that's, she's a trend trader. Okay, so I don't really see any volatility traders based off of the different indicators that people are using. So that kind of gives you an idea of maybe how people are trading by what types of indicators they use. But the question we always kind of come across when we're looking at a chart is, well, if I look at this chart of Apple here, how do I know which of these indicators we've been talking about is really the best one? Because, you know, right here, it looks like it's got great momentum, but it's also volatile. Okay, so we've got some conflicting indicators going on. So how do we know which one we should use? Joseph, price is king. Absolutely. I agree with that wholeheartedly. Price is king, and that's what all the indicators are based off of. So when we're looking at different indicators, things like trend, momentum, volatility, and volume, and we look at this chart, we go, well, which one should I use? So that kind of lends into what we're going to be talking about today. So what we're going to do is find your preferred indicator. So whichever indicator you mentioned in chat there, how do you take that indicator and find the best stocks to trade it on? And then we're also going to look at how to find the best indicator. So we're going to do a couple of different workflows today. So let's go ahead and end our PowerPoint here because we're going to spend the rest of our time in Metastock and actually looking and analyzing some different charts. Okay, so let's make sure that Metastock is up on the screen. All right, Metastock is up on the screen. All right, so we've been looking at the different charts and things, but today we haven't really talked much about the forecaster, and that's excuse me, we talked about the forecaster. We haven't talked much about the explorer and what the explorer is. So we're going to take some of these different examples that people have been talking about, and RSI, interestingly enough, is the one that came up the most. So what we're going to do today is we're going to take the RSI as an example, and then we're going to find opportunities with the RSI, and then we're going to test them to see how well they're performing on the stocks that we're looking at. Do they match up? So what I'm going to do here is I'm just going to come up here to the top of Metastock. In Metastock 18, this is awesome, this search dialog. I don't have to scroll through to find it. I can just type in RSI up here, and I get everything with RSI in it. So I'm going to do here the relative strength index, the RSI, and what I'm going to do is I'm going to come down here and select the S&P 500. Now what that allows me to do, let's do S&P 500. Now I can do this on any list of stocks. I'm not tied to the S&P 500. If you're in Australia, you could scan, you could see the ASX stocks, or if you're in Singapore, the Straits Times, you could look through those. Whatever market you're looking through, you can scan and look for these opportunities. Okay, so let's look for RSI. And what this is going to do is it's going to look for buy opportunities and sell opportunities that are happening right now based on today's data. So let's go ahead and let's take a look. Okay, so it's going to go ahead and scan here through me. You can see it's going through and filtering out. It's rejecting 99% of those stocks. So only a few of these stocks have RSI buy opportunities today. Now, when this gives us the results, I'm not telling you you should buy or sell based off of the RSI. I'm basically showing you some examples of how this works, okay? So if I come in now, I can see that I have a buy column, a sell column, and then an RSI value column here. So if I rank on buy, so I have a buy opportunity listed on Dish Network and a buy opportunity listed on Fortive, and then sells on CBOE Global, Expedia, Monster, Qualcomm, and Ross Stores. let's just pop open one example here. Okay, and let's look at this, and let's put the RSI on the chart. Okay, so if I find RSI, okay, and we're just going to plop this on. Now Metastock knows where it should go, if it should go in its own window. Okay, and there is our signal crossing. So there is our buy opportunity based off of this indicator. Okay, so that's a quick, easy way to identify it. Another cool tool you could do in Metastock, if you're not familiar with it, is what we call the Expert Advisor. Now the Expert Advisor will put buy and sell signals on your chart based off of the indicators that you've selected. So there's my RSI crossing above the 30, giving me that trigger. Okay, now the challenge is here, I could go back in time and I could look at all these buy opportunities and I could say, oh, well, you know what? It kind of worked here. Went flat pretty quickly here. Kind of worked here. Kind of, man, not really here. Is it going to work here? You know, so I could go through and analyze it this way and try and figure out if it has performed well historically. But that's very, very time consuming. It takes up a lot of our time. And really what we want to do is be getting to the best trade in the quickest fashion. Okay, so an easy way to do that, let's pull our exploration results back over here. So again, so I scanned 500 stocks. I got 7 results back. So rather than spending the time going through these 7 stocks, what I want to do is something called system testing. Now, what system testing is it's an easy way for me to say, okay, well, if I want to look at Dish Network and I wanted to look at all the trades over the last 5 years or 10 years or 3 months or whatever it is, and see how well it's performed and get some results so it can help me understand if it's worked well in the past, it might be a good indication of if it's going to work well in the future. Now, it's no guarantee, but what we're trying to do is, it's kind of like a personality test. It's almost like a Match.com, right? I'm trying to match if the RSI and Dish Network want to go out. That's what we want to do. We want to see if they want to go out on a date. So let's see if they do. So what we're going to do is we're going to go into the Power Console here again. And instead of being in the Explorer, we're going to go down to the System Tester here. So what I'm going to do is, again, I'm going to select my system. So we want RSI. And what I want is the last exploration result. So I'm just going to come down here to the very bottom, and you can see last exploration result 0 of 7. So if I select that, those are the 7 stocks that I just found on my exploration result. And then what I can do is I can tell the system tester, well, hey, this is how I trade, so this is what I want to know if it performs. So you can tell the system tester, I go long only, I go short only, or I do both. Now with this RSI scan that we did, we had buy opportunities and sell opportunities. So really what we want to do is we want to look at both. So I'm just going to go ahead and back test both to see how they've performed, since we have the both varying opportunities in there. Then I can tell it, well, I want to look at a specific date range, or I can look at the last number of records. Now, if I'm looking at 1250 records, what I'm looking at is about the last 5 years of data. There's about 252 trading days in a year. So here we're going to do 1250, and we're going to see how that looks. Okay, daily is the time frame that I'm finding my opportunity on. So we're going to leave it on that, but I could do any time frame that I wanted. If I'm using Metastock end of day, I would see daily, weekly, monthly, quarterly, yearly. With Metastock RT, I can look at any time frame that I want to. Here you can see I have a 1 minute, 5 minute, 10, 30, hourly. I can also do custom time frames and build whatever I wanted. If I wanted a 3-minute chart or something like that, I could do that as well. Now, finally, we need to do just one more thing in our personality test to make sure that we're up to speed. And that is system test options. And what this is, it's just some generic questions. We're fitting our personality profile on Match.com to see how, if we're matching up here. So if I was trading futures here, I would say points only test. So futures trade based off of points, if you're not familiar with that. So we would select points only. I'd also select that on Forex or on crypto. So if I was doing either of those, I'd select points only. Since I'm doing equity here, I could do a couple of different things. I can do number of units. So if I was trading 100 shares or 1,000 shares or 10 million shares or whatever it is, you could actually do that. Transaction cost. So if I wanted to say, okay, I'm putting in $1,000 every time I trade it. That's all I'm doing is $1,000. You could put that as the transaction cost. Or you could say percentage of available equity. So if I were up here and I had $100,000 hypothetically in my account, whatever you have, you may have $10 in your trading account, or you may have 10 billion, whatever you have, you can put that number in here. And then you can say what percentage of that you're willing to risk in a trade. Now, you're never going to put, well, you may not want to. It's probably a good idea not to put all your eggs in one basket and put all that money into one trade. So what we're going to do is actually say, well, we're not going to risk 100% of our money. We'll maybe risk 20%. Now, that's still even very high, and I don't really recommend even going that high. But what you could do here is, so I'm just doing this for the math purpose, okay? So if I have $100,000 in my trading account and I'm willing to risk 20% of that, I'm willing to risk 20,000. If my money goes up to 200,000, well, now I'm risking 40,000. If I go down to 50,000, then I'm risking 10,000, okay? So that's how the math works. Broker, most people are just gonna leave this one alone, okay? You're gonna leave reporting alone, you're gonna leave broker alone, because all you're saying here is if you trade on margin, you can put in what your margin requirements are. And then if you make money in a money market account when you're out of the trade, you could put that in here as well if you want to count that in. Most people don't. And then commissions, most people are paying $0 commissions these days. So you'd leave that blank as well. Unless you're trading futures, then you may need to put some commissions in here, okay? And then finally, trade execution. Now this is all kind of a, how would we say it, a set it and forget it type of scenario, okay? So what we're looking at is we're saying realistic market prices. Okay, what in the heck is realistic market prices? Okay, so if I'm looking at this, I get a buy signal today from on the RSI on Dish Network here in the background. If I'm looking at a daily chart, when am I really getting into that trade? I really don't take the trade until the next trading bar, okay? And that's what realistic market prices is. It's saying, well, okay, I got my buy signal. Let's wait till the next day to actually take that trade. If it was on a 5-minute, I get the signal, I'm on the trade the next 5 minutes because we want that bar to close and confirm before we actually make a trade. So the system tester kind of knows that automatically and defaults to that, but you can customize it if you want to. Thank you, Don, over in YouTube. He uses the Williams %R. That's another great indicator that you could do everything that we're talking about in here as well. So there's lots of indicators that you can do all this with. Okay, so let's, last thing here, you can also put in slippage as part of your equation as well, but we're not gonna go into that today. Now, I'm kind of going through all this rather quickly. There's not a lot you really have to put in here. I'm just kind of showing you all the high level details. We have lots of great training that helps you easily learn how to do all this. It's very easy to learn once you kind of get into it and go through it once or twice. The great thing is, if you're new to Metastock, we'll even set up a 2-hour window with you where we'll sit down with you for 2 hours when you get Metastock and take you through everything. I mean, it doesn't have to be 2 hours. It could be 20 minutes. It could be 5 minutes, or it could be 2 hours. If you have very special things that you want to do with Metastock as a new customer, we help you get going. And then we offer free support for the life of the product to help you understand and learn the product. Because obviously we want you to be succeeding. And that's a big goal of ours. Okay, so we're now going to test the relative strength index, the RSI, against our last exploration results. And we're gonna see which one works. Which one are we going on a date with? Let's find out. Okay, so now when I pull this up, what we're seeing here is we're seeing a graphical representation of how well the RSI traded over the last 5 years on these different stocks. So if I just come down here and I rank this on percent gain, okay, so we're looking at Qualcomm here as our top rank one. Now, over that 5-year period, we're looking at a $24,000 profit for a 24% gain. Now, over 5 years, it only had 11 trades. Okay, so it doesn't trade very often, but when it does, it seems like it works very well. We'll dive more into some details here in just a second. And then of those 11 trades, 9 were winners, 2 were losers. Okay, so that's a pretty good risk-reward ratio. So, I mean, if we're coming down here to the bottom one, the CBOE on the RSI, over that 5-year period, it lost 1%, had 8 trades, 4 were winners, 4 were losers. Okay, so you can kind of start to get a feel for, well, you know, I probably don't want to trade CBOE because it doesn't match the personality. So if we go back here just for a second, so if we're looking at RSI here and we're seeing that it's a momentum indicator, well, I'm probably seeing that CBOE doesn't trade as a momentum-based stock. It doesn't follow that. And later we can look and see, well, maybe what indicators do work on CBOE if that's something you're interested in trading. But for now, we're going to focus in on Qualcomm. So Qualcomm seems to be a momentum-based stock just from what we're seeing here initially. So let's dive into it a little bit more. Okay, so I'm just going to go in here. Now, there are people in the world who like lots and lots and lots and lots of detail. And in the system tester, you can get lots and lots and lots and lots of detail, okay? But you don't have to look at all the detail. There's some very critical key points that are very relevant in the system tester, and that's what we're going to focus on today. But if you are somebody who likes to scrutinize lots of data points in making analysis, so there's a lot that you can go through in the system tester, okay? Let's go ahead and look at what we're looking at here. Again, so this is a quick synopsis of what we already saw. So 24% gain. So if an annualized performance of about 4.9%, buy and hold performance was 24%. And so if you would have bought and held this stock, it would have been about the same performance as if you had traded it. But we're traders. We want to make sure we're in and out of trades, okay? So we had 11 total trades, and our average profit was about $3,900 per trade. If I come down here to unprofitable trades, my highest average loss was $5,400. So my 2 losers on average were about $5,400, and my average profit was about $3,900. Now, point here. If I come down here and I look at an average loss of $5,400, are you going to let something go against you $5,400 if you're following some rule-based trading? My guess is no, I wouldn't. So what this is doing, and this is pretty important, this is strictly saying when the RSI says buy, buy. When the RSI says sell, sell. Okay, so it's using some very specific rules around what it's doing. Now, if you trade with stops, and you should trade with stops, I would say, is you can go in and you can program those into the system tester. Shikar is asking, what is the sell criteria for the RSI? That's a great question. I will show you here in just a second what the rules are that it's using for the sell criteria on the RSI. Okay, now, so it's not using stops in here, but you can put those stops in. As part of that white glove service to help you get it up and running, we can show you how to do that. We have great tutorial videos to show you how to do that. So there's going to be a lot of help to help you get up and running and understanding how all these tools work. Okay, so that's our highest profit was about 8K. Our highest loss was about 7,200. And again, I always take that unprofitable trade with a grain of salt, because most of us are not going to allow it to go like that. Okay, that's something we have to consider. But I like system testing like this because it gives me a clean view of how the system stands on its own. Okay, all right. So that's a quick overview of that. Here you can go in, you can see how when all the orders were placed, what it looked like, everything, position, excursions, all this information. So I can see, okay, it went short here at about 278 units. It went long here, you went 392 units. I don't care about all that. I don't get into each individual trade. What I am is I am a big picture guy. I really like the big picture and what the big picture shows me. So let's go to the big picture here. And the big picture here for me is an equity line and what the equity line is. Okay, what is an equity line? Let's talk about that for just a moment. So what an equity line is, my money started off at 100,000. That's what I said I had in my account. So what the equity line here is showing is what my money has done in those trades over time. So I could see if I had taken all those trades. Now, another point is you're probably not going to sit there and trade the same stock over and over and over and over again. You're probably going to say, okay, I made money, I'm off to the next stock. I made money or I lost money, I'm off to the next stock, okay? So this is going to help us determine if this is something that we are interested in considering, okay? So my money here was 100,000. We went up, we went down, and what I'm really interested in is the last probably year and a half of data. So if I look at this, this is what my money has done the last year and a half. It seems like it has gone up. It's been a little choppy through here, and then it's gone up. So if I was looking at this back here, let's say I opened up this equity line and this was my endpoint right here, and I'd seen that the trades had been going like this, I would have said, I'm out. I'm not interested in that at all because it's not performing well. But what has it been doing more recently? Well, it seems like it has been going steadily up for the most part. It's had some choppiness here, but seems to be doing relatively well over the last couple of years. So this may be something I consider. This might be it might be a match. Okay, so that's a quick thing. Let's go down and let's look at the next equity line. Let's take a look at what that one is. Without looking at anything else, I just want to look at the equity line. So here's another equity line. Okay, the last couple of years, it's gone up, but here it stayed relatively flat. Okay, we're not getting a lot of action except maybe right here the last little bit. Okay, well, let's look at number 3. Okay, so over the last 5 years, it performed well. It got up to 135,000, but what's it doing now? Okay, so this is where system testing can help us get that right match. It can help us match up what we're looking at. So if we're looking at 1, 2, 3, or let's look at 4 just to see. Okay, so we've got 4 doors that we can choose from here. We've got our first one, which was called Qualcomm. Then we had Monster, we had Dish, and then we had Ross. Which of those as an equity line would you consider to be the best equity line? Which one would you see as the best one? While you answer that, I'm going to take a quick drink of water. Okay, so, and I'm sorry, I'm probably saying it wrong, Mari. Number 6, which is Qualcomm, is the one that they feel is the best one. Yes, so Daniel is asking, can you compare them each to buy and hold performance? Absolutely. So when you're in there, there is this view right here of buy and hold performance over that same period. So you can actually look at it that way if you would like to. So that is available in there. Good question. Okay. Yeah, I would agree with Mari on number 6. So the equity line here seems to be the best one. Okay. Now let's go and open Qualcomm just so we can take a look at it. Qcom.o. Okay, and I am, again, by no means recommending that you trade Qualcomm. This is just all, again, for informational purposes. but we can see here now, this is actually a sell setup on this particular one. You can see that. So this isn't, so if you're interested in going short, we can put on our expert advisor. Go back down to RSI, put that on, and you can see there's our sell right there. So if you're interested in going short, this might be an opportunity based off of past performance and what we've seen in the past. Okay, so here's the previous sell before that one. But you can see the signals range and cross from here. Now, Shakar asked, what is the sell criteria? Can I see it in the system tester? And the answer is yes. So if I go back here, and I go back to the report we were just looking at, I can click view and go to report. And anytime you're in a system tester, you can go to equity, or excuse me, you can go to system, and then you can see here, if it's an open formula, you can see what the signal, what the entry and exit are. So here's our buy order, here's our sell order. So this is basically looking for a cross of the 70 RSI 14. So it's just looking for that cross below on the 70 on a 14 period RSI is what that one is looking at. So it's very, very easy to see that. Now, you can build your own system tests. You can do your own things if you want to. But now that we've kind of gone through that really quickly, I want to show you another example and show you how quick this could be to actually do all this. Let's go back to the Explorer. Now, I will say, and probably just about everybody here at Metastock would agree with me on this one, but the Explorer is probably our favorite tool. It makes it so easy to find opportunities, because I can just go in here and say, okay, well, hey, I'm interested in the MACD and MACD, let's do the MACD expert system, which gives both buys and sells. We'll do the S&P 500 again. So it can just quickly go through any list of stocks for me and make it so easy to find opportunities. And that is the, in talking to traders as I go around the world and talk to different traders and different banks and institutions, identifying opportunities is the biggest struggle, is where do I start? Where do I go? How do I find something? And that's where the Explorer just absolutely crushes it and makes it so easy to identify those opportunities. And that's what's great. I'll ask Geoff when we're done with this presentation. I'll say, hey, Geoff, what's your favorite power tool? And he'll go, the Explorer. If I asked Scott earlier, he'd say, yeah, the Explorer, because it just makes it so darn easy. So out of that list of 503, we rejected 400. Oh, there's Geoff right there. Scanner for sure. See, I told you, I wasn't lying. We rejected 475. We have 28 buy and sell opportunities. And then we can rank those and we can see all of our buys. We can see all of our sells. Now, the MACD here has one bit of different information. It actually will also give you buy and sells based off of overbought and oversold. So you can see I can rank on those and see if there are any that are overbought or oversold. It looks like we have quite a few that are oversold. So you can rank off of these and buy and look at these different opportunities. But okay, I have 28 opportunities. Again, how do I know which one is the good one? All right, so then we just go, okay, well, let's jump over to the system tester. And we'll go to the expert system here, and we will go down to the results of last exploration again. Okay, select those 28. We'll do everything the same. We don't have to set anything. It's all set it and forget it. And I can run my system test, and I can see which ones are maybe my matches again. Okay, so if I go to view results, okay, it's that same thing again. I can quickly see, hey, look at these. These don't trade well using the MACD right off the bat. Well, maybe if you did the opposite of what the MACD said to do, it might work, right? But what we want to look at is those top percent gains. Let's look at it here. So Baker Hughes, and if I go back to my slides here again, these are probably trending stocks because the MACD is a trending indicator. Moving averages are trending. So this is an example of a type of indicator that matches the personality of the individual stock. So that helps us identify trending stocks by using the MACD, okay? So let's look at this one. Now the MACD trades a lot more than the RSI does. Remember, we were seeing 11 trades, 9 trades, 7 trades, 12 trades. Now we're seeing 250 trades. So this can also mean, well, what type of trader am I? Am I more of a long time hold trader? Am I a short-term swing trader? So this will help you determine if it fits your personality as far as trading style as well. So if I'm more of an active trader, this might suit me a little bit better. So Baker Hughes, 250 trades, 119 were winners, 131 were losers. So I had more losers than I had winners, but it was my most profitable. So what does that tell me? Well, it tells me that my winners were probably pretty big and my losers were probably smaller than that. So let's dive in. Okay, so 41% performance trading, 10% performance buy and hold. Average profit was about $1,100. Average loss was about $700. So you can see my winners are bigger. Okay, now let's just jump right to the equity line. Let's just go right to it. Okay, so what do we think of that equity line versus kind of the choppiness we were seeing before with the RSI? Before we were seeing a little bit of chop on that trading indicators and what we were seeing, but now what we're seeing is more of a smooth equity trend line here. Now I love this this equity line right up to here, and then what's it do? It goes flat. So if we think about 252 trading days, it's been flat the last year. It's kind of a bummer because I really, that one's worked really well right up into the last year. So maybe not. So even though it's our best performing, may not be one we want to consider. Let's go right to the next one. What about that one? Okay, again, kind of the same. Maybe this one kind of seems to go a little bit more, kind of keeps going a little bit. And then we could just quickly analyze these and go, okay, which of these do I like best? Now this one, what's it doing over the last 6 months? We're having a smooth, strong equity line. So what I'm doing again is I'm saying, okay, I have a stock and I have a trading system. I'm trying to match them up to see if they work well. If they work well, if it's been performant over the last 6 months, that gives me a good indication of, well, hey, it's worked well in the recent past. So is that an indication of it's going to work well in the future? Well, that's always the big question, right? But what we're doing here with system testing is we're saying, well, if it has worked well over the last 6 months or so, it increases my odds of success that it may work well moving forward in the next few trades because it has been performing well. So it's that type of stock. Okay, so that's what we're trying to do again. We're just trying to match it to see it, to help us get a higher odd of success on that next trade. So that one was UPS. Okay, so let's actually just go and look at UPS and look at the MACD. Okay, and there we can see that signal line cross giving us that indication to buy. Okay, so that's one way that we can use the system tester. And again, I'm not recommending that you buy UPS. I'm just giving you a quick overview example of what we're able to accomplish here. Now, I want to take you through one more scenario. And what I'd like to do is somebody just throw out a couple of stocks or futures or something that you're interested in, because we're going to take an alternate approach to this. So what we've been doing is we've been scanning the market, finding opportunities, and then testing to see which one's the best one. We can also turn this around a little bit, and we can say, well, I want to know what works well on something specific that I trade. Okay, so I can take something like, well, if it was, we'll see who wins on getting the first thing into chat, and then we'll go from there. We'll give it just a second. Oh, Mari, I'm sorry, man. I wish I knew what I was pronouncing that. I'm so sorry. I'd
like to pronounce it Mario.
Oh, no. All right. All right, we're going to start with Tesla here. Okay, so we'll do Tesla. And what I want to do is I want to take and put Tesla against a bunch of indicators to see which indicator performs best on this particular stock instead of just one indicator. So what I'm going to do here as an example, so in Metastock 18, we added in what we call the performance systems. And these are a collection of 80 systems and strategies that you can scan with, backtest with, to see how they perform. So I can just type in PS for performance system. And then in 18, we added this select all feature. So I've searched them, found them. So I've got 81 systems that I'm going to test with against Tesla. And we're going to go long, short. We're going to go both. And we're going to see which one of these performs best on Tesla. Now you could do this, you could put in RSI, MACD, all the standard indicators to see which one works best, but let's take this as an example. Okay. So you can see by this example, well, there's quite a few systems that don't work on Tesla, but there's quite a few that do. So let's rank on our percent gain here. Okay. Over the last 5 years, this PS pattern trading system number 4 had a 191% gain, traded 11 times, 6 were winners, 5 were losers. Let's just go in. Let's see what our equity line looks like. Okay, so you look at this equity line, it was doing awesome back here, and then it's just been kind of flat. So this is the kind of the, you get that excitement over, oh, it's worked so well, but it worked so well a while ago. Now you could shorten that period down if you wanted to. So if you didn't want to look at that much data, maybe the last year, that could help. But oh, now there's a pretty equity line. So if you look at that, smooth, consistent upward for 95% over the time over the last 5 years. Now again, does that mean it's going to work on the next trade? No. But it helps increase your odds of success, and that's what we're looking for. So looking at this one, that was the PS Fractal Trading System 1. It traded 60 times, 31 winners, 29 losers. So here what you would do is you would go in and you put on that expert advisor, and you would follow the trade. Now we may not have a current trade today, but when a trade does come, you know how well it's performed. So you could follow that. Let's take one other example here. Looks like the next Carnival Cruise Lines. Let's look at CCL. Let's shorten that down. Let's go the last 750 records and just look at a shorter period. Okay, so we're doing CCL over 750 records. And let's see how that one looks. Let's do percent gain. And it's always interesting to me, the different systems that work well. It's because every stock trades a little bit differently. Just like every one of us, we all have a little bit of a different personality, just like every stock has its own little personality. And that's one of the great things about system testing is identifying and matchmaking. Okay, and let's look at that equity line. I like that too. That's a good looking equity line over the last, 200 over the last year. Fairly consistent upward. Let's do one more. So you can see how quickly you can find systems that work and different opportunities. S&P 500. Let's maybe do the E-mini on this one. We'll do the ESC1. And then I want to trade this, change this to points only test since I'm doing a future. You know, Geoff, it's too bad that Adrian didn't get to present, but I'm glad I got to because I'm having a lot of fun. So let's see. So percent gain, we have to kind of drill into this one just a little bit more because of the point scenario. So you can see a total number of trades. You can break all this down. We can look at our equity line. Now, see, there's a really good example of an equity line that I would say I walk into it, I look at the system and I go, oh, I'm really excited about that system, and oh, it doesn't work. It didn't work on that. Now, that's not to say that this system isn't going to work on something else, but it doesn't match the personality of ESC1. Okay, it's not matching that futures commodity matchup. So just to recap, it looks like I'm already out of time. Just to recap, so 2 main workflows that we talked about here. So we talked about using your preferred indicator. So we took that example of starting with the RSI, we scanned through a list of 500 stocks. It could be all optionable stocks, it could be the entire market, whatever you want. Find an opportunity, and then you could use that opportunity right there, or you could take it and you can back test it and you can see if it has performed well historically, helping you understand if it's going to work well moving forward. Or you can take all the indicators and put them against a single stock or a future or whatever it is and find the best indicator for it. So there's a couple of great workflows. Both are really easy to help you identify these opportunities. We've been talking a lot about trying Metastock. First of all, if you don't have Metastock 18, if you have an older version of Metastock, you need to upgrade. It's so good. It's so much better. The charting's so much better. The searching in it's so much better. All these little things, it's just going to make your life easier and better. If you haven't upgraded yet, we've got awesome specials. Contact sales at metastock.com/sales chat or go to metastock.com/conf promo. If you don't have Metastock, it is an amazing tool, as you've been seeing today. Go to metastock.com/sales chat again. Talk to sales. They will help you know which version of Metastock's better for you. If you just want to do some aftermarket scanning, find opportunities for the next day, maybe do some back testing. Or if you're interested in doing it all real time, you can do that. There's some other amazing tools we haven't had a chance to talk about. Hopefully we'll get to through the conference. But visit us at metastock.com/sales chat or go to metastock.com/conf promo, and we'll be happy to help you out. Geoff, I think I nailed it right on the dot on time.
Great job, Kelly. You seemed really prepared too, as well, for it being something you plan on doing tomorrow. So, in any case, Michael says thanks for the demo. If you guys have questions, get in touch with us. 800-882-3040. You can visit us online, metastock.com/sales chat. Wow, I just have a really big picture of Kelly right here. Let's go back a little bit. You know how it does that sometimes.
Yeah.
And you can do metastock.com/sales chat. Holy crap, I need to hide this.
Okay, well, I'm gonna go back to the YouTube room.
Okay, sounds good.
Thanks,
See you
everyone.
All right. Once in a while, YouTube or GoToWebinar, when you turn on your camera, it decides that that's all you want to see. So you don't see anything on the screen. It's very, very disorienting. And but now I can see my screen. So welcome everybody. Thank you for that. We did get in touch with Adrian, and we hope he can start tomorrow. He just had the time, actually the date wrong on his calendar. He thought he was speaking for us on Friday. So we'll know for sure. I've just been able to talk to his wife, not him, but I've actually done worse. So glass houses and all that. Let's do a prize. I need a number from you guys. This is the way it's going to work. Give me a number between 1 and 10,855. We're going to take 2 winners, one out of GoToWebinar, one out of YouTube. You pick the numbers. I've got a list of people that have registered over here, and I just kind of match it up. So the first thing, while you're typing in the numbers, guys, go ahead and type those in, anything between 1 and 10,855. And once you do, I'm going to go ahead and figure out what the prize is. So let's see what we're giving away this time. Let me go to my list of prizes. All right, Fausto Pugliese is coming in, and he's talking a little bit later. He does a lot of talk with us. Does a really good analysis on level 3. And this particular prize is going to be his Cyber Group live chat room. It's a chat room that's open Monday through Friday from 7:45 a.m. to 5 Eastern time. They do Traders Talk Live, which is every Tuesday. They do a talk library. They have over 100 hours of recording on strategies and tips. They have a workshop library, all kinds of stuff that's available. You'll also get a coaching call with Fausto Pugliese. So the value on that is $997. I'm going to give away 2 of them. Mario is going to help me pick a number. And that's 1111. Let's see. And then Alex has picked another one. So let's go ahead and do this. Let's grab those two winners. I'll tell you who they are. Where's my mouse at? And we'll move on. So. Typed in the wrong number. Okay, the first winner is a Dwayne T with a Hotmail account. So I'm going to go ahead and put you down as one of the winners, and then I'll go grab the second one. So just give me a second. Let me go ahead and transpose this over here, and then the second winner is going to be from YouTube. Alex, give me a number of 276. A very low number. Let me go ahead and grab who that is. And that is going to be a Mr. Trader. Now, so if you registered as Trader, well, the chance is probably 1 in about 500 that you just won a prize. But I will email you. You have a Gmail account, so that'll narrow it down a little bit more for you as well. But I will put you on the list, and you did win that prize. So congratulations on that. A quick shout out before we move on to our next presenter. We did CMT just now, right? Let's talk about AAII. Well, actually, let's talk about Task. I'll do AAII next. Task, I want to say thank you to them for being a great sponsor. They've sponsored our events for decades now. Actually, literally, we've been doing the full-day conferences for, I think, 10 or 11 years, and they've supported every single one of them, I think. So 17,000 articles, 1.3 million subscribers, been making magazines since 1982. Great magazine, great publication, great partner. We appreciate it. So the next presenter that we have is Marina, and she does a really good job. I'm just going to grab her information. She does the Trader Chick. I don't want to get things wrong. She's done a number of classes with us. She's I can't remember how many. We keep inviting her back because I really like how well she does. But she specializes in helping people day trade with confidence and ease. She simplifies the process by completely breaking down the art of identifying high probability trade setups. Even if you are just getting started, you could learn to be a day trader profitably and read the markets like a pro. You could be amazing. Anyway, it's always great to have you, Marina. Let's go ahead and get you started. Thanks for joining us today.
Hi, thank you for having me. I'm so happy to be here, actually.
Let me make you a presenter. I will say, let's see. I made you an organizer, so you should be able to see the questions as they come in. And then, let's see. I'll let you know if I can see your screen, too.
Yeah, let me know.
We've had a great audience. They've been asking questions. They've been giving me numbers all day. It's been great. So, so far, it's been a really great conference.
Okay, well, thank you so much.
Mary says, hello, I'm excited. Did you get your screen shared? Because I think
I don't know, can you see?
I can see it, yeah, okay.
Yeah, okay, cool. Because I only see you at the moment, so I can't figure out.
I'm going to hide my face. Yeah, it gets a little weird with the screen sometime. But yeah, I can see your screen. I can hear you. You sound great. I'll get out of the way.
Awesome.
Your turn.
Well, thank you. Thanks, everybody, for being here. I'm so grateful to be here. And I was actually trying to figure out how many times I have presented, because when we first started to do the presentation, well, when I was first asked, I think you only did like one every 6 months. Now I think it's more quarterly, but it wasn't as often. So I'm kind of happy that it's much more often.
We did 3 this year. This is our 3rd.
Oh, 3rd, right. But when we first started, I think it was only one.
We invited you to our first one, and we only did 1 a year at that.
Okay, point. That's what it was. 1 a year, and then during COVID, it went to like 2 times per year, and now it's 3 times per year. Yeah. So yeah, I was trying to figure that one out. Or I'm like, it's either everything's going super fast, or there's a lot more coming. Which I'm sure that's what it is. It's a lot more coming. So I actually
those aren't mutually exclusive either. They're probably both true.
Yeah. Well, I have a confession to make. So I'm in Spain right now, and we had our daylight savings time October 29th, and you guys had daylight savings time November 5th. So I have been like counting on my fingers pretty much half of the day to figure out if I'm going to be here at the right time. So I've been in and out all day, and I have to say some of the speakers are actually really captivating. I was like, I'm only going to go in to see if I'm up and some of them, like, it was really interesting to watch. So yes, I've been part of the presentation today as well, and it looks like I made it. So this whole thing with you guys switching 1 week after, Spain, totally throws me off, because we were just living in Central America for 20 years where there's no daylight savings time at all. So all of a sudden now I have to deal with all this other time. It gets a little bit confusing, especially with the markets. It gets extra confusing, but it's all good, especially when you trade minis, whatnot. So where are you guys from? Where are you guys coming in from? Because I see it's a ton of people in the room. So I would love to know, where are you guys from? Or where are you watching us from? I really, really love the fact that you guys have taken this time out to come and spend this afternoon or evening with us. So Mari is from California. So whom else? I mean, there are more than 150 people in the room. So Mari cannot be the only one. Come on. So Michael is CST. I don't know what that means. What does CST mean? Chicago, Lee Jack is from Chicago. Very cool. Whom else is here? Come on, guys. Don't be shy. Let's get in. This is fun. Canada. Mari, you are from Canada. Oh, not California. Okay. All right, cool. Whom else? London. Okay, so Yogi's, I think that's how I pronounce your name. You are 1 hour behind me, right? You're at 9 p.m. I'm 1 hour ahead of you. And George is from Houston. Marley Dar, Charlotte. Okay, very cool. Tim is from Iowa. Excellent. Colombia, Felix. Which part of Colombia? I've been to Medellin. Love Colombia. Jeffrey is from San Diego. I lived in San Diego for a while. I lived in Pacific Beach of San Diego. I was actually just talking to a friend of mine about San Diego the other day. So pretty there. So pretty. Jennifer, you are from the Pacific Northwest. Well, that's a pretty big region. Which part of the Pacific Northwest are you? You are on Central Standard Time. I'm not sure what that means. I think you're 1 hour behind New York, right, Felix? So that's 7 hours. I mean, Michael, that's 7 hours behind me. There we go. Felix is California. Right. Yeah, I think you're the one that said that you are in San Diego.
I got some shout outs from YouTube, because just in case, we've got Alex.
Yeah, let's hear.
Connecticut.
Where?
Daniel says he's from Argentina.
Ooh,
we
which
got
part of
Montreal
Argentina?
From Juan.
Nice.
Sandra, and I just love saying this one. Sandra's from Kissimmee.
Kissimmee, Florida?
Yeah. Yeah, I think so. Tom says he's in Beaver, Pennsylvania. And Garth is with us in Utah. So.
Ooh, which part of Utah? I was just recently there with my sons. They love climbing.
You didn't stop by? You didn't stop by? Okay, I'm caught up on YouTube, but I'm not talking anymore. Your turn.
Okay. Well, tell whoever is on YouTube.
If you're in Utah, we'll take you to lunch. Just let us know.
Oh, there you go. That's right. All right. So we have Yossi from Montreal. Ross is from Germany. So I think Germany and I are on the same time zone. Denver, David is from Denver. I love having so many people from all over the world. Idalia is from Paris. Jack from Pennsylvania. Thomas from Oceanside, Florida. Oh, you're messing with me? You're from Missouri. Okay. All right. Sounds good. Well, guys, thank you for all being here. And the fact that you are all actively chatting, I love it. Because you know what happens? A lot of people get on these presentations and they go and walk away. But the fact that you're here is all about learning, right? It's all about participating. I actually always say that day trading is not a spectator sport. Quite frankly, nothing is a spectator sport, right? The more you jump in, the better that you are, right? Yes, I totally use the world clock, Mari. I have like 15 of them, but with the fact that it was 1 week difference, it totally blew my mind. Like I was just like, oh my goodness, I shouldn't plan anything for that 1 week, which I didn't, because I would just never get it right. All right, guys. So I am here to do a presentation. However, the best way we learn is when we ask questions. So the fact that you guys came here, that means that you have some questions, you have some challenges, all of that good stuff, right? I mean, that's literally the reason why you are here. So I want to make sure that I answer all of your questions, even though I am here to totally, help you, and hopefully you will learn something. At least I always tell my sons, if you guys get even one super important thing that you could implement from whatever you're doing, from a presentation you're participating in, from a book that you're reading, from a webinar, you get one thing that you could implement, that could be that one thing that completely will take you to that next level. Okay, so that is literally what I am and hope that you guys will do with us today. So I am Marina, the Trader Chick, and that is me. And I have a question for you guys. Who here likes Cirque du Soleil? I know that this is a little bit off topic. It might feel like it, but trust me, just go with me. Okay, who here likes Cirque du Soleil? I don't know if any of you guys knew, but during COVID, they actually went bankrupt, and now they are back. I am an insane Cirque du Soleil fan. I mean, like, biggest fan. We lived in Guatemala for 14 years, and they actually they came to Guatemala several times, and I went to see them all with my kids. I mean, these guys are next level, right? Like, the stuff that they do is absolutely insane, right? I mean, if you guys haven't seen them, I'm sure you guys have heard them. You can go on YouTube and see some of the stuff that they do. But here's the thing that hit me one time when I was watching these guys, right? These performers, what are they? They're actually ordinary humans that are doing extraordinary things, right? And what it takes for an ordinary to become extraordinary is really just steps that we could all implement. And interestingly enough, it is the same exact steps that you could take to become a successful day trader or an extraordinary day trader. So here are some of the things. I want to break this down for you guys, because a lot of times I cannot even tell you the amount of times that people come to me or find out that I'm day trading. Oh, I want to trade. I'm going in. I want to make millions of dollars. I'm like, well, if it was that easy, we'd all be millionaires, right? And a lot of times they skip the most important parts. And what are those important parts? Number one, it's the commitment, right? We all want to be successful in one way or another, right? And for some reason, with the financial markets, especially in the financial markets, there is no barrier to entry, right? What does that mean? It means if I have a little bit of money, I could just go and literally donate that money to the market. When I say donate that money to the market, is I just blow it pretty much, right? Like, a lot of times not me personally, but a lot of people who say that they want to day trade or invest, they put it into the market and they have no idea what's going on. They don't understand what's going on. There's zero commitment, but they've just taken their really hard-earned money and they think that they could become millionaires overnight, right? And then they put it into the market. There's nobody telling them, hey, wait, you need to first commit yourself. You first need to put in that time to truly understand and train and learn, because it's all about the strategy, right? It's all about the time that you put in to understand what's going on. And then there's this focus, right? So because I personally am a day trader, and the amount of focus that you need, it's pretty much evident that you need to sit and be focused of what's happening in front of you. But a lot of times people are just like, oh, I have some money, so I'm going to put in my $5 and I'm going to come out with $500, right? It doesn't work that way, right? You need to first go back to that commitment. You need to first train. You need to have that strategy. You have to first understand what's in front of you. Then you need to be focused on what you are doing, right? You need to understand and follow that framework. You have to understand what is going on. And then the discipline, right? The discipline that you are showing up day in and day out, that you are studying, that you are learning, that you are learning from your mistakes, that you are not just having a mistake and having the same mistake happen over and over and over again because you're not putting in that time. And then the trust, right? These performers have such trust in their bodies, in their partners, in their routine, in their equipment. And that trust doesn't happen overnight, right? If they say, hey, I want to be a Cirque du Soleil performer, they're not going to just jump in and start doing crazy acrobatics with with somebody that they don't even know who they are, with a rope that they have never tried out or tested, right? They need to first test it out. They need to first believe. They have to trust that it's going to work. And that trust doesn't happen immediately. It happens with over time. It happens with understanding the using of it and the confidence, right? They are, when we are watching these performers, we see them having that confidence. That confidence does not happen just because they say, I'm going to be confident. That confidence happens from doing it over and over and over again, and from mastering it. It's from that training that they are doing. This is a perfect example. Now, do you think this woman decided, let's say, what's today? Today is Wednesday, Tuesday night, last night, that she decided, you know what? I want to be in the Cirque du Soleil. I want to do this crazy aerial act with bikers. And then today, she got up 60 feet above everyone and hopped on with these two guys that she's never really truly met before. She might not even know their names, and do this crazy trick. I mean, honestly, guys, do you just watching this? It's crazy, right? Like, you would never, if she would do that, you would think she's completely crazy, right? Yet I cannot tell you the amount of people that say they want to day trade, and that is exactly what they do. They just hop on a bike that they don't know and with people they have no idea. They have no idea if these people are going to steer them in the right direction or not care at all about them and not trust them, not know anything about them, and put their money, their life on the line. It's ludicrous, right? And the fact that people are doing that over and over again, it amazes me. So the reason why I like to bring up Cirque du Soleil is because we can understand Cirque du Soleil when we see it, right? We can completely understand the concept that those performers have put in that time. They really have put in that energy, the training, the discipline to become the way that they are. They weren't born like that, right? So what we have as traders in comparison with Cirque du Soleil performers is very similar. There's a lot of it, right? And the fact that we hear that only 5% of the traders are successful versus the 95 that aren't is because those 95, to be honest with you, it's more like 98% that decide on a Tuesday night that they want to be day traders, put in almost all of the money that they've had without understanding. I got a message the other day from from somebody that wants to become a student, and they're like, okay, I just put in the money into the market, but can you tell me if I did did I sell? Was this a short or was this a long? I'm like, you just put in money and you don't even know the difference between a short and a long. It's like getting into a car and not knowing if you're going to drive forward or if you're going to go in reverse. It's completely crazy. And then, of course, few hours later, they wrote me crying, oh my goodness, I lost that money. I'm like, you haven't even, like, you don't even try. Like, why would you do that to yourself? And that's the most important thing is, right? So when we conceptualize this, amazing, extraordinary act of these Cirque du Soleil performers to understanding that we as professional day traders, it takes the same kind of belief, that same training, that same time, we can understand that we can also become extraordinary. And that's the beauty of it, right? It's not that much different, but we can all achieve the same thing, right? So what they lack with those traders that are like that 98% that are losing is that they lack what the Cirque du Soleil people are doing, right? Now, what can we do differently from that 95%? The fact that you guys are even here is already taking you out of that 95% pool, which is a great start, right? Because you understand that it takes understanding, it takes learning, it takes education, it takes strategy. However, what else can we do? Obviously, there's so much, right? Like, there's so much that is to be done. But like I mentioned earlier, if you learn one thing, if you can focus on one thing, that one thing can be your next level in your day trading. And that I can guarantee, right? Because we're starting to become specific. We're starting to focus. So today, what I want to talk about is trends. Just like tightropes, right? If you can think of a tightrope, A trend is like a tightrope, right? So we are going to be learning about those trends, how to spot those trends, how to understand those sideways trends, and how to use understanding of that form to be able to take really good trades. Now, before I continue, I have this entire presentation for you guys for free so that you can follow along. Go here, makingofadaytrader.com. Go to makingofadaytrader.com. And this also presentation is going to be on YouTube once Jeffrey puts it there. So you'll be able to go back with this presentation and follow along. And this presentation is completely free. Go to Making of a Day Trader and you'll be able to just get it from there. Now, before I get in, I also want to just give a quick intro. Why? Because a lot of times we forget that we are people sitting behind our charts, right? It's not all about those charts. It's not only what the market is doing. It's how we are as humans and how we filter and how we look at those charts. So who am I? I'm Marina, the Trader's Chick. I am an expat living in Barcelona. We actually just recently moved to Barcelona. We moved to Barcelona about 8 months ago. Before that, I had been an expat for over 20 years living in Central America. We were living in Costa Rica first, and then 14 years in Guatemala. And another thing, before I became a trader, I was a fitness instructor and a travel writer. Why do I tell this to you guys? Because a lot of times people have this misconception that you need to be coming from an economics background, a financial background, or a math background. Not true at all. Like I mentioned earlier, I've been, counting on my fingers all day about the time and if I have to get it right. You don't need any math for day trading. That's the beauty of day trading, that anybody can actually do day trading. I'm also trilingual. And the main reason I bring up the fact that I'm trilingual is, number one, I am a Soviet Union refugee. So I was really young when we left the Soviet Union. We moved to the United States. So Russian is my mother tongue, but because I was raised in the US, English is my main language. However, I arrived to the States when I was around 6. So I didn't actually learn a new language as much as I was just learning to speak at that point. So I became fluent really quickly. Within 3 months, I was completely fluent in English. However, I did learn Spanish in my later years. I was in my late 20s when I learned Spanish. And when you learn a new language, it's a whole process. And I was struggling with my day trading and the markets for years until I decided to look at the markets like I did, approach the markets the way I approached learning Spanish. And I realized that the markets, they have their own language. And when we learn how to read their language, how to understand that language, how to speak it, how to listen to it, everything changes. And that's what it really is all about. And the reason why I was able to recognize that is because I do speak multiple languages. The beauty of day trading, guys, it's you could do it from anywhere. It's so freaking awesome, right? I get so many people asking me, well, how was your internet in Guatemala? Or I need internet. There's no question about internet anymore. Internet is good practically everywhere, unless you're going into really hardcore jungle, which I think a lot of us aren't. Don't even worry about that. Before COVID, I used to do a lot of in-person shows. I did especially the Money Show, the Traders Expo. I did quite a lot. And then once the COVID hit, obviously everything went virtual. And quite frankly, today I have to admit I love it much more because we have so many people from all over the world that is able to join us. Again, go and get your entire presentation 100% for free. Makingofadaytrader.com, makingofadaytrader.com, so you can follow along. Now, every performer starts with learning the basics, right? This is how they grow their confidence, and this is how they grow their trust. They first have to begin with the basics. They have to master those basics, because if you don't have the basics, you can never do anything else. I don't know if you guys have ever seen these amazing aerial acts, like 60 to 80 feet up in the ground with these ribbons, right? I don't know if you've ever seen them. They're amazing. Do you think they started doing them 60 feet above ground? No, absolutely not. They started on the ground. They did all of their tricks by touching their feet on the ground because they had to get the basics of that trick. Then they slowly worked their way up to what we are now seeing extraordinary, right? But if you first saw the beginnings of it, it just looked like, some people jumping around doing somersaults with these ribbons around their arms, right? So it's the same thing for day trading. If you don't have your basics, I'll be honest with you, you're never going to get anywhere. It's literally like my analogy I use is that we're constantly putting in windows without any walls, right? You're taking trades, but they're crashing because you don't have your walls to hold up those windows. And that's what we are going to be talking about today. The 4 basic strategies of day trading, and they all are in increments of trends. And if you don't understand the trends, you're going to have a hard time really understanding what is going on in front of you. So just as a tightrope walker, right? They start with tiny little steps. They are not here from the start. Don't put your money to the markets without understanding what's going on. You need to first begin at the bottom. These guys that begin maybe 6 inches off of the ground before they get to the 60 feet off of the ground without any nets. Okay, are you guys ready to jump on the tightrope and dominate it? Let's begin. So, market movement and the breakdown of a trend. Look, we all know logistically that there are 3 trends, right? We have the upward trend, we have the downward trend, but the most important in my mind is the sideways trend. Why is it the most important one? First of all, this is a place where you guys will probably lose the majority of your money. Why? Because this is that area that is called the chop, the exhaustion pattern, the decision, I should say the indecision, the consolidation, the sideways movement. There's no movement, right? It's a dead trend. It's not even momentum. You have no momentum there because it's flatlining, right? So you want to give your money to a place where it's flatlining. No. So when you can understand and spot that trend, you will be able to not only save a lot of money, but you'll also be able to spot when it breaks through that trend to take the really strong one. Now, before I go any further, I need you guys to understand what is an upward trend. First and foremost, it's obviously each pivot is higher than the next, but this is where you enter a long. This is where you are buying. Buying, what does that mean? Very simple. Very simple, guys. You're entering a price point that's low, exiting a price point that's high, and you're just taking the profit in between. That's it. Super easy. Don't overthink that. What is a downward trend? It's the opposite, right? It's when each pivot is going lower than the next. This is where you enter a short. This is when you are selling. What does that mean? Again, don't overthink it. It's when you are entering the market at a high price point, exiting the market at a low price point, and you're taking the money in between. That's it. Don't overthink it. Don't start into that emotional baggage of, well, if I'm going short, somebody's losing. Who's that somebody? Do we care about that somebody? Not particularly. Look, if the technical analysis is telling you it's going to be a successful short, that's what you do. You are here to work, and your job is to listen to what the market is telling you. And if it's telling you to go short, to sell, that's what you're doing. Again, entering at a higher price point, exiting at a lower price point, and taking all that money in between. All right, let's talk about the consolidation areas and the transition areas. That is that sideways market. I literally call it a trader's worst enemy. So here we are. We need to learn how to spot those areas, and most importantly of all, how to avoid those areas. All right, so downward trend, upward trend, consolidation. You will see consolidation trends a lot. What do you do when you see them? You sit them out. Sit them out, guys, because this is an area where there is no direction. Do you really want to put your money into a place where the market is bouncing back and forth? No. So why is this the place where the traders lose the most amount of money? So here's the thing. Traders, there's only 2 types of traders in the world. I know that there's millions of traders, but only 2 really categories of traders. There is the trend is your friend kind of a trader. When they're looking at the market going up and then becoming a consolidation, They're telling themselves this story that the market has been going up and it's going to continue because they are in the framework that the trend is your friend. Then you have the other category, which is the contrarian trader. What they're looking at is, and they're saying, this is the story that they're spinning is, you know what, the market's been going up all day. It's going to correct. I'm going short. I'm going to short the market. Both of those are untrue. They are just stories. Why? Because we have no idea what the market is going to do. We are not here to predict it. We are not here to beat the market. We are here to listen to the market. And when the market is in a consolidation area, when the market is not doing anything, it is literally telling you one thing. And this is the one thing that pro traders understand. That one thing is sit out. Don't do anything. Sit it out. Hold on to your money until the market decides what it's going to do. I don't know if you guys have ever seen that show on Netflix, The Crown. If you haven't, it's a really brilliant show. It's probably, I think, it's one of the most expensive shows in the history of making shows. But the point is, if you don't know what it's about Queen Elizabeth, right? Her entire coronation, when she became queen, so on and so forth. There, in the very beginning, there's this one part where she just became the Queen of England right after the coronation, and now all of a sudden she has all these duties and she's seeing all this stuff that's going on in England, and she's sitting there talking to the Queen Mother, and she's like, okay, I don't know what to do. I don't know where to begin. I need to start taking action. And her mother said to her, the most important action you're going to be taking a lot of times is inaction. And I know that sounds kind of like oxymoronical, like to not be doing anything. But when you are in the act of not doing anything, that could be the hardest act of all. And when you are seeing this kind of action and not doing anything, believe it or not, you are doing a lot. You are actually saving that money and you are being super smart. And you're also telling the market that you're a pro. Okay? This is what these consolidations look like. Okay? They happen often. A lot of times you'll see a breakthrough, a breakout, so that you could enter the market, and then it can consolidate again, and you'll sit out until the next move. It'll either break out in the same direction or transition into a new trend. Now, we have to understand and mark these off, right? And what are these things that we are marking off? They are areas. Look, the market respects areas, and we, as the individual, retail, professional trader, we need to respect those areas just the same. And the way we do that is we mark them off. We understand what they are, and those two areas are support and resistance areas. Once we can understand and spot these areas, we will be able to avoid entering bad areas a lot of the time. What is a support area? It is the floor of the market. It is the floor of the market. Imagine the market has been going down, and boom, it starts to hit it over and over and over and over again. We need to draw it out. You cannot have a mental support area, because mental support area is pretty much the same as a mental stop. And we know how stupid mental stops are, right? Pretty much as stupid as saying you're going to get into the car and you're going to put a mental seatbelt on your child and then pretend you're going to save it when you get into a car accident, right? That's pretty much the same thing with a mental stop and also putting in mental support and resistance areas. So support area, it is the floor of the market. You need to respect it. You need to draw it out. And it also allows you to be able to draw out parts of channels. What is a resistance area? It is the ceiling of the area of the market. It is the ceiling of the market. That means the market's been going up, and boom, it starts to hit it over and over and over and over and over and over again. Okay, it is the ceiling of the market. All right, guys, does that make sense to you? You have to draw these in. You have to understand what they're doing. Now, the most important thing is, how do you know when they are beginning? Because a lot of times when they're first beginning, yes, you will be entering, and most likely you will be stopped out. But that's going to be the difference with a pro trader and somebody who doesn't understand what's going on and just is hastily pulling the trigger, right? And that is understanding when those areas begin. And that is recognizing when there are reversal areas and divergences. I personally call these the trader's map to shift in direction and trends. Direction and trends, right? And what are reversal areas? To me, they are divergence and reversal areas are my holy grails. Like, I live by these because to me, not only are they so simple to recognize, but they have kept me out 90% of bad trades and allowed me to enter good trades. That's how significant these areas are. And the coolest thing of all is they're so simple to spot, but you have to know what you're looking for to be able to spot it. So what are reversal patterns? Double tops, triple tops, double bottoms, triple bottoms, head and shoulders. Okay, so let's take a look here. This is a double bottom, right? It is when the market is got exactly beautiful double bottom. You've seen this right here. And then there is divergence. So first of all, when I see a reversal pattern, I'm already all good with that as it is, right? So I already am totally staying out of that market. But then divergence. So what is divergence? As you can see here below, I have an indicator. Oops, I have an indicator. This one is just as good below. That indicator is the MACDs. I personally love the MACDs. I think they're the least lagging indicator that is out there, and it is a fantastic indicator. So when I have my MACDs telling me that it's going up while my price action is showing me a perfect double bottom, I know right away that I need to stay out. Now, it's really important to understand that reversal patterns does not mean that they are reversing. That is a really huge misconception. Okay, what it is telling me that it's a very high potential, but what it actually is telling me is that the market, the trend has lost its steam, that it has lost its strength. Do you want to be putting money into a market that is losing its strength and becoming weak? No, never, never. Hold on to your money because the market is going to show you when it's going to be strong, and that's where you want to enter it. So when you're seeing this, you want to stay out. Now, I want to show you something else. As you can see here, my price action is going down. And now if you look at the MACDs, you'll see that they're pretty flat. I personally look at divergence already way before reversal patterns because to me, it's already telling me and giving me the signs that the market is slowing down. So when the market is slowing down, I am nowhere near touching that market. Why is that? Because a lot of misconception that we also have is that we need to be in and out of trades all the time. One thing that I learned is that pro traders, they take anywhere between 1 to 3 trades per day. That's it. Why? Because they are like big game hunters. I'm not condoning hunting, but it's a great example of exactly how pro traders need to be. Big game hunters, when they go out for their hunting day, they don't just shoot at every little prairie dog or field mouse. They sit patiently waiting for the big game. Pro traders, that's exactly what they do. They wait for the super high probable, profitable trade setup. And usually you'll only get between 1 to 3 per day, but the ones that you'll get per day are the ones that are the most significant and will also give you the chance to be consistent and to be profitable over a long period of time, not just that one big kill and then you're starving or you're in the negatives for the next year, which happens quite often because there is no consistency, no strategy. Okay, so breaking out of areas, I want to now talk to you guys about recognizing the most important, probably the most highest probable trade out there, and that is the breakout trade. So what is a breakout trade, right? So as you can see here, the market is going up and then boom, it starts to hit that ceiling, that resistance area that, again, like I'm saying, you have to draw it out. You cannot just say that it's there and then forget about it altogether, because once it breaks through, boom, that is the breakout trade. And breakout trades are really highly probable trades because they are showing you that they have that extra strength to break out, and they could continue for a while for you to be able to enter and become profitable with that. So let's put this all together. Like I said before, everything that I just went over, I have it in my excuse me, in the presentation. Go here, makingofadaytrader.com. I call it my cheat sheet for trading. So go and get it right here, makingofadaytrader.com. Go there and check this out. All right, guys, breaking out of areas, spotting those breakouts. Again, if you are not drawing in your areas, you're going to miss and not see, first of all, when the breakout could happen, but also you're going to be trapped in not understanding why you're constantly being stopped out. Because like I said before, the market respects areas, and the way you understand what it's respecting is by drawing these areas in, support and resistance areas. And I want to give you guys one extra really cool setup. I call it, well, this is that breakout trade, right? But I also have, it's also understanding when it is a new trend that is forming, right? Remember like what I just said, that trend, if it's dead, like right here, look at this resistance area. It is completely dead. And like I mentioned before, I use the MACDs a lot. Look at the MACDs, which is below, right, with these little red dots. You could see the dash lines, the black dash line, that is zero. That is showing me that that's zero. There's zero strength, right? But when I have strong moves, strong pop outs, that's when I know that that is a strong trend or a strong breakout. Okay, before I continue, I want to give you guys a little bonus tip that makes all the difference with a Cirque du Soleil performer, and I also believe is a very significant understanding of pro traders, and that is they dominate one area. What does that mean? Do you think this woman who is performing this incredible, I don't even know what this is, right? This incredible performance, this incredible acrobat, do you think she's going to be jumping in and doing motorcycle acts? Chances are she's not, right? She's going to stick to her one mastery thing that she's going to do. And why is that? Because she put the time in and she knows that she could kill it in this. What happens a lot of times is when people say they want to start trading, they want to trade all markets, right? And I actually say it's actually called instruments, right? So if you focus on just one instrument, if you focus, you don't do, a motorcycle act and a one-hand stand acrobat move, you're going to be able to really dominate your one market. You cannot dominate multiple instruments. You cannot be in Forex, equities, and futures at the same time. It's like driving 3 different vehicles on 3 different roads. So if you start to dominate the one market, see for yourselves how you'll be able to truly master and start to really make money. And once you start to make the money in that market, then you could say, you know what, now I want to try the next market, because you cannot, the Forex market does not move like the futures market. You cannot do both and be successful. But if you do one and focus on just that one, you can. Okay, so here's the thing, guys. You have absolutely everything you need to take action, right? You have absolutely everything you need to take action. But the real question is, how do you know you are doing it right? How do you know you're doing it right? Because all of this is great, but the real question is, how do I even get started? And I get this question so many times, and not from beginners, from seasoned traders. They ask me, what can I do to turn this around, to be profitable consistently? And a lot of times, like I mentioned earlier, it's simply lacking understanding of the basics, because what people are doing a lot of times is they're putting in those windows without having those walls hold those windows in. They're putting in trades and not having any idea what they're doing, and then their trades are collapsing because they don't have just the basic understanding. And once you have that understanding of the basics, everything goes magical, right? It's exactly like when you're driving a car. Look, my oldest son just recently learned how to drive a car. But when he hopped in for the first time, even though he's been a passenger many years, But when he hopped in to sit in the actual driver's seat, and my husband's like, okay, you gotta put your brake in, put the clutch in, make sure that you take it out of neutral and put it into first gear. He's like, wait, clutch, gear, I don't know what you're talking about, right? Because if you're not taught the basics, you can't even move the car forward, right? Imagine, I know that this is a little bit far-fetched, but imagine that somebody enters your car who has never, ever been in a car before, and you're telling them, all right, buckle up, it's going to save your life. And they're looking at you, they're like, buckle up, this is going to save my life. What is a buckle? I don't know what a buckle is. If you've never been taught what a seatbelt is, how are you going to be able to save your life with it, right? So you have to be taught these things. We forget that we aren't born with this information. And that's literally what was happening to me for years. I spent over $20,000 on my own trainings, over $20,000. And I was struggling. Year after year after year, I was losing money. Why? Because I never had idea of those basics. And it came to the fact that I lost almost $4,000 in 5 minutes. And I just couldn't do it anymore. I ended up quitting. I quit. I walked away because for me, it was just too traumatic. But then here's the thing, guys, right? Everybody in this room, I can guarantee, could feel the same, is that we are all bit by the trading bug, right? Why is that? The thing is, it never, ever stops itching, right? And why is that? Because deep down inside, we know that we can do this, right? To me, that was what it is. I was watching other traders. I was watching it happen. And I knew that I could do this. And that's when I decided to get back to the basics. So what happened was I came back, I quit for about 4 months. So at that point, I had 3 monitors going on. I literally took 2 of my high definition monitors and I donated them to the garbage man. I just put them out and let them have it. They were almost new. I completely cleared off all my indicators because I was having like over 10 indicators. I was in constant analysis paralysis. I went into just bare naked charts. And then I slowly started to put in indicators, and I ended up with only 2 indicators. And those 2 indicators have been my magic space, right? My sweet spot. That's it. And then I began to really focus on the basics. I don't know if you guys have ever heard of Coach John Wooden. A couple of years back, one of my students goes to me, it's like, Marina, your teaching philosophy is very similar to Coach John Wooden. And I'm like, who's Coach John Wooden? I've never even heard of the guy. Of course, I found out who he is. You guys could go and check him out as well. And this man is still legendary. I mean, he passed away, but he is still a legendary coach. And his entire philosophy was, when in doubt, get back to the basics. I mean, this guy had won, literally, his team won over 88 national championships, 10 NCAAs. I mean, he trained the best of the best, right? Superstars. Yet, every single game, every single season, he would go back to the basics. It didn't matter if they just won another NCAA and had 88 national championships in a row. He would go back to the basics. How to tie your shoe, how to roll up your sock, how to dribble the ball. Why? Because if you're out on that court, doesn't matter how much you know and how many trophies you've won, and your shoe is untied and you trip and you sprain your ankle, guess what? You're sitting out for the rest of the season. Okay, guys, for you, because I know that the fact that you guys are here, taking your time out is super, it's amazing. So I have a special offer only for you guys, for people who are participants, and that is to my introductory course, Bootcamp for Day Trading. You can do this course on any apparatus, your iPad, your tablets, your Android desktops, you name it, you could do it on anywhere. All of this I'm offering for $97, one time $97. Now, I want you guys to go, right now, go to bootcampfordaytrading.com. Put it in to your browser right now. Bootcamp for Day Trading right now. Go there right now, bootcampfordaytrading.com. All right, guys, $97. Check out what you're going to be getting $97 because we're going to go over this together. What can you get for $97 that brings you that same return on investment? Do you guys like to play golf? I don't know about you guys, but you cannot even do one person at a regular golf course anymore for $97 per person. Okay? How about lunches? I don't know. I mean, I remember when we first moved to Guatemala, you could go out and have an incredible lunch with a family for less than $50. Before we moved out of Guatemala, two people could not enjoy a normal lunch with one glass of wine for less than $97. Honestly, you just couldn't. And today it's just getting more and more expensive. So let me break it down for you guys what you're going to get in Bootcamp for Day Trading for that one price. First of all, we're going to do the whole simplifying day trading package. And I know how complicated platforms can be. So I am here to help you, and I know that Jeffrey is here to help you. We are here to have a tutorial set up so that you guys can get into the fun stuff of learning how to just trade and go into the trading. What we're going to be going over is dissecting these markets, truly understanding the sideways market, the trending markets, the downward markets, understanding and really able to spot those reversals and divergences. Like I said, they're really magical and they're not complicated. But if you don't know what you're looking for, you're going to miss it. So that's what we go over. We're going to be able to spot them so you have aha moments and be able to just have those telltale moments signs. You're going to understand and you're going to draw out the support and resistance areas because they will protect you from not entering into bad trades and divergences. And of course, we're going to master the breakout trade because this is the best trade, and understanding the power of it and be able to spot it, that is all part of this course. And you'll have unlimited access to the curriculum. All of this is valued at $1,600. Okay? You're going to get the trader's workspace, the dissection of the trends, respecting those areas, and the power of the breakout, mastering all of that, the defensive zone strategies. Before I go any further, don't take my word for it because the testimonials I have from all over the world, because the cool thing about trading is that we can do it from everywhere. Michelle, best money I ever spent on this boot camp. You are the only mentor that truly checks the work. I am enjoying your boot camp and I'm learning every day. But I want to share something really important with you guys. Really, really important. Remember how I asked you, how do you know you're doing it right? So in that 97 one-time fee, you will get one entire month of mentorship with me. 1 month of mentorship, one-on-one, free coaching, unlimited, included in that price. Okay? Because this can take you to that level, and I will be there completely helping you with your charts. And I have one more best for last. You will get 30 days free membership in my live trade chat room. 30 days totally free in the live trade chat room, and it's me. It is not any moderator. It's not any administrator. It will be me. So remember, as I said, special price for you guys only. I don't give this to anybody else except for the people that are here right now, $97. Again, go here, bootcamp4daytrading.com. Go there right now. This is what you guys are going to be getting for that $97. Everything in that course that we just talked about. 30 days, one-on-one mentorship, and 30 days live chat room membership. All of this, the reality is it's worth less than one trade that you will normally be taking. Normal trades on average are between $200 to $400. Okay, this alone will cost you the course, and you will 10x your return on investment to go out 100 of these dinners with your friends and your family. But here's the thing, because I have the mentorship program, I could only do 25 students at a time. I cannot do more than that because I really want to give you guys my full attention. So go here right now, bootcamp4daytrading.com. This is the order form that you guys are going to see, bootcamp4daytrading.com. Go here right now because everything that I just mentioned, one-time fee. Okay, bootcamp for day trading. I have a couple of questions. This is the time. So bingo, go to bootcamp4daytrading.com. So let me show you guys here. Hang on just 1 second. Oops. So we have bootcamp for daytrading.com. And this is the full version of it right here. I'm going to put it in right here. Oops, hang on a second. I just lost everything. Bootcamp for daytrading.com. You guys could go right here. Just press on that right there. And this is the order form. And you guys could see one-time fee, $97. But if you really want a payment plan, you could do it, but for 2 times, $59. But you get everything immediately. Okay. So let me see here. I know that there are some questions. And Jeffrey, if there's any questions from YouTube, please let me know. Oops. As well. This is the time to ask.
We did have some questions about the links, but we were able to answer them. I don't have a lot of questions on YouTube unless I'm missing some. Yasi wanted to know if you had any books that you'd recommend.
So there's so many books that I recommend. I personally don't recommend only trading books because that kind of puts you into a little box, because trading is really a mental activity. So I personally would, oh goodness, Obstacle is the Way. That's a really good one. Oh goodness, right now I'm totally blanking. I have like 1,000 books. I read all the time. Yeah, I've totally just blanked. You can read the book that I kept on talking about, The One Thing, which is actually a phenomenal book. It's literally called The One Thing, and it allows you to figure out how to focus on that one thing to truly be able to get you to implement that one thing. Let me see here if there's any other questions. Does the principle of your course? Yes, the course, Mari, could be applied to any market, but again, I really recommend the one market. Okay, how many hours is the boot camp? The boot camp is really, it's done in few minute videos, and you could be finished with it within a week to 2 weeks, depending on how much time you have to apply. And then we work together, and that you'll have 30 days unlimited questions, charts, and everything else as well with me, unlimited. So yes, let me know if you guys have any other questions. And again, you could just go to bootcamp for daytrading.com, and hopefully if there's, everything is here for you to be answered. If not, please ask me any questions you could get. How to get to your page. Bingo, I just sent you the link. It is here. I'm sending it to you once again. And I see that Jeffrey also sent that to you right there. So you guys could go and press on that right there. And thank you guys so much for taking your time, for being here. And again, Jeffrey, thank you so much for having me here.
Sure. I just added the One Thing to my Audible account, so I'll let you know how I like it.
Awesome. Yeah, it's a great book. It is. It's a really good book.
I love Audible because you can listen to it. Well, we're not sponsored by Audible.
I'm absolutely addicted to Audible. Yeah. No,
It says, thank you. Great job today.
Thank you, everybody.
All right, thank you. That's it. Go up to the link, and then if you have Audible, or if you do an Audible trial, you can get the One Thing for free as well.
Yeah, you can get it for free.
Merci. All right, thank you.
Bye, everybody.
Cool. We're going to go ahead and do this, and we will talk a little bit, and then I'm going to do this. Hopefully I can see my screen. Oh, good. All right, cool. I want to say thank you to AAII for sponsoring today's event. We do appreciate AAII. They've been a nonprofit. They've been in business doing nonprofit stuff. I don't know if it's appropriate to say they're in business if they're a nonprofit, but they've been a nonprofit since 1978. They've helped millions of traders. Somebody, and I forgot who it was earlier, talked about the AAII investment survey. And that's one thing that they do, but they also do a lot of assets. They do education. They do research. Very, very cool organization. We appreciate them. If you want to find out more about the AAII, go to AAII.com. So there you go. Thank you again, AAII, for the sponsorship. It is now prize time. So I'm going to put up the slide that talks about, our software that's been rated #1 for like 30 years, just all in a row consecutively. And we'll pick out a prize. So I'm not going to have you do a question. I'm going to do an audience participation prize again. So like we did a little bit earlier, I'm just going to kind of scroll through the comments a little bit, and I'm going to pick somebody out of YouTube and pick somebody out of GoToWebinar. And it's really helpful. Like you chatting in and staying engaged and helping us helps with the YouTube. It helps us get more people in the room, all that kind of stuff. So I'm going to reward you for messaging and asking questions and being part of the conversation. So let's go ahead and kind of figure out what the prize I'm going to give away is right now. And let me go to my list of prizes right now. And Jake Bernstein is the next prize I'm going to give away. Jake Bernstein came in a little bit earlier this week. He was here on Monday. I like Jake. Very, very good technician and super smart. Somebody that has been in the market since the 70s, started trading eggs. And so he does a subscription. He's going to give you a free 13-week subscription to his weekly video report. And for some reason, it's a value of $290. So there you go. And let's figure out who those winners are. First, we'll start with GoToWebinar. And much like before, I'm just going to kind of scroll up a little bit. I'm not going to look. And then I'm going to go with Ithil M. Let me go ahead and copy your address. Copy email address. Okay. And then our next one, let's go ahead and go into the YouTube chat real quick. I'm not gonna look. Okay, John B. John B. in YouTube. Since you're in YouTube, you'll want to drop me an email, jeffrey.gibby@gmail.com. So we're gonna go ahead and get underway with that, John B. What did I say? Jeffrey.gibby actually, one of those emails I check. They both belong to me. Jeffrey.gibby@metastock.com. If you don't want to get a response, send something to my personal email and it will get lost. So in any case, all right. Thanks for everybody for attending. Metastock.com/conf promo for the buy one, get two free. Metastock.com/sales chat 800-882-3040. Let's go ahead and talk about our next presenter, Alla. Alla does a really good job. I've got kind of a description here. Alla Plocher is a developer of the proprietary Alpha Fibonacci system and the founder of the Fibonacci Trading Institute, Fibonacci Trading YouTube channel, and the Fib Institute podcast channel. Alla has mentored traders from all levels, from beginner to hedge fund manager in the U.S. and in more than 50 countries since 2011. She teaches how to build a consistent wealth with a proprietary institutional Alpha Fibonacci system. This proprietary system is traded by JP Morgan traders and can be traded on futures, stocks, forex, crypto, ETFs, mutual funds, and options. Currently, Fibonacci Trading Institute offers biggest discounts for a lifetime system, and you can get a private mentoring package with $8,000 in savings and a group course for $5,000. And you can do that at fibinstitute.com. So I'll go ahead and put that here. All right, Alla, let's go ahead and bring you in here. I know we're starting you a little bit late. I'm going to make you the organizer so you can see all of the questions as they come in. I'm going to go ahead and also make you the presenter. And let's go ahead and get you talking. Okay.
Can everybody hear me? Yes. Hello.
Yeah,
hello.
We can hear you great. Yeah. I'm going to go ahead and make you the presenter here.
All right now.
Yeah.
Trying to activate my multiple monitors. Here we go. Please tell me if you can see the correct monitor, as I have 8 in my office. Is this the correct monitor? Oh, I see. Show my screen. Here we go. This one? Yes? Is that correct?
I'll let you know soon. It takes a second to pop in. I don't see it yet. Do you see it yet, Kelly? Okay, there it is. How you can trade as a strategic hedge fund trader on all instruments. I've got it. We've got it. Correct one.
Perfect. Let's start. My joy and honor to be with you, everyone. Let's start, shall we? Hello traders, this is Alla Plocher, founder of Fibonacci Trading Institute and proprietary Alpha Fibonacci system. In this webinar, we'll be teaching you how you can trade as a strategic hedge fund trader on all instruments, all platforms, all time frames. But first, I would like to remind you, extremely important disclaimer. Please understand and trade only with risk you can afford to trade. Remember that nothing in this webinar constitutes a financial advice. All software and systems shown as is without any guarantees, and no student had ever been paid for testimonials you will see in this webinar. I hope and pray you understand that trading future stocks, forex, and options may involve substantial risk and not for everyone. Let's start. Very important discussions. Number one, how hedge fund traders prepare and trade. This is a major point that retail traders are missing. Preparation for your trade is at least 60% of your trade. How Alpha Fibonacci identifies institutional entries, trends, and exits on multiple instruments. We will review future stocks, crypto, and forex in the current and prior markets. And you will witness how Alpha Fibonacci traders trade in US and globally since 2011. And most importantly, how you can trade as hedge fund trader using Alpha Fibonacci system on all instruments, all time frames, all platforms. And we will discuss special offer for attendees of this webinar at the end of presentation. Briefly about myself, I arrived here from Ukraine with newborn on my arms in 1989. I'm forever blessed and grateful to be an American citizen. America had given me phenomenal life, phenomenal business opportunities, and one of the most remarkable experiences I've ever had is working in Johns Hopkins psychiatry and research. I bring all of this into my coaching, mentoring of traders. Being proactive, emotionally stable trader with solid key rules allows you to trade with joy and consistent success. I refuse to work for financial institutions. In months of July this year, Goldman Sachs made me an offer I shared with my students in the course. I continue working only for myself and only with my traders and students all over the world. 2011, I founded Fibonacci Trading Institute, Fibonacci Trading YouTube channel. We have Fibonacci Trading podcast channel. I continue developing proprietary strategies. The number of systems I develop is currently at 36. I live and breathe what I do. I pour all of my soul, all of my heart into my students. Travel the world, meeting students all over the world in California, in Denver, in Texas. Sam put his daughter through Harvard, trading Alpha Fibonacci system on options. Emmanuel, you can listen to him on the podcast. He brought his wife to the course. They both are full-time traders now. Richard retired trading Alpha Fibonacci system. William, my friend for life, sign up for all the systems I will ever develop. Victor and I, hedge fund manager, texting me as we're planning to meet again and again. This is our picture in Switzerland. Last year we met in Dubai. And when you invite me to your wedding, do not be surprised if I come. Doesn't matter if it's Mexico, if it's Portugal, if it's Costa Rica. I look forward to seeing you there. So what's extremely important to recognize? You cannot trade little charts without understanding and thinking how multi-billion-dollar traders trade. This is what I teach you, to think as JP Morgan trader, whom I coached and taught identical rules. I teach to trader who trades $500 account. So when you think and trade as JP Morgan trader does, everything changes. You stop thinking as a bottom 95% does. You stop chasing cheap indicators. You start understanding that hedge fund traders set their orders in advance. Have you seen spectacular rallies despite catastrophic global events? Have you witnessed what's playing out? Did you know that Alpha Fibonacci system identified this far in advance? No software on this chart whatsoever. This is institutional sell-off. Price reaches Alpha Fibonacci reversal zone. This is the last week in October. Here's the sell-off on October 26th. We're discussing with students absolutely no shorts near this level, because I do know how institutional traders think and trade. Intelligent trader who trades very small account looking to buy, not to sell at this level. And you know this. Not just hours, not just minutes, but days, weeks, and months in advance. And when global events become worse and worse and worse, can anyone be surprised? Price skyrocketing with vengeance? My goodness. On my birthday, I teach my students, as we're discussing, this rally is breathtaking, biggest rally we've seen in years. This morning, software picked up another trade. Stunning, flawless institutional rally continues. Institutional traders in spectacular profits. But today and the last 3 days, it's entirely different trading, because institutions holding positions and adding to their longs. So when I celebrate my birthday with my incredible traders, I did not have to do this. I could have been very far away. But when I live and breathe Alpha Fibonacci chess, you witness time and time again. Only when you think as institutional hedge fund trader does, you can become successful, riding their power. And that's the lesson of catastrophic global events. So if you decide to trade with options, this is option traders' favorite chart that show you. With the power of Alpha Fibonacci system, you can buy the bottom, and you can remember to where exit your trades. In the course, you learn that ball green zone is a critical level to exit your trade. No software on this chart. You can do this on MetaStock. You can do this on any platform you choose. All you need is proprietary Alpha Fibonacci rules and proprietary settings. Here's a retail chart on Monday. What do we discuss with students? Caution, please. Pull back in a play. This is key level, ball pink line. No matter what chart you trade, you understand far in advance. Look to buy, not to short. 43.65 will never be as good as 41.50 on S&P mini future. And when the price reaches critical key brick wall, intelligent trader understands. Exiting your long at this bold green zone is the only way you can become successful. Again, absolutely no software on this chart. You can do this on MetaStock with Fibonacci retracement tool, utilizing proprietary settings and proprietary rules. And that spectacular rally that continues despite catastrophic global events, as hedge fund traders keep ordering trades at key institutional levels, buying the bottom and selling the top. And only when you ride their power, you can become successful. That's it. Hedge fund traders trade rule proprietary Alpha Fibonacci in US and globally since 2011 on all instruments. So let's review even more how hedge fund traders trade current events. Here is identical chart weekly. As I constantly remind traders, and I assess you in private mentoring, day trading not for everyone, but you can trade my system once a month, once a week, once a year, producing hundreds and thousands of points. Pay attention, please, to this chart very carefully. This is spectacular bullish rally of 2023. I'm bringing to your attention this day, August 31st, 2023. We're discussing with students that bullish rally is done. We're discussing with students that profit taken in a play. As an investor, you do not start a panic. As an investor, you understand the importance of exiting your positions and preparing for powerful pullback. All in advance, never after the fact. This post had been in the trading room for weeks. This is ultimate institutional buy point. No one knew in August what will play out in Middle East in October, November. The events become worse. How's it possible? On October 7th, price comes to institutional buy point. World in shock, but intelligent trader understands 4150 is a place to buy from. This is a crucial key event. This is a post, this is discussion. Since the end of October, stunning, vicious, institutional buying is on as conflict in the Middle East becomes worse and worse and worse. Here we are today. Multi-billion-dollar positions are long. That's it. No software on this chart. You can do this on Meta stock charting platform. Traders in the course on platforms I've never even heard of. Sierra Charts, Interactive Brokers, MT4, MT5, TradeStation, if the platform has pure price, and Fibonacci retracement tool, Alpha Fibonacci system applies. This is the software for NinjaTrader 8, which is a phenomenal tool that helps you to trade futures with precise entry, stop, and target. This is a software that picked up spectacular long today. But trading at such level requires drastically more skill at 43.93 versus 41.50. And that's predictive institutional trading. So when you write institutional power, everything changes. You start trading and thinking as Warren Buffett does. Negative news, hype and panic is money-making machine. 95% of traders who never make it in financial markets are those who keep shorting the market. When you understand how Warren Buffett's of the world trade, everything changes. Worse the news, more horrific the event, better the longs. You start thinking as JP Morgan trader. You start thinking as Warren Buffett with the power of Alpha Fibonacci system. And that's the reason for the current spectacular rally. You are greedy when the rest of the world terrified. You are using your limitless brain. You are thinking and trading as Warren Buffett of this world. In order to become successful, top 5%, you need to start trading as top 5% does. You need to stop chasing cheap delayed indicators. You need to stop chasing lucky point and start trading as a strategic, intelligent trader on all instruments. All the panic, all the stress goes away. Trading becomes a joy. Do you like to play chess? Do you like to strategize? Do you like to enjoy solid, consistent profits with ultimate precision on all instruments? That's what Alpha Fibonacci system had given to Carlton, healthcare executive who brought 5 friends to the course. So friends bringing friends, husbands bringing their wives, Carlton trading when he is bored. And this is what he is producing. And you will see emails from his friends. And that's the reason you can become successful. Because if Carlton can do it while working as healthcare executive more than full-time, so can you. Carlton trading futures with measured, consistent results. This is institutional lifetime system for all platforms for futures, stocks, FX, crypto, ETFs, mutual funds, options, or with a multi-market scanner and proprietary Alpha Fibonacci software for NinjaTrader 8. This is predictive institutional system that identifies key points of entries, hours, days, weeks, months, and even years in advance. In the class, we discuss charts from 1 minute to hourly, daily, weekly, monthly, as you will see next on stocks, forex, and crypto. We already reviewed S&P mini future on day trading and institutional charts, so let's dive deeper. Shall we go to Amazon? Anyone interested in Amazon? What's important to remember? Amazon is not a safe haven. Amazon becomes first company ever to lose $1 trillion. Have you heard someone say, buy and hold forever? With the power of Alpha Fibonacci system, you knew quite well that 2022 was a brilliant move to short, not to buy Amazon. So if day trading is not for you, you use charting on Meta stock trading platform and you apply Alpha Fibonacci proprietary settings and rules, and you shorting Amazon despite spectacular earnings at the top. Here's November 2022 on Amazon, exactly a year ago. This is sell-off and crash. We have to go to, my apology. I have to go to Amazon 2022. 1 second, please. Monitoring the charting. Apply. 1 second, let's take it further to 2021, right before the crash of 2022. Here is now December 2021. Amazon reached reversal zone. This is before the sell-off. Alpha Fibonacci identifies all of these levels far in advance. The only thing you have to do is apply proprietary Alpha Fibonacci settings and rules. Collapse on Amazon, 65% plus. What's so spectacular on this collapse? It allows you to short the top and buy the bottom. Do you know how many traders come to me and say, thank you so much, I preserved my retirement account? No tears, no panic, no stress, simply intelligent trading. Yesterday I heard from a trader who never even came to a single class. He's watching videos in member area. He's in Australia and he's enjoying solid, spectacular profits. That's music to my ears. A year later, Amazon reaches the bottom. Bullish rally starts. 2023 was a spectacular year that allowed you to buy Amazon at the bottom. Here we are 11 months later. No panic, no stress, simply solid, consistent profits. And what Amazon will do at this level will define Amazon for months and years to come. And you know all of this far in advance. But if you decide to trade NVIDIA, my goodness, what a stunning flawless rally. Top hedge fund manager on Wall Street who is exiting NVIDIA at the bottom. We're discussing with traders, don't do that. Buy NVIDIA where she exits the trade, losing billions and billions of someone else's money. Here's NVIDIA exactly a year ago. And this, what you can place on Meta stock charting platform. NVIDIA at the bottom exactly a year ago. Look to buy, not to exit your long. That's it. The profits on NVIDIA are spectacular. NVIDIA is up 400% plus. And what NVIDIA will do in this trading range will define NVIDIA for years to come. And that's strategic, intelligent chess on all instruments. So if you want to day and position trade, of course you can. And that's the beautiful part when you recognize your price for entry and alpha Fibonacci for exits allow you to trade all instruments, all time frames on all platforms. And that's the most beautiful part, and that's freedom of trading. So if you decide to trade with software for NinjaTrader 8, bold red zones show you, do not buy, monitor for short. And when institutional traders short, you short with them, enjoying solid, consistent profits. Software comes up with scanner that you can place on any instrument you choose, one instrument at a time. When you double and triple and quadruple your account, then you can add more instruments. But you remember, S&P traders do not look on oil. Oil traders stay with oil. Gold traders love gold. NASDAQ traders bored with S&P, but students, as you will see on website, trading it all. This is a phenomenal tool that allows you to trade strategically with ultimate precision. I actually just received another email from Brad 2 days ago. So what does he say in this email? He's a legend. He's been making $10 an hour working at Best Buy, supporting family of 5. Brad making serious effort. He will never have to go back to Best Buy. You can listen to podcasts on the website. I will walk you through. And that's the reason I live and breathe what I do. If Brad can do this, so can you. Again, system can be traded, all instruments, all time frames, all platforms, or with software for NinjaTrader 8. Retail trader thinks, prepares, and trades as institutional traders on every trade. Trading with institutional trader trends and entries and exits is absolutely essential to traders' success. Trader does not ever trade against institutions. So what would your trading be if you traded with institutions on all instruments? Alpha Fibonacci system consists only of two components, indicator-free price and proprietary Alpha Fibonacci rules. You will never, ever need another system ever again. Here is Euro, very popular instrument in our course. Euro skyrocketed from ultimate bottom when I'm meeting with students in Europe, when Euro at historical low. This is October 2022. One of our students lives Middle East and buys home in France. Euro had never been this low, but you knew, you monitored for this ultimate institutional buy point months in advance. How Euro skyrocketed from 95 cents to $1.115 is spectacular. What Euro is doing at the current level today on November 8th will define Euro for years to come. 104 is a critical key Alpha Fibonacci support and institutional buy point. That's it. So many traders all over the world, trading oil, trading bonds, trading gold. Why is gold so important and essential to remember? Again, inflation is worst on record. Rates are catastrophic. So how come on CNBC so many fund managers say buy gold? Is it possible they are completely wrong? Is it possible that shorting gold from this level is the only brilliant move? Gold collapsed completely from 2100 as expected, as Amazon have done since the start of this year. And that's the power of the system. You know many months in advance where reversal zone will be, where hedge fund traders will be shorting gold, not buying gold. No matter what the hype and the noise is, if you're trading your own little account, you prepare and think as hedge fund trader does. You're riding institutional power and short the top. Collapse on gold is spectacular. Continues one step at a time. That's it. You're not speculating. You're not trading on hype, noise, and news. That never works. If it worked, everybody on the planet would be Bill Gates. It never does. And that's the power of the system. All predictive, all precise, all based on proprietary rules. Collapse on gold from 2100 to 1850 this year is breathtaking. No matter what news and hype says, you're using your limitless brain. You're trading markets as strategic, intelligent Alpha Fibonacci chess. And you will never, ever need another system ever again. Again, Alpha Fibonacci system can be traded on MetaStock charting platform with proprietary Alpha Fibonacci retracement. So when hedge fund manager Andy bringing his son to the course, 14-year-old Dominic during lockdown was bored, and he had shown to the world simplicity of the system with the software for NinjaTrader 8. His father Andy is not using any software. His father Andy managing multi-million-dollar accounts on platforms I've never even heard of. But his son Dominic trading Alpha Fibonacci software on futures with ultimate precision for entry, stop, and target. If complete beginner trader age 14 can do this, anyone can. So please, listen to father and son podcast because it's an honor when father bringing his son to the course. But father and son trading completely different instruments, completely different platforms, using identical rules. So this is what trade looks like with software for NinjaTrader 8. Precise entry, stop, and target, and reminds you again and again and again where to exit your long. When price reaches critical key target DP2, exit. Do not speculate. Do not trade with random entries, stops, and targets. And that's ultimate precise chess. Software on this chart, no software on this chart, as gold reached identical level, where gold selling off again. That's it. All precise, all in advance. But it's absolutely your personal choice what platform, what instrument you would like to trade. So what makes the system so powerful? It's a proactive system. It's not reactive. Trader knows in advance institutional exits, institutional entry points. So what would your day in position trading be like if you knew hours, days, weeks, months in advance where institutional entries and exits are? Let's review Bitcoin, shall we? Do you remember the hype by Tom Brady? Do you remember how much he was telling the world to buy Bitcoin? He can afford to lose $30 million. You using your limitless brain, you trading Alpha Fibonacci system. When Tom Brady does commercial during Super Bowl, we're discussing with students. Intelligent trader shorts Bitcoin, not buys Bitcoin at reversal zone. So this is what exactly been playing out at the time of Tom Brady commercials to buy Bitcoin. To remind you, only when you use your limitless brain, you can become successful. Trading markets not on hype and noise, but using your limitless brain. Shorting Bitcoin, despite Tom Brady's Super Bowl commercials, was drastically more intelligent thing to do. And when Bitcoin reached critical key Alpha Fibonacci institutional buy point, you're buying Bitcoin at the bottom. You're using your limitless brain. You are not trading on hype and noise. And that's Bitcoin for the last 2 years. And that's a stunning reminder of the precision of the system and how you can trade. So if you come to the website for the very first time, you can listen to podcasts of traders from all over the world. You can view students' performance of traders from beginner to hedge fund manager who are trading options on Tesla. Richard, my dearest friend for life, listen to his podcast. Who are trading Forex on MT4, MT5, or as you saw, Jennifer, whose husband brought her to the course. She's a full-time trader now, trading NASDAQ futures. So traders of all levels from all over the world, from 14 to 80-plus-year-old Pablo, another complete beginner trader, speaking with Pablo tomorrow. Pablo using the system on everything, now day trading futures. So choice is yours, what you want to trade. So when you come to our homepage, you will see the movie student made about Fibonacci Trading Institute. And you will see pop up on our homepage where you can sign up to request invitation to the trading room. But when you review everything on the website, you will see that you can trade predictive, proprietary, institutional system on all instruments, all time frames, all platforms, all with software for NinjaTrader 8. Currently offering savings up to $8,000 for a lifetime system and a lifetime software for private mentoring package. So when you read students' reviews and listen to students' podcasts, please review all the details on homepage. Private mentoring includes group course, video library, modules, trading room, which is included in every option. But if you decide to sign up for the group course, it's offered with savings for $5,000. So this is a special for attendees of the webinar. But when you click on the product, you will find even more details. And that's where we are. So I hope you enjoyed this webinar. And I hope you learned that when you trade pure price with alpha Fibonacci rules, the skies are the limit. And you will never, ever, ever need anything else. So if you have any questions for me, please contact me 925-257-4298 or info@fibinstitute.com. Thank you, traders, so much. It's been my joy and honor to present to you how you can trade as hedge fund trader on all instruments, all time frames, all platforms. My joy and pleasure. Any other questions? My joy and pleasure, Michael. Any other questions? You can reach out.
Thank you, Alla. We appreciate that.
Thank you, Geoff. It's always amazing to be with you. Such a great energy.
All right. Very good. And you can find out more about Alla at fibinstitute.com.
Thank you, traders. It's been my joy and honor to be with you. I live and breathe what I do. Any questions, do not hesitate to reach out. Thank you so much, everyone.
Very good. Let me go ahead and do this. Go ahead and do this. All right. Thanks again, Alla, for coming in.
Thank you, Geoff. Enjoy being with you. Thank you, Juan. Thank you, Todd.
Oh, all right. Very good. Let's go ahead. I actually, let's see. To find out on that a little bit more, just go up to the website, fibinstitute.com. Thanks, Todd. Bye, everybody. Okay, let's go ahead and kind of wrap things up a little bit, just to kind of recap the day a little bit. Thanks for coming. I hope you enjoyed it. I want to say thank you again to CMT Association, Task, Stocks and Commodities Magazine, and AAII for all sponsoring today's event. Looking at kind of some of the talks that we had today, and just kind of what we have in store for tomorrow. This morning, Price Headley came in and talked about the Big Trend Toolkit. The offer that we're doing on that is if you buy 1 month, we'll give you the second and third month for free. Ed came in and showed us the chart pattern engine, and normally that's $14.95, but you can get it now on $9.97. Very, very cool add-on. Helps you find all the chart patterns and that kind of stuff. Yesterday, we had Rahul Mohindar come and talk about the ATM, the Rahul Mohindar automated trend modules. Wendy Kirkland talked about the automatic swing trader. Alex Cole and Tyler Wood came in and talked about go, no, go, complete. Steve Prumo came in and talked about strategy number 4. And Silas Peters talked about his 3S code. We have had a lot of really good methodology talk about different patterns, and all of these have really good specials on them. So if you're a Metastock user and looking to kind of find good chart patterns, we have a tool for that. If you're looking to find good W's and good M's with good support from Silas, we have a tool for that as well. On Monday, we had Vince Vora come and talk about his very, very popular Victory Method add-on. That's discounted $1,000. We've got the AAII Conviction Plus, which was discounted $500. Oscar Carboni came in and did a really good training. We've got recorded training from him that's only $349, $150 off. And then we also did setups and timing triggers, which we basically sold for only $399. So lots of really good stuff that we talked about. I hope you've been enjoying the conference and that kind of stuff. If you have any questions about any of the stuff that we're talked about or the Metastock platform, get in touch with us. You can get in. This happens after a few days of talking. You can get in touch with us at metastock.com/saleschat. You can give us a call at 800-882-3040, or you can get in touch with us, or you can order online at metastock.com/conf-promo. If you haven't tried Metastock yet, Metastock's been rated #1 30 years straight. Scanning is all of our favorite tools. Testing, the forecasting, all the stuff that we've been talking about. There's a reason it's been rated so well for so many years. So 800-882-3040, metastock.com/conf-promo, or metastock.com/saleschat. Want to say thank you for everybody for being here. We'll see you again tomorrow. We've got another great lineup, and goodbye.
Hi, Kelly Clement here from Metastock. Before you go, I have 2 quick things for you. 1, thanks for joining us today. We love having you here at our webinars and viewing our videos. So what I'd like to invite you to do before you go is like and subscribe. Like the video, subscribe to the channel. It helps us a great deal, and it helps us bring you more awesome content like today's video. The second thing is we have a great ebook on trading that you can get for free. If you go to metastock.com/YouTube book, you can get a free copy of The Secrets of Successful Traders. It's a great book with lots of content from traders just like yourself who can teach you some of the secrets that they have learned. Thanks for taking a second with me and learning about those 2 things. Thanks for joining us, and keep on trading.